could avoid some of these horrific things from happening, and I want to understand that conversation.
Yeah, it's an interesting conversation, and actually we do find ourselves erring on the side of caution in this area. So with the launch of teen accounts, for example, we will be putting anybody who is under the age of 18 into these accounts. They have built-in protections. For those who are under 16,
right. Okay, but
hold on, this is going to answer your question. Just give me 1 second. For those who are under the age of 16, they have to get their parents' permission.
Yeah.
As part of this work, we are going to be trying to identify teens who may be lying about their age, teens whose age, so predicting what age they are.
They have to
People
have
are
an ID
going
or something that they show you?
well,
Or like a school ID?
people who we predict to be teens who may be adults are going to get trapped in that system. That is okay. We will then ask them to verify, to demonstrate that they're an adult, and we can move them back into an account.
Right.
But the idea here is that we want to use technology to predict there are going to be errors, and you will see
Currently,
that.
do you do that?
We're working on building that technology.
okay.
It's complicated to build.
No, it's very. I'm not saying it's not complicated to build, but the question is, do you feel like it's fair to say you're late in building it? Meaning, this idea of identifying kids online or people who are not identifying themselves as the appropriate age seems like something that you would have thought about a long time ago. This is not a new issue. It may be hard to resolve or not so easy, but when you see that one person is friends with 30 other people who all do identify as 15 years old, all of a sudden, I actually don't think the model becomes that difficult. It becomes difficult on the edges, sure.
Well, so it is actually more difficult than you would think, and no, I don't think we're behind. This is actually a challenge for all of industry. All of industry is facing this challenge. We do already use some of this technology. We are expanding this technology. The other thing that we are doing, because it is so difficult, is we're pushing for legislation that would require the App Store or the operating system to give that information to apps like ours across the internet.
Oh,
the reason
the
that
information
matters,
on the user themselves?
yes,
Verify it?
the reason that matters is because the App Store has this information.
Because they have a credit card.
Yeah, they know it already. We don't have to go through trying to either collect somebody's ID or ask them to provide like a facial selfie. So this is.
And of course, Apple doesn't want to give you that information because they think that you're going to use that information
To then
for
advertise to
advertising
them,
or
right.
to use it in some other way, right? And that's the issue.
But there are very simple ways for them to give us information that would not necessarily be any more privacy intrusive. So we only need the age. We don't necessarily need the birthday, for example.
Right, but the age then allows you to turn around and tell said advertiser that they're now part of a different demographic than you might have
By
thought.
the way,
they
when
were,
I
right?
signed up for my Facebook account, I told you how old I was.
Correct.
So you guys should have that information.
We have what you told us, but as a parent,
you're not
you know,
a child.
Teens,
A child will
teens
lie.
may lie. Teens may lie.
Parents,
And so,
you know, not parents may not lie, but the predators may lie.
but you're right. This is one of the reasons we want to do this also at the OS App Store, because that's
But
when
I can understand the
parented-
App Store saying, do your own homework. You guys created these accounts and you unleashed them. You guys figure it out.
Well, but we deliver them through the App Store, and they indicate to us that they provide safety and security, and that all apps pay a fee to be in that App Store. It is the way, and it is what makes it much simpler for parents. Parents are there. You'd literally be able to say, I don't approve download. Like, for example, you don't want your teen on social media. If you were to try to download that app, you would be in a position immediately to get a notification. Right now, you're not.
I
So
know, but
you get around that.
teens are pretty tech savvy and find ways to get around these things, just like predators do. I do think, I appreciate that you guys are looking at this and trying to work this. I appreciate you coming on to talk about it. The one message I would send back is, please have them push faster and harder to make sure they're protecting
As a mom,
kids that are out there.
I am really trying to push it, as is all of our people who work on safety.
Antigone, thank you.
Thank
for coming
you.
in. We appreciate it.
I think I'm with her on the Apple piece. They don't do a good job on this.
It's
They could do a better job. We're not done just yet. When we come back in just a moment, tariffs good for the economy or not? We're going to break down what the former president Donald Trump's plan could mean for it all. We'll discuss it and debate it when Squawk Box returns.
Time now for today's AFLAC trivia question. What are the 5 new sports pending approval that are set to be included in the 2028 Olympics? The answer when Squawk Box returns.
Yep.
And now the answer to today's AFLAC trivia question. What are the 5 new sports pending approval that are set to be included in the 2028 Olympics? The answer: baseball, softball, cricket, flag football, lacrosse, and squash.
Or download the app.
Republican presidential candidate Donald Trump has said that if he's elected, he's ready to put significant tariffs on certain imported products to protect American jobs. And the key word is here, but are widespread tariffs good for the U.S. economy? John Ford is here to weigh in, because I guess we've decided that targeted tariffs are good since both parties have them and both administrations have left them on. So you're talking specifically widespread tariffs.
Absolutely,
okay,
Joe.
I got it.
And yes, by and large, tariffs are good for us, and let me break it down. If politics were a video game and the president were a character you could play, tariffs would be your most powerful economic move. But what's a tariff? Basically a tax any business has to pay to bring goods into a country. The USA is uniquely a reasonably big country with a huge consumer class by global standards. So most every sizable company in the world needs to sell here. The argument against tariffs is that they just tax the US consumer. If you say I have to pay $100 to bring my $100 widget over from China, I'll just charge $200 for it. But it doesn't always work that way. What tariffs can also do is encourage companies to avoid the extra charge by making things here in the U.S., or they can level the playing field for U.S. manufacturers who are getting crushed by cheap imports. So you can't just swallow these headlines that claim tariffs are just a tax on U.S. consumers. If tariffs always dramatically raise prices for consumers, why didn't that happen in 2018 and 2019? The truth is that the U.S. has been so focused on making it easy to import goods from other countries that we've made it reflexive for other countries to tariff U.S. products while we let overseas goods flood in, and tariffs can't stop that, Joe.
Well, that was fantastic, John. Thank you. That's John Ford.
There you go.
Yes.
Okay, but isn't there? There's another.
There you go.
You already said that. You already gave a couple of negatives for tariffs in that part. You have more, but is
No, but he gave the negative and knocked it down.
And
it knocks it down.
You
Okay.
know, it's been 4 years. You know how this goes.
I know how this works, but there's a limit, I would think, to how far you can raise tariffs before something bad. I mean, free market people, it's the T word. It's like a word you never want to hear to free market people.
Well, Joe, on the other hand,
Yes.
more tariffs are a terrible idea. Kind of like assuming that one button mashing video game move will keep working, but your opponent figures it out. And here's why. Trump's China tariffs, many of which the Biden administration continued, did lead to higher prices. It's just that COVID supply shocks and stimulus pushed them higher still. Tariffs also did something else. They opened up new markets for Chinese goods. According to the Federal Reserve, European and Asian countries absorbed low-cost Chinese goods that otherwise would have come here. In some cases, those countries sold them to us later. Then there's the problem of unintended consequences. There's this assumption that if tariffs drive manufacturing back to the U.S., that's good for American workers. But we know that high labor costs also incentivize more of the move toward automation. So a logical tariff scenario would be to move more manufacturing to the U.S., but with robots doing the work, because tariffs could also increase prices and costs domestically. Now, it's true that the U.S. for too long has allowed other countries to block our goods while sending theirs right in. To the extent that targeted tariffs can correct that behavior, that's great. But over time, they risk making other trade partners more reliant on China and more willing to tariff our products as their middle class grows.
It's sort of a new Moore's log analog, because the Luddites up to this point have never been right. Every time there's a technological advance, more jobs usually come from it, even when you think that the old jobs are going to be gone and not replaced.
Right, at the macro level.
I think we may hit something with automation, and where, you know, servicing the robots, building the automation, servicing the automation, all those things do not add up net to how many jobs are actually lost. But once again, we could actually be wrong again about whether automation is disruptive or additive. Do you know? What do you think?
I wish I knew.
But the Luddites have never, just like
Long term, I think it's going to be great.
Right. The Malthusians have never been right about anything, and the Luddites have never been right about anything. Because then that would make a difference in your second argument.
It would.
Because that's a very good point. That yeah, we build stuff here, but if you're suddenly paying $80 an hour instead of $10 an hour somewhere, you know, in the Far East, then you bring in automation.
Yeah. Well, here's something we can all be right about.
Yes.
The On the Other Hand newsletter.
Yeah.
Because you can get that, you can see both arguments. And here's an easy way to get it. QR code on the screen.
That just,
you can use your
you
phone.
just reminded me of the My Pillow guy. I mean, I don't know how the hell you got to but go ahead.
I almost want to say thank you to that, which is wrong on so many levels, but you can, there's a QR code you can type in cnbc.com/OTUH. You get the full text of both arguments, but you cannot rest your head comfortably on the Other Hand newsletter.
Yeah.
It's not like a pillow in any way.
You took on tariffs. You went and did it.
Hey,
Impressive.
2 weeks ago, yeah. That's
Squawk Box, this is the place.
that is the place. And it's funny. There does seem to be two sides to most things.
I would
How
love
about
you to
that?
come back next week if you could,
Oh, no.
because I'm going to tease this.
I hope
This
I
is-
can.
No, and this
Yeah.
is the story I actually want your opinion on. But
The one?
it's a tease for next week. It's a tease for next week. Uber and Expedia.
I was listening to that
And
earlier.
whether
Yeah.
they should merge with each other. Their shares have gone for a ride this morning. If you like that, yeah.
I like that.
Okay, very good.
Take a flyer
We're
on
going to
that.
talk to an analyst about a possible takeover deal after this break, and potentially next week, we're going to hear about whether this is a good idea or a bad idea
John.
from John Ford. Thank you
We may need
for
you there
accepting
every
the
day.
assignment.
We may need you here every day, John.
That's right. We make argument.
advertising force.
Welcome back to Squawk Box. Blackstone just reported quarterly results. Earnings of $1.01 a share, 9 cents better than expectations. It's on a total segment revenue of $2.43 billion, just ahead of estimates. And Chairman and CEO Stephen Schwarzman saying the third quarter represents the highest amount of overall fund appreciation in 3 years, with over $40 billion of inflows. Total assets under management increased 9.9% to $1.1 trillion. The company repurchasing 1 million shares during the quarter, and we're going to get to talk about all of this with the company's president and COO, John Gray, who's going to join us in the next hour.
All right, we're watching shares of Expedia and Uber this morning. A Financial Times report said that Uber has explored a possible bid for the travel booking website. That report says that Uber approached advisors in recent months after the idea of acquiring Expedia was broached by a third party. Obviously, a very interesting deal because of Dara Khosrowshahi, who's the head at Uber, who used to be the head at Expedia and still is a non-executive member of the board there. But joining us right now to talk about it is Dan Ives. He's managing director at Wedbush Securities. And Dan, again, very interesting deal. What do you think of it?
I mean, I think this would be a major strategic home run for Uber. I mean, right now, this is them going on the offensive. They're trying to expand their tentacles. You look at Expedia, that would fit in extremely well and really give them, I think, massive monetization opportunities. This is one that makes a lot of sense, I think, every which way.
The market may not agree with you initially, knee-jerk reaction. Uber shares down by about 3.3%. We don't know anything about this. This is very early days. Nobody knows how this deal would work, if they'd actually go ahead with it, what they would pay, and maybe that's the biggest question. Makes sense at what price, you think?
Look, I mean, I think for Uber, I mean, this can make sense even 15, 20, 25% higher at Expedia, because I think you look at some of the revenue synergies that they could get from this. I mean, this is something that could really, I think, change the revenue trajectory of Uber because of the cross-sell. I think clearly what Dara is going after, they're now on offensive mode. You go back a few years ago, cost-cutting, strategically defensive mode. I mean, they have a massive mojo, and they're just gaining more and more share. You look at what they could acquire. I think they're going to be on the hunt for M&A. Expedia, I think front and center, that would fit like a glove into the strategy.
Dan, explain to me why you think it would fit like a glove. I understand the concept of super app. I made the argument for one earlier, but I could also make the argument that these things work just as well independently of each other.
Yeah, I mean, Andrew, I view this is one step toward a super app, and no different than what we see in Asia, you know, throughout, especially in China. The super app concept is where Uber's going, and then even to take it broader, you know, when you think about more and more competition down the road, whether it's from Tesla and from others, Uber right now is trying to just build more and more of a moat. And this is just going further and further toward a super app concept. And I think that's something where maybe knee-jerk the stock would be down, but I think investors will like the strategy. Right now, Uber has massive momentum. This is the time to go aggressive on M&A, not sit in the right lane going 40 miles an hour. Well,
I guess the question I'm asking you, is this a financial deal insofar as you think you can buy Expedia at a good price and improve what it's doing and hopefully generate additional sales because you're going to have more people that you're able to leverage off the Uber app to other places into the Expedia universe? Would that be the sort of basic argument, or do you actually think there's genuine synergies between these two businesses that are ongoing, which is to say what percentage, therefore, of Uber users do you think are traveling meaningfully and would be using this app to book to make all these bookings?
Well, I think there could be 10 to 15% revenue synergy just in terms of how many Uber customers are ultimately using Expedia apps. I think when you think about it, this is really Uber trying more and more to be a one-stop shop when it comes to travel. And maybe a few years ago, they were a little hesitant. Now is the time they're going on the offensive. And when you look at Expedia, there's no other asset, especially when it would be like bringing the band back together. You're just giving Darren, no one knows Expedia better than him. And this is something on every metric that I think would make a ton of sense from an M&A perspective, and clearly be their biggest M&A deal ever.
If you didn't buy this, what would you buy?
I think if you don't buy this, they're going to have to ultimately go more and more down the autonomous route. I mean, obviously partner with Waymo, that's going to be strategically what they're focused on. There's some small other deals that they could do. But in terms of globally, what they're going after, I think there's only one company that sticks out here. It's Expedia.
Okay, Dan, thank you. Good to see you.
Thank you.
We'll talk crypto when we come back.
Andreessen Horowitz released its annual State of Crypto report this week, and the firm put the number of worldwide cryptocurrency owners at 617 million, a new high, driven in part by the mass adoption of stablecoin. Join us now with more on crypto. Anthony Pompliano, founder, CEO of Professional Capital Management. It's election season. We've been watching Bitcoin. Druckenmiller said that perhaps the recent move is an indication that some players think that that Trump may have moved ahead. He's moved ahead on a lot of the betting sites. Do you think that's why? I mean, it's back to 67, which is not anywhere near the high, but it is well above where it was 3 weeks ago. It was threatening to go under 59,000 again. So it's been moving up for the past week or so.
I think the market conditions are definitely playing in favor of store value assets. Gold up 30% this year. Bitcoin's up 60%. So Bitcoin is just more sensitive and kind of more volatile than gold.
You know, I asked you a specific question about whether it's moving up on Trump's prospect. Did you?
I think
this is like last night. Did you hear Mike? But the actual question was, do you think it's related? Because Andrew points out that Vice President Harris has been sort of courting some of the crypto
Supposedly, correct.
world. So then,
I don't think it matters who the president's going to be, right? Bitcoin
so
is going to
even
be.
the last week has nothing to do with it.
I think that it is much more likely that about 6 months after the halving, you get the pricing in of the supply shock. You also have central banks around the world that are cutting interest rates. You have M2 money supply that's now expanding. And then you also have a very bullish investor base, right? If you go and you look at kind of how over-levered people are and how excited they are about stocks moving up, Bitcoin moving up, et cetera. Now, if you go back and look at 2020, this is right about the time where we went from, call it $10,000 for 6 months. We just went straight up from 10,000 to 64,000 in March of 2021. And so I'm not a huge believer in just like, hey, it's the month of October, everything's got to go up, because usually September is down, but it was an up month, and so we kind of invalidated that thought process. But I do believe that there is something about around 6 months after the halving, you start to work in that supply change, you get a monetary regime change, and I do think Bitcoin is going to continue to run through the end of the year.
Okay, because the reasons you gave right at the top were that you could go back 3 months when you're on, 6 months when you're on, 9 months, and they were the same thing that you've always said, the same selling points for why Bitcoin.
Bitcoin is the simplest story in finance, but it is the hardest story for traditional financial market players to understand because it requires them to not overthink it. And I think that's a really, kind of important point, which is Bitcoin is a finite asset. If they increase the money supply, if they drop interest rates, and people around the world realize that they need a store of value, they're going to buy Bitcoin. Now, what's really interesting is Charlie Bolillo from Creative Planning put out this chart that over the last 30 years, the US dollar has lost 50% of its purchasing power. In one generation, people lost 50% of their purchasing power. They're going to look for other assets. Now, what I do think is important is that Bitcoin is not a threat to the US dollar. What we're seeing and what the Andreessen report pointed out is that actually what people are doing is they're using Bitcoin as a savings account. They're buying Bitcoin and they're holding it. They don't want to spend the Bitcoin, but they're starting to use these stable coins. And so stable coins now have hundreds of millions of users. And so just like in the traditional world where you have a savings account and you have a checking account, you never touch your savings account. That's what people are doing with their Bitcoin. It's the digital savings account, and then the stable coins are now your checking account to pay for your everyday expenses, goods and services, etc. And I think that by reducing the friction of switching between currencies, because now everything is digital, what you're now introducing is a multi-currency world, which historically hasn't been possible because to move from dollars to any other currency was incredibly expensive and difficult. Now we have a savings account in Bitcoin, stablecoins are what you're going to pay for, and those two things are going to continue to ride, and stablecoins will be a huge bull market for the US dollar.
Okay, so the great masses of the unbanked, are you seeing Bitcoin become, I mean, if you have a phone, you can have a bank anywhere in the world. Is that, in the past you've said, that's like fairy dust. Remember, you sprinkle a little fairy dust. You've been in foreign countries and you ask the guys, you got it in there, what are you talking about? I have no idea what you're talking about. Do you think, can you make the case that's actually happening?
I'll give you a couple
or is it just fairy dust?
Let me give you a couple of numbers. So there's two reports that recently came out. One, Nick Carter at Castle Island, they did a huge study with Brevin Howard, Visa, et cetera. And then there's a new guy who's the head of economics at Tether. They both put out a bunch of data. And so the data points were Tether claims that they have 330 million people on chain, not in centralized exchanges, on chain with Tether in those wallets. If you add in centralized exchanges, tens of millions more. So let's call it 400 plus million people just with Tether. Then Nick Carter, Visa, Brevin Howard went and they looked and they said 2 out of every 3 emerging market crypto users have converted stablecoins and their fiat currencies. So they're going back and forth between these assets. And then they also said that 40% of these emerging market crypto users have bought a good or service with stablecoins. Now again, that is just crypto market emerging market users. So what is the percentage? That's a huge question. So if it's only 10% of a nation, you go and you talk to people on the ground, only 1 out of 10 people are going to say, hey, I've got the stablecoin. But it is a very high penetration of usage for these stablecoins for the people who have them.
I mean, because you can paint this unbelievable picture, Andrew, that there's people in high inflation countries
totally.
that work their ass off, and then a week later, whatever they worked for is worth 10% less in a week. And if you were to go into Bitcoin, there's a place where they. So, but I don't know if it's really happening.
I think there's a huge story right now. We'll see if it happens. Stripe is reportedly looking at acquiring one of these stablecoin businesses. And so when you start to look at a digital payment provider saying, hey, look, let's go and adopt these stablecoins. Again, stablecoins are for payments, Bitcoin is for savings, which historically Bitcoiners have said, you're going to spend your Bitcoin. But right now it is dumb to spend your Bitcoin in America. You get taxed and it's a huge issue.
Thank you. Would you say You've been getting at it relentlessly all day already?
Every morning
Since the minute
with a
you
smile.
You've been getting at it. We got to do that. Do you? There's days I'm not relentless. I don't feel relentless at all. I think he does.
You guys are doing just fine.
Are you sure?
Positive.
There's more coffee sitting there below. I don't. No, I'm kidding. Anyway.
When we come back,
Oh, I forgot. I have a very important question. One question that's super important. Do you think that Peter Todd is Satoshi Nakamoto? Did everybody watch the HBO documentary last week?
I didn't watch it, but I saw the guy. I hope not.
Do you think that's him?
Andrew, we're all Satoshi.
Okay, when we come back, a formula for success, billionaire Toto Wolff will join us to talk about the growing business of auto racing and the F1 Racing Series. And later, two big interviews that you won't want to miss, Blackstone President, CEO and COO John Gray, and then Robinhood CEO Vlad Tenev. We'll be right back. It is just before 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Elon Musk has reportedly tapped close confidant Amiad Afshar to lead Tesla's operations in North America and Europe. That move comes as shares of Tesla have slumped and demand for EVs has declined. Meta has begun laying off employees across various departments, including WhatsApp, Instagram, and Reality Labs. And RTX subsidiary Raytheon has agreed to pay more than $950 million to settle DOJ probes into foreign bribery and export control fraud. Raytheon is also paying more than $124 million to settle SEC charges that it violated the Foreign Corrupt Practices Act.
Get to Dom Chu once again with a look at this morning's pre-market movers. Hey, Dom.
All right, so Joe, Becky, Andrew will kick things off with an earnings mover and a Dow component. That's Travelers up just about almost 6% in the pre-market trade after posting a nearly threefold jump in third quarter profits. The insurance giant also saw a beat on earnings, coming in at $5.24 a share. That was much higher than the $3.55 the street was calling for. Now, revenue did miss expectations, though. Net written premiums increased by 8% to a record $11.3 billion, Travelers management said that they remain very confident in the outlook for their business into 2025 and beyond. Meanwhile, healthcare stocks also continuing their decline this morning after Elevance Health, the former Anthem Blue Cross Blue Shield, cut its annual profit forecast. The health insurer cited unprecedented challenges in the Medicaid business. Elevance also reported a miss on third quarter earnings, while revenue did top expectations. Now, the other healthcare stocks in the ecosystem, like Molina, Centene, CVS, United Health, amongst others, feeling some of those ripple effects from the Elevance report, so we'll keep an eye on those insurers. And we'll end with a check on chip stocks. That complete sector higher this morning on the back of Taiwan Semi's earnings. The chip maker reported a 54% rise in profits for the quarter and forecasted a 35% jump in its current quarter revenue on a year-over-year basis. The company said the strong results were boosted by continued demand for AI products and chip stocks across the board. AMD, NVIDIA, Intel, Broadcom, amongst others, all seeing that bid in the market. So we'll keep an eye on those chip stocks. Andrew, I'll send things back over to you guys.
Tom, thank you for that. Meantime, this weekend, Formula One arriving in Austin, Texas. The race kicks off the fourth quarter of the Grand Prix season, and with just 6 races left, a 24 Mercedes is going to try to climb up the leaderboard for both the driver and constructor championships. For more on the business of Formula One, I want to bring in Toto Wolff. He's team principal, CEO of Mercedes-AMG. This Formula One team. We should also mention that next month, a no-holds-barred book on Mercedes titled Inside Mercedes Formula One, Life in the Fast Lane is due out. And we should say Toto's also a former professional driver himself. You're not, and we just discussed this, you're not driving too much yourself anymore.
Yeah, I kind of couldn't even have imagined when I was a young guy that one day I wouldn't be enjoying it anymore. So I'm doing these events and around Lewis and George when we're doing our laps. And then I realized 5 or 6 years ago, that's not what it felt before. And also I'm trying to be competitive, and then it's like a muscle you train. If the muscle isn't trained, things become overwhelming and not as enjoyable.
So now you're an investor and you're managing this whole team. Are you shocked at the success of F1 in the US?
Yeah, I think we had a few events that coincided that really helped us in grow in the US. The first one was obviously COVID. We were able to put on a show without spectators. We were the first global sport that did so. People were at home and watched the sport. Netflix did a fantastic job with the Drive to Survive series, which I wasn't so keen at the beginning. So Ferrari and us didn't participate in the first series. But
you wish you did now?
Well, we discussed with my Ferrari colleague back in the day whether we should do it, and we felt like we were racing for a Formula One World Championship, and he said not Cirque du Soleil. But we realized after a year's time that it was a mistake not having participated. So you have Netflix that hit the households. Then a fantastic season in 21 when Lewis Hamilton fought Max Verstappen, Red Bull and Mercedes, ended up in a sporting tragedy with a call that cost Lewis the championship. Many young drivers that use social media extensively, and that led to a situation that the sport is strong in affluent areas in the US, and the strongest growing demographics is young females between 15 and 35.
So you had this huge growth, and so the question is, what does the line look like? Does the line look like does the trajectory at that same pace, or is it now slowing down? And I think there's sort of questions about how much more it can grow, especially in this super competitive environment in media for sports rights right now.
I think from a pure economical standpoint, us as a franchise league, is that our contracts are very long term. We're signing TV deals or sponsorship contracts or promotional contracts with racetracks for up to 5 to 10 years. So that is a stable, predictable income stream. I think as when it comes to the fans, we just need to continue to entertain, and we need to be wary what regulations we put into the sport.
Like what?
Like how fast are the cars going? We're putting a new half electric, half combustion engine in 2026 with 100% biofuel. Is that relevant from a sustainability story? Absolutely.
Isn't that the theme of like Cars 2? Like the biofuels and changing out the race cars?
Yes. So we represent also Mercedes in that, obviously in Formula One, and Mercedes was all in EV. The markets demanded it. The cars are great, but the infrastructure is simply not there yet, and that's why the demand is lacking. And I think what we're doing is what's happening in the real world. People enjoy driving combustion engines, but if we can make them hybrid, even better. And if you fuel them with biofuel, waste-based biofuel, this is still a sustainable alternative.
So are you arguing this is good for the sport, or are you thinking this is a mistake for the sport because it's going to change the sport?
No, I think staying technically relevant and innovative is important for the sport. That's always been part of Formula One, the fastest laboratory in the world.
And are these cars going to go faster?
They are going to go faster. They're ready to take incredibly fast through the corners and on the straight, but they are going to go fast again.
How dangerous do you think this is? And the faster the cars go, how much more dangerous do you think it is today?
It is really dangerous, but the sport doesn't show that anymore. With the camera technology that we have, you don't realize that the cars are doing 220 miles an hour. Cornering speeds, when you see that live, are astonishing, because you can't even believe that the car is going to make the corner when you see it coming. And it's dangerous. We were just lucky that we didn't have very bad accidents in the last few years.
LVMH just got involved with a big sponsorship, a 10-year deal for a lot of money. How many more deals are there out there like that in F1, you think?
So that is obviously a spectacular deal. It doesn't go much better in the luxury sector than LMVH and all of their sub-brands. And it's a knighting. If LMVH perceives us as luxury and being on par with their brands, that's good news. But we're seeing strong influx of technology companies, the best ones that are keen to work in Formula One on the marketing side and on the technical side. AI and machine learning is one of the big topics. So, so far, knock on wood, it's going okay.
How much more broad do you want the sport to be? Meaning, it is considered right now a very upscale sport. You look at what's going to happen in Austin over the weekend, or when it goes to Miami, or even Vegas. It is a luxury in the same way we described LVMH. Is that an accessible luxury? Does it need to be longer term?
It's quite interesting, because when we look at our demographics, it's affluent very much. When I'm in the big cities in the US, I see the enthusiasm, and you go a little bit more out of the cities, it's less. Football is the predominant sport, and I think we just got to continue to gain our fans everywhere in the United States. But it is high tech, it's niche, big in Europe and South America. But you can see in Austin, for example, we have been the single largest event in the United States last year with 430,000 people. So
you want it to be aspirational. You want it to be luxury, but aspirational, that other people.
Yes, we want to be luxury. We want to be aspirational and inspirational, but we also want to provide alternatives for people who can't afford to pay $1,000 for a ticket.
Long term, and I know your wife's involved in this. Do you want to have more female drivers in F1, and what does that look like?
Absolutely. I mean, I've been with Suzy for many years. It's been 15 years since we're together, and I've seen the struggles that she had as a professional racing driver. The kind of preconception that a woman isn't fit enough or strong enough to drive a car, and that is just simply not true. That's why she's running Formula One Academy, which is also a Formula One series as a managing director, with the aim of having more women in Formula One in a few years. And it needs to start with the ground rules in karting. Today, a few years ago, we had 100 karters, 5 girls. Now we have 25 girls over 100 karters, and that's going to eventually bring a woman into Formula One.
Toto, thank you for joining us this morning.
Thank you.
Good luck this weekend.
Thank you for having me.
You bet. When we come back, a lot more on Squawk. The ECB decision on interest rates expected in just about 7 minutes from now at 8:15 Eastern Time. We'll bring you that number when it hits. And then we've got Blackstone's President and Chief Operating Officer, John Gray. He's going to join us, break down the company's quarterly results just out in the last hour. We're coming right back after this.
a lifesaver.
Welcome back to Squawk Box. Blackstone reported results in the last hour. The private equity giant earning $1.01 share, and that's 9 cents better than expectations. Revenue coming in at $2.43 billion, just ahead of estimates. For more on the numbers and the remarkable amount of money that's inflowed into this firm, John Gray, President and Chief Operating Officer of the Blackstone Group. Good morning to you, John. How are you?
Good morning, Andrew. Great to be with you.
Want to talk about these earnings and then want to maybe delve a little bit deeper into what's happening as you see it from your portfolio in the economy. But we were just talking about the inflows and this idea that we now you have $1.1 trillion with a T. That's a record high for you.
Yeah, it is remarkable. When I joined the firm back in 1992, we had less than $1 billion, and it's been an incredible run. It's a testament to the vision of Steve Schwarzman, the talent of our people, and delivering for our customers, and that's what we did in the quarter. We had the highest appreciation in total amount in the funds in 3 years. We deployed more than $54 billion, the highest amount in 2 years, and on the fundraising, which you noted, more than $40 billion came in, getting us over $1.1 trillion. I think the key why this is happening is really twofold. One is we're seeing a healing of capital markets. You see it every day on your program. Debt markets are better, equity markets are better. And the second thing, which is really important for us, is we focus on some of the best neighborhoods out there: data centers, energy and power, India, private credit. We like to say where you invest matters, and driving performance, leaning into these great areas is so critical for us.
You just talked about deploying capital. I want to talk about where you're deploying that capital, but also to the extent that you're trying to harvest capital, which I'm not sure we're there yet.
Well, look, on the deployment side, transaction activity has definitely picked up. And when you think about a cycle when things are recovering, you want to lean in, invest before the all clear sign, which we've been talking about. That's why we've invested more than $120 billion over the last year. In terms of the harvesting side, that's been the one area that's lagged, but that's what happens. You sort of plant the seeds first and then harvest. And as we look forward, there's some very good signs. We've seen interest rates come down, both short and long rates. Spreads have tightened a bunch. You know, we've seen anywhere from 100 to 200 basis points of tightening in corporate real estate credit. We continue to see liquidity come into the marketplace. The banks who you've been talking to the last few days are much more open to lending money. The commercial mortgage-backed security market is fourfold bigger in terms of volume now, and the equity market is definitely improving, as you know, record highs. And I think the next tumbler to fall into place will be the IPO market. And when we look out in 2025, I think we'll begin to see more of that. We're having discussions now that are not just theoretical about taking companies public, but really practical. And that happens as equity markets strengthen. It's like a magnet pulling companies into the public markets. And that's another reason we have optimism as we look forward.
I wanted to take a quick pause for half a second. Steve Leisman is at the desk with us right now. We've got some breaking news, I believe, from the ECB, and we'll come back to you, John, in a moment.
The European Central Bank, Andrew, cutting interest rates by a quarter point on the deposit rate down to 3.25, by 0.25 on the benchmark refinancing rate. This is the first time the European Central Bank has cut interest rates consecutively since 2011. Speaks to a global cutting cycle of which the Fed has been a little bit behind the curve, or other central banks going a little bit more slowly. And just very quickly, I haven't had a chance to look at the outlook here. Interest rates on deposits have been down 3.25. Pandemic emergency programs are declining, so they're reducing their balance sheet. And I'll come back to you later. Expected inflation to rise again before declining to target, so that's interesting. Their headline was down below, their core was higher, and they're not going to pre-commit to a particular rate path. So largely expected another cut coming, but not expected for the ECB to forecast that definitively.
Fair enough. Stay where you are, Steve. I want to get back to John Gray, and maybe you can speak to what we're hearing from the ECB, but also where you think the Federal Reserve is going to be, at least for the next couple of months. Do you believe that there's going to be 2 cuts? Do you think there's going to be less, more? And I'd love for you to comment on, it's a competitor who said it, but Mark Rowan, who runs Apollo, said he didn't think that actually the Fed needed to be cutting at all.
Well, I would say we're not surprised by what the ECB has done here. We see inflation broadly cooling around the world. If you look in the U.S., what we see is we survey our companies, and in the third quarter, wage growth dropped below 4%. That was the first time in the post-COVID period we've seen that. When you look at rental housing across our large single-family, multifamily portfolios, we see those housing costs growing at less than 2% versus the 5% in the government CPI data. That's the biggest component of CPI. So I think the data gives the Fed air cover. We're in the camp that the Fed has room to lower rates. Their mission here is twofold, as you know, which is to look at the price stability, inflation. They're getting good data, and that will allow them to focus on their other mandate, which is employment. And so I would be in the camp that the Fed will lower rates. They're going to do it deliberately because they have a healthy economy, but they do have room to cut because the data reflects that.
Hey, John, I have an economic question, but it's tinged with at least politics or policy, which is to say, yesterday Stan Druckenmiller suggested that he believed that former President Trump would become the president. If that is the case, there is a likelihood of a massive tariff program. I'm curious how you think about that as it relates to preparing for it, given all of the portfolio companies that you own and what you think it would do to the businesses.
Well, we obviously have a ways to go on this election, but I think if you had former President Trump win, tariffs would obviously be part of the equation. I do think it's important to keep in mind where things ultimately land. What will be the size of the tariffs? Which countries will be affected? Which industries? And that may look different than what's being discussed today. It's hard to know. And I think as investors, it's hard to speculate. You want to be thoughtful. Yes, I think we'll have tariffs. We did have tariffs in the first Trump administration that continued in the Biden administration. But I think we've got to wait a little bit and see. But certainly companies in export-oriented industries have to be thinking about the impact.
The other big question I wanted to ask you about is this world of private credit. You are now in the private credit business. I mentioned your competitor, Mark Rowan, who's at Apollo, who has now been a pioneer of private credit in its own way, which I think is different than the way you've approached it. But there are questions about the private credit market. Does it make the system more resilient? Does it create more risk in the system?
Well, we think it does great things for the system in terms of reducing risk. And today, just as background, we've got $432 billion of corporate and real estate credit. It grew 20% for us in the last year. The reason I say it de-risks the system, if you look at our model, we operate on a capital light basis. We're just a third-party manager. Some of our competitors have chosen to become insurance companies. It's a different approach for us in that way. The second thing I'd point out is when you look at what we're doing in, let's say, non-investment grade lending to companies, private equity companies, we're essentially just bringing up investors right up to the borrowers. And we're doing it with pension fund capital on an unleveraged basis, or in our BDCs, less than 1x leverage. That's different than banks, who are a critically important part of the system, but as you know, are 10 to 12 times levered. They may sell to a CLO that's 10 to 12 times leverage. Right. So less leverage in the system. The other thing I'd point out, Andrew, is great duration matching. If you think about First Republic getting in trouble, they had that big, prime mortgage portfolio, 20-year duration. Those deposits, unfortunately, lasted 20 minutes. When we put assets on the balance sheet of our insurers, they've got long duration hold power.
But should we be concerned that the banks are loaning private equity? The banks are loaning money to firms like yours as well.
Yes, they're lending money to firms to what we're doing to certain specific activities. But when you look overall in our private credit activities, it's less leverage in the system in terms of what we're doing, and it's better duration matching. And if you look at the ultimate outcome here, it's reducing risk because it's spreading it throughout the system, and it's lowering the cost of borrowing for consumers and companies. And it's one of the reasons the U.S. system's so vibrant. We've got great capital markets, we've obviously got very healthy banks, and now we've got this private credit system. And I think it's one of the reasons we're seeing such strong growth.
We've asked you about it for the last couple of quarters, so I've got to ask you about the status now. Blackstone's real estate investment trust, known as BREIT. Where are you in terms of where you think you are in the path, and also where are you as it relates to beating thresholds for fees and the like?
Well, we're incredibly proud of BREIT. The vehicle has delivered in the main share class a 10% return for nearly 8 years, 50% higher on an annual basis than the public REIT market. We managed to give 100% liquidity to everybody who sought it over time, and we love the portfolio. It's helped us through this difficult period, but it has also really positioned us well going forward. 90% of the portfolio approximately is in rental housing, logistics, data centers, and a big focus in places like Texas and Florida. Where we are in real estate is obviously we're on this recovery curve, and that's going to be very helpful for BREIT. Debt costs have come down. More people are talking about investing in real estate, and we're beginning to see that in the flows. Redemptions are down more than 90% from their peak. October 1 inflows were up 30% from the third quarter. And if current trends continue, we expect to have positive net inflows into BREIT. And to us, it's something we have a lot of pride about because we weathered a storm and we've done a terrific job for investors.
John Gray, it's good to see you this morning. We appreciate it and hope to see you soon, maybe at the desk here a couple blocks away from you. So we'll talk to you soon. Thanks.
Look forward to it, Andrew.
You bet.
All right, when we come back, a check on Apple after its chief people officer exited the company after less than 2 years. Stay tuned. Squawk Box will be right back.
C.
Welcome back, everybody. Apple has seen a slew of C-suite departures. Hate that phrase, but whatever. They've seen a lot of big executives who have retired in recent months, setting the stage for the changing of the guard at the world's most valuable company. Steve Kovac joins us right now with more on that. Hey, Steve.
Yeah, and some notable departures here, guys. And among the top Apple leadership in recent months, going all the way back to January, in fact, even at the board level. And this points to a sort of generational shift. A lot of these people have been there for years and decades. Now, yesterday, we learned that Chief People Officer Carol Surface, she left after not even 2 years on the job. She was appointed in February 2023. Also this month, Dan Riccio, who was the overall hardware boss until 2021, he stepped aside to lead the team making the Apple Vision Pro headset. And then in August, CFO Luca Maestri announced he's stepping down to take another role at the company. All three of those Tim Cook's direct reports. Now, on top of that, some other notable senior executives leaving after decades at the company, like the head of procurement and a top App Store vice president. And two board departures this year, Al Gore, the former vice president, and James Bell, former Boeing CFO. Now, those were mandatory board retirement ages at the age of 75, so that's why they had to leave. And there are just a few interesting things I'd like to highlight about what we're seeing with these departures. First of all, some of these guys, they step down from Cook's leadership team, but stick around Apple and run smaller teams or projects of the company. That includes CFO Maestri, former marketing boss Phil Schiller, who's now running the App Store and events, and Riccio. All of them fall into that category, and many of these departures are incredibly senior and have been there for years or decades. Plus, we're seeing younger executives step in, like hardware boss John Turnus, who is now on the leadership team. As for Tim Cook, he's been CEO for over 13 years now, not to mention he was COO before that, guys.
Yeah, I think the Luca news, Luca Maestri.
Yeah.
I mean, that was the biggest one that could have sent the market kind of tumbling and concerned about what was happening. The idea that he's not leaving, that he's sticking around, this is probably more about commuting.
It could be a little bit, or just taking a diminished role. And that's what's interesting towards the end there. That's why I highlighted those three people who stuck around. Phil Schiller, he's been at Apple since, way early, marketing boss. He's still there, and he's, they call him an Apple Fellow, which means he's semi-retired. I don't know how to really describe it.
You still want your brain.
Exactly, that's exactly it. But he's running a very important part of the business, the App Store, and he's working with all those regulations they're facing in Europe and things like that as well. So it's really interesting to see what's going on. And then we talk about succession, right? Tim Cook, he'll be 64 in a couple weeks. He's been CEO for 13 years. He said, he told Dua Lipa, of all people, on a podcast that he plans to stick around for a while. And by the way, his shares don't fully vest until 2026.
Yeah, but I think the way they do it is they create a place for the people who have been so important to it.
Exactly.
You try not to burn people out and run through them and run them out the door.
Yeah. Design team, a little different since Johnny Ive left. But yes, for the most part, that's been true.
Steve, thank you.
Thanks, guys.
All right, let's get to Rick. We've got some news, Rick, on the Thomas claims.
We certainly do, Joe. September retail sales, let's start out there. Up 0.4%. That's better than expected. And 0.4, at least up till now, with unrevised, follows some solid numbers going backwards. We had up 0.1 last month. Doesn't sound great, but prior to that, we had 1.1. So we're holding on to the gains. We're not slipping into any negative territory on these numbers. And if you strip out autos, it improves. It improves up 0.5%, up 0.5%. That equals where we were in June. To surpass that, you have to go to March. Now let's strip out autos and gas. Up 0.7%. That's the best since June when it was up 0.8. And the control number, well, the control number is when you synthesize everything, you come up with a core. It's up another whopping 0.7. That's pretty powerful considering the rearview mirror up 0.3 and up 0.4. Cumulatively, pretty strong, and there's revisions coming in. They're actually 1/10 better. Now let's switch gears, shall we? Initial jobless claims, 241,000. We're expecting a number close to 260,000. In the rearview mirror, 258. became 260, so we're down 19,000. But there's a lot of asterisks here, whether it's Columbus Day holiday, whether it's some of the storms, hurricanes, may have prevented some of the states from keeping up with their, putting in their information. So we want to put a little asterisk there on continuing claims. Of course, it's the 19th month over 1.8 million. We have not seen 1.9 million since November of 21. This number is 1,867,000. That would be the biggest since the last week in July when it was slightly higher. And last, certainly not least, Philly Fed. This is an October read, expecting a number around 3. It's triple that, 10.3. That's the best number since just July when it was around 14. If you look at interest rates, they moved much higher. As I've been talking about the last couple of days, if you look at what propelled interest rates higher, it was the 10-4 release of the September jobs report. And we moved over 4% in the 10, but all maturities jumped. And they arced. They came right back down basically to those levels yesterday in anticipation of what is probably the next most important number, and that was retail sales. Proved to be pretty good. We are now looking at a yield that's around 407-ish. Prior to the release, it was 403. So right now, you're looking at a number that's up about 6-7 basis points on 10s. 395 is where we were on 2s. They leapfrog up to 4%. They're now up 6 basis points. And the fact that we breached 4% in a 2-year tells you how important some of these metrics that are top-tier measurements of the economy are to investors trying to handicap what the easing cycle will be and trying to parse through weird stories about it's really sad that the Fed's data dependent. Shouldn't data dependent be their central theme? Joe and the gang, back to you.
All right, thanks, Rick. For more on the data, let's bring in Lindsay Piegza, Stifel chief economist, our own Steve Leisman. Been muttering. Steve, we're gonna go to you first. What were you muttering about?
This is a strong report that's going to lead again, I think, to an upgrade or a revision upward in the street's forecast for GDP in the third quarter. So this economy, which was supposed to be weakening, upon which the idea of the Fed could easily reduce rates with not looking over its shoulder, now has to look a little bit over its shoulder and wonder, is this economy strengthening again? I think Rick is right. I'm going to take a pass on making a judgment on the jobless claims numbers because there's all this distortion out there. It's also a time of year when there's some distortion, not to mention the hurricanes and all the other stuff Rick mentioned. But I don't see a reason why the retail sales number should in and of itself be distorted. You had some weakness in electronics and furniture and home furnishings, but everything else strong on clothing, general merchandise. Food and drinking establishments did well, and as Rick pointed out, that core number is what feeds into GDP. So it was supposed to be a weakening economy. It's not weakening, and I just wanted to take a quick look at the probabilities. Still banking on a quarter, 90% probability of a quarter point rate cut, down a little bit, and a 74% probability of that next quarter out there. You got to think about a pause maybe in there somewhere. You got to think about the idea that if the inflation numbers come out worse again or the employment numbers come out stronger again, that a pause would once again be on the table, Joe.
Muttering. I thought I heard you say something about the Mets, but you were not, had nothing to do with. Lindsay, what did you think?
Well, I think this was a very strong number, and I think this underscores the notion that the Fed maybe took too big of a step out of the gate with that 50 basis point cut. And this underscores the need now looking forward to maybe take a more tempered, patient approach, potentially dialing back even the need for a November rate cut. When we look at inflation moving sideways and in some cases moving higher away from the 2% target, we see the labor market strengthening as of the latest report, the non-farm payrolls report, the unemployment rate ticking down, wages moving higher. Now we see the consumer showing even more resilience. And to your point, we could see Q3 GDP expectations move higher above 3%.
Around 3, and I'm hearing
this is
stuff
likely
about.
to take it higher.
I'm hearing stuff that 25 is going to be stronger than 24, Joe.
Lindsay actually said, and I'm afraid to even posit that the Fed could have not known what they were doing with the 50 basis point. I think you still think that there was a method to the madness, recalibrate, whatever, but she just said it, that they could have been totally making a policy.
Let me just be clear. I thought the Fed should have gone a quarter back in September, but I think you can justify it in the way that it's like.
But it might be wrong.
You were way restrictive. I thought you were.
It could be wrong, right? It could have been a ill-conceived, ill-considered move, especially if inflation were to go along with the economy being stronger than we thought.
I understand the logic of the Fed. I don't agree with what they did, but I do understand. They painted us a pretty clear picture that when you looked at where the rate was on the overnight funds, over 5%, and you consider where the 2-year was and the rest of the curve was, how T-bills were starting to trend, you can make a case that they want to be more in line with the rest of the curve. But the issue is that what the Fed is doing wasn't necessarily what data and what the economy were screaming. And they take a real chance of trying to be a little ahead of the game, as the chairman has pointed to, that they want to help to keep the economy going. They don't want to wait till the necessity of easing arises. Well, there's risks in doing that. And the risk is that your interpretation of the economy down the road that you're expecting is not what you end up with. And that is beginning to happen. So it's not that they're going to necessarily have egg on their face for the economy looking better. I think most investors actually expected that. And I think that's why stocks flew. But I think where they're going to go wrong is the stickiness of inflation that they've already thought of as surrendered to some of their policies.
I just want to add real quickly that it's a mistake when you turn down a street and it's a dead-end street and the ocean's at the end of the dead end. It's okay if you go down that dead-end road and you turn around.
Well, you could
if you press the gas and you go further into the water. My point is that the 50 itself may not be a problem. It would be further rates if indeed you have this.
Well, and we've already seen Fed officials begin to backpedal. Even after that September announcement, Chair Powell said, look, we're in no rush. And we're not going to make 50 basis points the base case scenario going forward. So they've already tried to push against market expectations. But to Rick's point, a lot of that September move, the motivation was pressure from the market, not what the data was saying. And we've seen this time and time again, the market getting ahead of itself and now being forced to recalibrate back to reality, back to what the data is really suggesting.
And we have recalibrated by 60 or 70 basis points in terms of the 1-year outlook for Fed rate cuts, Joe. We put back in 70 basis points.
And you're talking bond market because they're not responding to what the stock market's saying. Because the stock market's saying don't do anything, I think.
Well, the stock market seems to love good data. It seems to love bad data. So right now the market
seems to love lower interest.
The earnings are coming out in pretty good shape, right, Joe?
And they look even better if inflation continues to come down. They look, if it doesn't, they don't look as good. Lindsay, thanks. See you, Rick. You said hug your like 8 times. Everybody in the control room yells in my ear.
Major day, right?
Yeah, it does. They yell in my ear whenever you say that.
Because of your obsession with it.
Is it really that?
Yes.
Oh, sorry.
Thank you, everybody. When we come back, we will head to the Hood Summit. We'll be talking to Robinhood CEO Vlad Tenev. We'll be right back.
Robinhood.com.
Coming up, Robinhood CEO Vlad Tenev is going to join us live from the Hood Summit in Miami to talk about the company's latest features for traders and what they're seeing in the retail market. Squawk Box coming right back. Welcome back to Squawk Box. Robinhood announcing a new suite of products for advanced traders. Joining us right now, first on CNBC from the first ever Hood Summit in Miami, is Robinhood co-founder and CEO Vlad Tenev. Vlad, it's great to see you this morning. I want to hear all about what the summit is about, but also want to talk about some of these new features that you've implemented in the product for advanced traders. It feels like a major shift from where you started and what you were doing. What's the impetus for this?
Well, first of all, the Hood Summit, it's the biggest event we've ever held for active traders. It's here in Miami, and we had 800 of our best customers joining us for the event. We announced some products. We had over 1.7 million people joining on live stream as well. And really, it's just to mark 2 years of progress from us becoming a great app for beginning investors all the way to an advanced platform that serves the needs of sophisticated active traders as well.
And so that's what I was going to ask in terms of just how you're thinking about the market for your product today versus the way I think maybe people thought about the product before.
Yeah, there's 3 things that we're focused on. The first thing is being the market leader in active trading, growing market share. We've done very well on mobile historically among younger people and folks that primarily trade and invest on mobile. But about half of the market is on desktop web, where you have more real estate on the screen. You can do more sophisticated things like have charts and data and the trading in the same interface. And so we weren't really a player in that space. But last night we announced a new platform, which we're calling Robinhood Legend, which is the first platform on desktop that we built specifically for the needs of active traders. And the feedback was really positive. I mean, really there hasn't been a great trading platform built with modern technology and with charts integrated until we announced Robinhood Legend. So we had 1,000 people sign up and get access to the product in the first 40 seconds after we opened up signups, which I thought was pretty amazing.
I want to ask you about two other trends that are taking place among retail investors and whether it's the markets you want to play in. One is, we keep talking about the election, as you might imagine. There are folks who now want to bet on the election. You can technically actually do it right now, even in the U.S. Before you couldn't do it. Do you think that's a good development, a bad development? How do you think about the betting markets for political purposes?
Look, I think I'm very pro-markets, pro-free market, and I think that there's legitimate geopolitical risk to hedge, and investors should have access to all the tools at their disposal to hedge their risk appropriately. So yeah, very much in favor of more access to markets and more clear information. I think that the great thing about these markets is people have money on the line as well, so you can kind of trust that they care much more about the result, and those results should be much more reliable in a sense than just simple polling.
So I don't know if you saw, but Stan Druckenmiller yesterday made a comment about another trade that he thinks may be indicative of where this presidential campaign could go, which is the crypto trade, the trade around Bitcoin. I'm curious about how you see crypto moving. Obviously, Bitcoin has moved higher, and whether you think that's a sign of former President Trump gaining a lead in this election, because there's a view that he may be more pro-crypto. At the same time, I think there's a sense that Vice President Harris may be more open to crypto than she used to be. I don't know if you see a massive distinction between the two.
Both candidates seem like they're in favor of the U.S. being a leader in the space, which I think is a welcome departure from the status quo. So it could have an effect. You know, the markets could be reacting to the political sphere, but also we're seeing broad-based optimism right now across multiple asset classes. I don't think it's just crypto. And you know, markets shift up and down. The scenario can change very, very quickly. But right now, when we talk to our traders, many of whom are at this event, they're expressing a lot of optimism. You know, they believe the future is going to be better than the past. America is kind of at the intersection of all of these new trends and innovation. If you're looking at electric vehicles, artificial intelligence, there's a lot of potential there, and they
Right.
see America and the U.S. stock market as the best way to kind of capitalize on that.
I don't know if you saw the story or if you can add any intelligence to this. Politico reported that your chief legal officer, Dan Gallagher, has been floated as a possible pick for SEC chair if former President Trump were to become the president.
Yeah, I mean, obviously, Dan has been a great team member. He's been continues to be amazing to work with. Has been responsible in large part for us becoming such a great regulated player and up-leveling there. So, of course, we'd love for him to continue doing that. So I have mixed feelings myself about these reports and rumors. But also, you know, I appreciate that, you know, we need people that have extreme regulatory knowledge, but also care about innovation and America being a leader in financial services and cryptocurrency and all of these related enterprises.
Vlad, the other question I was just going to ask you is, you know, outside of Robinhood, of leading Robinhood, you funded and have founded this AI startup, Harmonic, which is effectively doing math problems in AI. And I don't know how much the audience even knows about that project and that effort, and thought maybe you could tell us about it, just where it stands and what's going to happen to it.
Yeah, in a nutshell, we think that it's going to be important to create artificial intelligence models that have the ability to identify when they're correct and actually prove output information that's verifiably correct. There's a big problem with hallucinations of these models. Models are getting better and better, but if they're going to be used for anything mission critical, including for financial services use cases in aerospace, automotive, then we need a much higher standard for correctness. And imbuing mathematical proof and mathematical problem solving, we believe is the best way to guarantee that.
How good or bad do you think these other models are? I mean, if yours can do math and you think these other models can't, what's holding them back and what are you doing differently?
Yeah, I mean, this is it's sort of like a area of frontier research into the field. Basically, the way Harmonic trains these models is through something called reinforcement learning. And reinforcement learning relies on having a reward for the output. So basically, like, just like humans learn and get rewards from our environment, you know, if we're doing the correct things, we make friends, eventually we pass on our genes to the next generation. AI models getting rewards is a great way to train these models with whether the output is right or wrong. And the great thing about math is, unlike English, it's sort of like black or white, binary, whether output is correct. So you can actually create a reward signal that's much stronger and more reliable than just language.
Vlad, I want to thank you for joining us. Congratulations on the summit and the new product, and we look forward to following your progress as always.
Thanks, Andrew. Thank you, guys.
You're welcome. Coming up, a final check on the markets ahead of the opening bell. Squawk Box coming right back.
Athletics.com.
We're watching the shares of Expedia after a Financial Times report that said Uber has explored a possible bid for the travel booking website. The report says Uber approached advisors in recent months after the idea of acquiring Expedia was broached by a third party. It says a focus of the discussions was the role of Uber CEO Dara Khosrowshahi, who served as Expedia CEO, you might recall, from 2005 to 2017, remains on the company's board. That likely means any approach would be friendly, and Khosrowshahi would have to recuse himself from deal discussions. The report says Uber's interest was at a very early stage, and no formal approach or discussions had been made with Expedia.
All right, let's get a final check on the markets this morning. We are up across the board. It now looks like the Dow futures are up by just over 75 points. You've got the NASDAQ futures up by just over 200. The S&P futures up by about 30. Wondering why you're seeing such strength from the NASDAQ this morning, and you can look directly to what's happening with the chip stocks. Taiwan Semiconductor out with a big beat overnight and also raising its guidance, higher forecast for the year. Check out how that has improved the fortunes for all of these other tech stocks as well. Lam Research up by about 4% along with ARM Holdings. Supermicro up by 3.8% and Marvell up by 3.2%. Again, all of this on strength for what we've seen in AI. That continues, and that's what Taiwan Semiconductor said and why these other stocks are all up as well. Let's take a look at treasuries after the data that we got earlier this morning at 8:30. Right now it looks like the 10 years at 4.06%, the 2 years at 3.98%, so both of those yields ticking up slightly from where we were before the data and earlier this morning. And the dollar at this point, first oil. Oil's been down significantly. If you were looking at a week chart, you'd see it's down by more than 6%, $70.58. Closed yesterday at the lowest level we've seen in about 2.5 weeks. And again, that comes on thoughts that Israel will not be attacking Iran's oil facilities at this point. You can see the dollar this morning, right now, across the board with what you're looking at, mixed picture. Make sure you join us tomorrow. Right now it's time for Squawk on the Street.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stock's going to flirt with all-time highs once again as retail sales, ex-autos, comes in best since March. Taiwan Semi ups guidance, reignites the AI trade, and jobless claims fall by the most in 3 months. Got the 10-year 407. Our roadmap begins with these records on a roll. The S&P is within striking distance of a new high, and the Dow set to extend its rally, already setting 2 milestones this week.
Plus, of course, we are watching the chips. Taiwan Semi is bullish on its outlook, particularly because of the AI boom, which it says is real and profitable. Higher medical costs continue to batter many health insurers. The latest, Elevance Health, reports a profit hit, citing, quote, unprecedented Medicaid challenges.
Yeah, it's sickening, huh? Let's get to the markets and this continued record run here, Jim, as we look for 47 all-time highs this year. What's the bigger story, Taiwan Semi or retail?
Well, I got up for Taiwan Semi, so I'm going to say that. In the middle of the night, they come out and they basically refute everything you heard from ASML, where the CEO is saying that everything away from AI is sad. That was a pathetic conference call from ASML. And this one was the exact opposite. And there's comments that are just extraordinary. I'm going to go right to the top. WEI says, our customers demand, customer that's single, the apostrophe S, demand for far exceeds our ability to supply. There it is. NVIDIA. So you have NVIDIA, which is going to be the world's largest company soon, blowing out the numbers. Obviously, they're all agreeing that AI is incredibly strong. The rest is not that strong. And David, what I can tell you...
Wow, not enough to even increase capacity twofold,
They can't. Yeah. What I can tell you is, given the fact that NVIDIA has become the bellwether, you're not going to be able to beat the verification away from Jensen, unless you look at Taiwan Semi. So I just think that you can get up, you can see this stuff at 2:30, 3:30 at port of call, and then look at the reaction. So when you have the semis going after yesterday's shortfall because of ASML,
yes,
and then I'm going to add Blackstone.
Okay.
Finance, tech,
those
are the leaders of this rally.
And we'll get industrials, all-time high on a cap and equal weight.
I mean, we haven't even heard from them yet. They're going up, but so far this amazing earnings season, if I have tech and I have banks, what do I need? What do I have to have? Utilities were the leader yesterday. Get that. But that's, of course, nuke.
That's the nuclear.
Yes, the nuclear.
Yep.
You
Nuclear,
always
of course.
said it was going to come back.
I always said that. I did.
You
For
did.
years I've been talking. No, we wanted it to.
No,
in
I'm not
part
kidding.
Because we
How
didn't
many
talk
times have you
about-
sat here and said it is the cleanest, can't believe we've
it's
been in it?
Years. Years. And when it comes to at least addressing carbon, of course, in it, because for years nuclear was not included. It's like it's solar, it's wind. Like, really?
I know.
Back to ASML, back to TSMC, because
absolutely.
that's certainly the driving force in the market. I mean, Jim, obviously you hit it right on there. The AMD, NVIDIA were down a couple of days ago in part because of this ASML warning. Even when they said it wasn't AI related, a lot of people didn't believe them.
Exactly right.
Because the guide down was so big, they're like,
5
we
to
don't know
3.
what's going on there at ASML. And then it's followed by this huge number from TSMC, as you pointed out. And you know, the chips are more expensive, so the average selling price goes up for TSMC because the margin, even if it's fixed at the same percentage, it's just a bigger number.
Right. Oh, so right. And I did love the fact that what they basically did, they actually reiterated what Jensen said, which is there's insane demand. And you'll see AMD club naming, but now that does they work at Taiwan Semi. Marvell Tech, where the CEO bought $1 million worth of stock, Carl, just last week. That is Taiwan Semi. So you have this weird. I mean, we never used to think that we'd have to get up in the middle of the night for Taiwan Semi. We get up for Nestle's, which reported a terrible number. But you come back and you say, well, look, AI is real, and that's really the theme of Taiwan Semi. Because there's this moment right now where we're thinking, you know, cereal companies are AI. No, but this was a verification of the big route.
But you don't think it's like earlier chapters this year where the entire market rested on AI, on Mag 7, on mega cap tech?
Agreed. I mean, I think that the S&P, the equal weighted, not the market weighted, but the equal weighted, was showing that this was a rally of the 493 other stocks. Now you've got this. By the way, you have Netflix, which is not Mag 7 tonight. But what you can make a mosaic, which just says the rest of the market went up. Russell 2000 going up. Now this side's coming back, and a lot of people have been saying to me, Jim, if we lose tech, it doesn't matter what the other companies do. Well, we're not losing tech.
Right.
Period.
Meantime, you've got the NYSE AD line, all-time high.
No.
Right?
I just
breath getting better.
Yes, I mean, this is a 2-year anniversary, and it's going out in just a blaze. This way, you know, in the new year, the third year is starting stronger than these other years. You know, David, I had this interview with Charlie Scharf from Wells Fargo.
At 9:05.
Had to. Well, I mentioned Jensen at 9:01. And what was amazing was the broad-based nature of the strength of this. Again, people say, listen, the areas that are strong, Nashville. I mean, you know, areas as strong as middle of California. Areas strong as all of Georgia. It's not where we expect things to be strong. That's for actually from Prologis yesterday. The areas that are strong.
Right.
I just find, I know we can't be. It's almost Panglossian. I don't want to go there, but I think that we are in a moment where the Fed's going our way, even with retail sales being where you would normally say, if we would say, do they have to tighten?
Well, you know, on that point, then I'd love to bring in John Gray's voice, not his body, because he was on Squawk Box earlier. As you point out, Blackstone reported numbers. We can get to the Blackstone numbers a bit later, but when we're talking rates, when we're talking economy, it was interesting listening to Mr. Gray discuss what they're seeing, and they have a very broad view, of course, given the diversity of portfolio companies at Blackstone. That's the old private equity business, not to mention, obviously, what they see in real estate, given they are the largest owner of real estate out there as well. But take a listen to what he said about inflation and how it's giving the Fed some cover.
We see inflation broadly cooling around the world. If you look in the U.S., what we see is we survey our companies, and in the third quarter, wage growth dropped below 4%. That was the first time in the post-COVID period we've seen that. When you look at rental housing across our large single-family, multifamily portfolios, we see those housing costs growing at less than 2% versus the 5% in the government CPI data. That's the biggest component of CPI. So I think the data gives the Fed air cover. We're in the camp that the Fed has room to lower rates.
There it is.
Really well put.
Yeah, that's why I wanted to use
They
it. I
need
thought it
air
was
cover.
interesting.
Yeah, because I think we all are kind of struggling. Is this a rate cut environment? And the answer is absolutely. It's a rate cut environment for exactly what Jonathan Gray said. I don't know, Carl. I think that without the rate cuts, then what we'd be looking at is things like Elevance, which is Blue Cross Blue Shield reporting saying Medicaid is a problem for them. We'd be looking for something like Travelers initially was down $1.50, but people realized that combined ratios, but they're looking at the stock as well. So I think that we're putting a positive spin on everything that comes out that's even neutral.
Yeah. We've been keeping stock of CPIs around the world this week. UK 1.7, France 1.1, Canada 1.6. No surprise that the ECB cut two times in a row now.
Sometimes I think that China is a major reason why everybody's doing badly.
Aluminum's on pace for the worst week since July.
Incredible.
The world can barely hold 70.
Incredible. It's CSX. You guys have CSX.
We do.
You ask about coal. I mean, coal's a great barometer. Ask about steel. Coal and steel, really not good. So you do have I love the air cover, Jonathan Gray. I like that air cover.
Yeah, air cover.
Air cover.
Yeah, well.
Yeah. P-47.
Fortunately, there's a great deal of conflict going on in the world right now, so it's not a.
Between
it's
the
not
8
it's
o'clock
a
and
phrase.
the 9 o'clock?
Yeah, no.
Oh, I'm sorry.
Phrase that's used often these days, but yes.
By the way, though, in CSX, Joe is so good at being honest about what cargoes aren't good, and in the end, like you come back and you say, well, wow, that part of the country's weak, and then you can say, well, it storms. But it doesn't matter. Again, Jay Powell can point to anything that he wants to be able to lower rates. The fact is that rates are high. They are high, and yet, we get data that makes it so, well, wait a sec, rate cut, but retail sales great. So I can buy what? Walmart, I can buy Costco, you can buy these things. And of course you can buy Amazon, because everyone thinks that Amazon's having a bad quarter, because the last time they reported, they mentioned that maybe sales could be down during the Olympics. Wow, that was at 186 going to 161, and now we're back. American Express reports tomorrow.
Pepsi blamed snacking on the election,
Yeah,
which
the
David
snack.
makes constant fun
I
of.
cannot get past that one. Sorry.
Nestle's, they fired the recent, Mark Schneider was fired.
Mark Schneider was yes.
Alleviated.
Alleviated.
Well, they're like
yes, he was relieved of his duties.
Yes, but there again, pet food good, everything else weak.
Yeah, they do lower their organic guide to 2, which would be the worst of the century for a full year.
And yet Mars, private company's doing quite well. So, but Nestle's gives us air cover. We have I love the air cover thing. I gotta use that.
Well, you already are. You used it like 4 times in the last 2 minutes.
Because I heard private credit. Private credit is just like there used to be the show Groucho Marx. Stock comes down, it's just private credit.
Well, no, it's like plastics was in The Graduate. It's not private credit.
Exactly.
Private credit's
By the way, when Honeywell got out of plastics, got out of the chemicals because plastics just nowhere.
Yeah.
You know what's back though? Aluminum, but only not from this, but from the idea that there's a short squeeze in aluminum, not real demand.
I mean, I do like to point out Blackstone is almost a $200 billion market cap. It's bigger than Goldman Sachs. It's bigger than Morgan Stanley.
Well, did you see David Solomon referencing
and
some of these firms that
private,
are just crushing
private
it?
credit is now a very large component for it, growing is more quickly than other parts.
Credit.
Blue Owl, obviously.
Now, that's supposed to be like,
I know, but
Blue Horseshoe.
I got it. Okay. I got it, and that was funny. But Blue Owl, by the way, is
really
$22 as well.
I know.
That's created an enormous amount of value. That came out of the old Neuberger Berman. It's amazing.
Nice people.
There's a guy named George Walker who doesn't get a lot of credit for the incredible amount of value he's created as a result of taking that thing out of bankruptcy from Lehman.
Just like Blackstone was worth nothing, and then just what
but
a
yes,
revolution.
Ares, Blue Owl, and obviously the giant Apollo. Private credit is enormous, and it's starting to fuel things at Blackstone
Is
as
there really
well.
music? It's 9? It's 9/11. We have an incredible button. No, we're blowing this damn thing out because this is a seminal moment here.
Well, we get to come back and talk more. We do.
And you got a show tonight, and you can come on all day if you want. Just
Well, I'll tell you, I like Joe very much, and I'm going to do the show from a CSX caboose. Oh yeah.
With a little hat. We have a little hat on.
On your way.
Put that hat on.
Well, you said Mr. Gray. I was immediately thinking about Mrs. Peacock, Mr. Green, Professor Plum, and Colonel Mustard.
More reservoir
In the
dogs.
library.
When we come back, plenty more movers to get to. We'll get to Lucid taking a hit. There's Travelers, there's Key, there's M&T. More on Meta today when Squawk on the Street continues.
journey today.
Busy morning with retail sales, Philly, and claims. Now let's get some industrial production with Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, a lot of important data points. Industrial production for September, expected to be down 0.2%, comes in a little bit more negative, down 0.3. That's the weakest month-over-month change, well, just since July. But, you know, this is the 5th negative sign in front of industrial production this year. We know that manufacturing has been a bit of a blemish with regard to the better-than-expected horsepower of the U.S. economy. And there's a negative revision of last month, up 0.8, which was a good number. It was the second best number of the year, now becomes only up 0.3. Capacity utilization, also a miss. Weakest since July at 77.5. And also in the rearview mirror, 78, which was pretty solid last month. That was the, second best reading of the year as well. That gets demoted to 77.8. So we see that interest rates right before these reports were making new high session yields in 10s, touching 408, up 7 basis points on the day. 2-year, of course, right after strong retail sales, flirting with that 4% level. We still have business inventories, National Association of Home Builders Sentiment Index yet to come at the top of the hour. But suffice it to say, retail sales put a little horsepower back in that selling, pushing rates up. Squawk on the Street will return after a short break.
Spotlight.
Lucid shares are tumbling in the pre-market. The EV maker announcing a public offering of more than 262 million common shares and a warning of a wider than expected Q3 loss as it does try to wrestle Jim with sluggish demand.
Yeah, I mean, the EV market is just awful, and yet we're still putting up lots of battery factors. More like there's a big kind of pretend that it's going to come back.
The EV market is not just awful. That's an overstatement.
In our country.
What? I don't really awful.
I mean, it's August EV sales in Germany were down 60%.
Yeah, and look at Ford. How much does Ford lose per EV?
So it is off.
I mean, in Europe, it's worse because they got some of these subsidies expiring.
I'm sorry, David. It's not as strong as I'd like it. How about that?
No, I'm just questioning the use of the word, but if Carl backs you up, then I back off.
Yeah, it's 2 against 1.
Yeah.
How about this report?
But that's Germany. Is it? What are the numbers
That
here?
was like the most EV country of EV countries. Remember, that's also VW, which is laying off people. VW doesn't lay off people, for heaven's sake.
Lucid, by the way, we should point out, the private investment fund of Saudi Arabia is the majority owner. They're going to be buying some of this offering as well. This was a SPAC. You may recall, if you go back, I guess it's 4 years now, whenever it was, we talked about it a lot because it had soared during, if you see it there, that period of time when it soared. Of course, it was what, Churchill 4, I forget which number it was.
Yeah.
Coming out of the chute there, but it's a capital intensive business. Not easy. You got to keep raising money.
It does. Well, when Peter Rawlinson took me into Lucid, I was in the back, and I was at the end of it. He stopped really quick. He was going 80. He stopped really quickly. I was concussed.
That explains so much, Jim.
Yes, I was concussed. That was before the protocol. I came right back. Now I would be out 2 weeks.
How about this report out of Bloomberg that Apple had been working with BYD for years on that now canceled car project?
Well, I mean, and then what surfaced was surfaced. The people officer leaving. I mean, all I can tell you is that if Apple's doing so badly, what's it doing in a foot race? Of course, every day with NVIDIA for market.
By the way, I think TSMC, back to our sort of lead story, also makes Apple design chips as well. They produce Apple design chips for the new AI-powered phone, which is going to need them, right?
Right, but you remember Apple always switch suppliers. You never know what they're going to do, which is why all those supplier stories that people have are always wrong. But Apple, I think, is there's a lot of stuff that people are not away from the phone that they're working on. That's kind of interesting. And they keep being counted out, and obviously I'd love to be counted out as much as Apple's being counted out. I mean, yesterday was a UBS, NCIS, whatever it is.
Evidence Lab.
Yeah, Evidence Lab. I met someone who was in NCIS. I said, really, an NCS guy?
Like Mark Harmon?
Yeah,
really?
And I said, hey, you work for UBS.
Didn't know what you were talking about.
No, I did. No idea. It went over just like by joke with Jensen Wong. Super funny. Laughing on the inside.
We all do that with you a
Don't
lot,
tell me
Jim.
there's more music. Is there any show? Is there any show? A NASDAQ company? I mean, no, we'll just like, whatever.
For Jim's birthday, no breaks. How about that?
Oh my.
That'd be the best gift.
And you and I will not talk at all. Just let him go.
Why not?
You can turn to me, but I won't say anything ever.
Do you know how good the Jets have become? Just even though you had a loss last night.
Finally, we get to football. Wait, the Jets, Devontae Adams, you think has made them a better team?
I think that's one of the greatest pickups ever.
That is the two of them together is going to be fun.
Oh yeah, it's great. Oh, it's going to be great.
I'll take
We're
this
2
weekend.
and 4.
I'm taking the
We had
Giants.
12 penalties
I'm
against the
taking the
Bills.
Giants.
Our offensive line can't block them.
Yeah, Eagles give them 3. Taking Giants. Those are allowed. It's all legal now. It's all draft kicks.
Exactly right.
A NASDAQ company.
Kramer's Mad Dash in the opening bell after this.
All right, let's get to a mad dash with Jim. We got a little less than 3 minutes for the opening
I'm so
bell.
torn because Mark Benioff just posted last night Microsoft Copilot. He was referencing a Gartner study saying it's just inaccurate.
Did he call it Clippy? Was that him who called it?
That's why I thought we should mention it. That he calls it Clip.
Wait, why is Danaher up?
Oh, okay. So Danaher, there's a company called Sartorius. It's a German company. It's probably one of the most most befuddling company in the world. They finally reported a good number after missing quarter after quarter after quarter. Every time they missed, Danaher was down 10. Today, they actually made the number. Sartorius says suddenly the stock's up 10. People didn't realize why, because if you hit the news, you won't see it. But it's because a competitor of theirs, in some areas, competitor of theirs finally reported a good number, so this stock is breaking out. And I've been waiting for this because it's such a great company. You know it's Rails.
Yeah, the Rails brothers.
They owned the Commanders.
For a couple of years, Danaher, if I recall, where the stock price didn't do
No,
much.
it was owned by my charitable trust, and I was always on it for years, and finally it's come back.
I mean, Larry Culp obviously had been the CEO
Right,
there.
and then they bought that great business from Larry, GE.
They bought, from GE.
But I just think that the Rails brothers, who also own some of the Commanders, along with Josh Harris, who's like Mr. Private Credit, private equity, and one of the nicest guys in the world, frankly. He owns the Devils, he owns the Sixers, he owns the Commanders.
Right, that's Harris Blitzer. Yeah.
Yeah, and he's just such a good guy. I don't know if you know that. I mean, when I asked him about how do you went to Wharton, I mean, he has this little thing, or Penn, but he has these like little connections to the towns and teams that he's with.
He's all about back to football. He's all about football now.
Right, he is. But the Commanders look very
What
good.
that has to do with Danaher, I have no idea.
No, it's because the Rails brothers have a stake.
Oh, right. That's how we got there.
Right.
Got
Command,
it. Sorry.
I just pointed that out.
We started though in Germany with the German company that's
Sartorius
competes
is a
in certain
competitor
areas that
Danaher
does.
And then I
that
thought we
Danaher
had to mention the Copilot because one of the reasons why Microsoft's been doing so poorly is people feel that Copilot is much ado about nothing.
Part of the fun is retracing our steps to where we got to a given subject. Yeah?
Well, I went to the M&T Bank.
Hey, I may have mentioned this morning about provisions like at M&T and Key and Wells and Goldman and B of A.
I know. Now, M&T, by the way, they were not on the map until the Ravens played at M&T Stadium. And I want to thank Eric DaCosta, who is the general manager of the Ravens and watches us constantly. Great fan of our show.
Let's get the opening bell at the big board today. It's the CEO of venture capital firm Firstmark, Rick Heitzman and Company, at the NASDAQ. It's glad celebrating its hashtag Spirit Day to combat LGBTQ plus bullying.
Yes, and it's understated how much bullying there is, and it's really terrible. Just understated because it's frankly, I find there's universities that want to cover it up. I find that there are people who are the undercurrent, and my daughter is doing suicide work, and believe it or not,
it's
huge.
It's a real issue.
Yeah, it's
real issue. Jim, 25 points once again from 5,900.
Man, you never want to get tired of a bull because that's just a big mistake. But I love a bull that every day coming into a new area that's leading us, and that's where we are.
Goldman looking at positioning today, or actually earlier in the week, where they argue, look at the median return from middle of October to the end of the year, about 7%, would put you at 62 and change, 6,200 plus.
Then you'd be starting to talk about the banks having another re-rating because people remember these, when you look at Goldman and Morgan Stanley, which had a blowout number yesterday, because the assets are up so much, David, because the wealth management, because the market's going up, that's just fuel to the fire. Without M&A, without IPO, can you imagine what happens when they get those?
Yeah, no, listen, Morgan Stanley, we were talking about it. Leslie was talking with Ted.
That was a great interview.
Yesterday.
And what did she start with? Pick and picker.
Well, he started with it.
No, he said I'm Ted Pick.
Yeah.
She said I'm Leslie Picker, pick and picker. And then it follows up with a great interview.
Yeah, there you go.
Kind of takes us to Uber Expedia.
You want to go there? I'll go there if you want.
Yes.
I'm going to, full transparency here, sort of back in sort of how, I've been reporting, as many of our audience knows, since I walked in the door here at CNBC 31 years ago in M&A.
What?
Perhaps not as much.
31 years ago?
Yeah, it's over 31 years.
Oh my God, was that did you come from institutional investor?
Yes. Can I just continue for a moment here? So we have this story from the FT. You see the headline there. A few weeks ago, banker talk. Somebody said, hey, you know what? Uber might be thinking about doing transformative, I think was the word used. Transformative deal. Thinking about something like that. I'm like, oh, that's interesting. And I made some calls, and I got nowhere, really, in terms of trying to understand whether there had been what the target might be. Expedia was #1 on the list. Talked to a few investors as well. It's like, do you think, could it be? Obviously, Dara, the CEO of Uber, was the CEO of Expedia. He's in the Diller camp. Diller controlled Expedia. What would be the thinking behind something like that? But ultimately, sort of said, well, I cannot in any way confirm that there are any discussions. And for me, the bar has always been, are the two companies talking? Because companies always think about doing things. That's one of the things you do as a company. What should we do? We're generating a lot of cash at Uber now. Good for us. What should we do? Is there a better way to use that cash as opposed to just buying back stock? So companies think about these things all the time.
Was this during the Peter
The bar
Kern-
has never
Peter
been for
Kern
me to report on a company thinking about doing things. By the way, it can inform the market, so I don't necessarily say it's the wrong approach.
Absolutely.
But in this case, guys, a few weeks ago, heard this transformative thing, banker talk, frankly. Sometimes bankers like to get an idea out there into the marketplace, almost to help them convince the company that perhaps they really should be thinking about doing it. The FT reports they are thinking about it or have explored it, but they didn't approach and they didn't discuss. And that's where we stand. Could you see something like that really happening? It would lower their growth rate at Uber, hence why you're seeing the stock sell off a bit. Again, even though it doesn't appear as though it's gone anywhere.
Sure.
I think the bigger takeaway is Uber's probably thinking about things it can do, Jim, as it generates more cash.
Right.
And as it approaches sort of this new world, so to speak.
Okay, so David,
AI,
is there any
driverless
chance?
and everything else.
Is there any chance? Oh, you can't go over Booking because Booking is 146
I don't,
billion.
would you create some sort of super app? Would it really make sense? Again, Expedia is coming around. They've done a lot. They've made some real progress there. It does grow slower, obviously. There are those who believe it is undervalued. They fixed their technology stack to a certain extent. And as I said, Uber has been a thoughtful company. They are generating cash. But I just want to give full transparency on sort of my process. And, when you do talk to other people about this possibility, it gets out there.
Oh, absolutely. Well, look, a super app.
Not sure that means much.
A super app would be really cool.
Think so?
I mean, yeah, but I mean, it would be cooler for us as customers. Yeah, because I want to go. You land in a city that you just booked an Uber. You booked an Expedia.
Right.
When I owned an inn, we used Expedia. We used Hotels Tonight. It would all be one comprehensive thing.
Okay.
And it would be magnificent for customers. So I totally get it.
So again, no approach, no discussion. At least according to those who chose to report this exploring story. That said, I didn't come up with anything as well a few weeks ago when I first heard it. Elevance Health is a name we got to hit now, guys. Down 17%. Our viewers may recall United Healthcare, one of the largest insurers, a $500+ billion behemoth, also got hit on Medicaid, on medical loss ratio. Here, you're talking about a company that has 40% of its, I think, revenues are related to Medicaid. So I believe as a percentage, that's the largest. Some of our viewers may wonder, well, wait a second, Medicaid, that's government, that's state, that's low income. Why are there insurers involved? Well, the states outsource Medicaid to managed care companies to try to lower the overall costs, and then they basically guarantee them a margin on their business. Well, they've been mispricing these policies now. Why? Well, it may be that you had a healthcare system that was understaffed for quite some time. People were not getting the care they needed. They were waiting. Things have normalized. People have gone to the doctor. They've realized there are certain things they have to deal with. Costs have gone up, and rather substantially. And so you're talking about a medical loss ratio, if you back into them being about 200 basis points above broadly at Elevance, and if it's all Medicaid related, could be a 400+ basis point differential, higher on the medical loss ratio. But what's important to note here is that the states make this up over time. You get reimbursed over time from the states, not right away, not in the same year.
Oh, so
while
they'll
they're
catch
taking
up.
guidance
They'll catch
down
up.
this year, they will catch up.
Okay, that's important. People should know this is Anthem, the old Anthem.
The old Anthem.
Blue Cross Blue Shield.
Correct.
A very good company. all these companies do a pretty good job. Humana was the one that didn't fell down on the stars, but UNH
Humana fell down on Medicare, Medicare
Medical Advantage. But I would
Not
tell you
Medicaid.
that if you really want to just go in there, Centene offers a product that they make money on, even low Medicaid.
Their Medicaid, right,
Their Medicaid's
yes.
very good. The late Michael Neidorff set that up. And then UNH is starting to come back because that's considered to be the blue chip, obviously, Dow stock.
And then other names, I haven't seen CVS. CVS, it's 12% of their insurance business is Medicaid, and Aetna is only 30% of CVS overall. So,
Yeah.
that's it's small.
Yeah, not the
That's small.
It's closure stores. That was good for CVS, but it just turns out that there's landmines in the health insurance business.
Okay, we're up 1%, so we need to come down. And we have
It's
shit.
just incredible. I'd love to be in the property casualty business right now. Of course, that's part of the CPI problem.
Wow, look at that.
That's a new high on Travelers. Premiums at a record, even with higher cat losses.
It's just incredible. It does get the combined ratio, the key number that went from 90 to 85. And people feel that you can raise rates, obviously. Now, if you want to be in it and you feel like you missed Travelers, please go buy Chubb, which is just a magnificent company, even though it's up 6 and at $299, I think the thing is radically undervalued. Chubb
Yeah.
is still cheap.
Chubb,
13 times earnings.
CB.
Doesn't hurt either.
No, again, I feel like I don't want to be a Pollyanna, but a lot of companies do very well at this point in the yield curve.
Sorry, Jim.
A lot of companies are doing very, very well because they've been able to raise fees.
You will not do that to my room.
Real quick, Poly market is not going to be the best gauge here for you, Oliver.
About the details, I'm just saying that the market must not believe it because all these things have skewed, hard. So I get it. The polls are all even still, but it's kind of interesting to see the market doesn't really care about the prediction stuff so much.
No.
Yeah, they shouldn't. If you're looking at the skew between the Senate race in Arizona and where the presidential is,
Talking politics,
the
huh?
dispersion
586.
between, it would be something that would be an anomaly. The same thing would be in North Carolina. So that's where Poly market and a lot of these polls differ. That's why I would discount Poly.
Sure. Well, Calci 57, yeah. All right. Appreciate it, KG. Good stuff. Appreciate the look at levels. Let's go to Dan King Hall joining us from New York. We got some stocks to talk about. CSX first, because that's kind of putting a little bit of little crimp in our side here this morning, Diane.
Yeah, CSX is under pressure this morning off the back of its latest quarterly numbers. The railroad operator reporting adjusted EPS came in at 46 cents a share. That was weaker than expected. It did report revenue coming in at $3.62 billion, but it missed there as well. So it missed on both the top and bottom line. Shares are off nearly 5% at the moment, about 4.75% at the moment. They talked about some of the challenges that they've been facing recently, and they talked about impact down the line. They cited the hurricanes. They flagged the hurricanes as a weight on margins for the second half of the year. Of course, the CSX network operates along
Hurricanes,
the eastern seaboard. And so they cited that as a challenge. They cited also sluggish coal market that they anticipate to cost it around $200 million in
Hurricane.
fourth quarter sales. They also talked about lower fuel prices actually potentially being a challenge for them. They did have some wins in certain markets, but not enough to offset the challenges from the hurricane. And then in terms of year-over-year growth, they cited some slowing there for international intermodal revenue. They do expect some improvement in domestic momentum, but again, not enough where the market feels like this is a buying opportunity. The fact that they missed on both the top and bottom line and the challenges that are expected in the road ahead is causing some pressure for CSX right now.
Really?
The rail ahead, perhaps. The road ahead or the rail ahead, right?
Yeah.
Bad train pun.
Yeah.
You weren't funny.
Right. So, look, I think that it's kind of hitting the whole group. And yesterday we had a pretty good day for the sector. CSX hasn't really been hasn't been a good trade either.
You're not funny.
So, I don't know. I guess the JB Hunt move kind of giving some back as well. So whether it's road, if it's rail, all the industrial kind of transport's taking a pause. Yesterday was almost a real breakout, though, for this group. So, all right, let's talk some other travel. Let's talk getting around with Uber. This is pretty interesting that potentially they might be interested in Expedia. I think this is a pretty fun story.
Yeah. I do. I think this is a good story, especially for Expedia. Expedia needs Uber more than Uber needs Expedia. So this is according to a report in the Financial Times.
The
That
5840 put's what I'm watching here.
Offer for Expedia. Again, this is not official talks at this point, but there have been reportedly conversations of between the two. And keep in mind, Dara Khosrowshahi, the CEO of Uber, came from Expedia. So he was the CEO of Expedia from 05 to 2017. He is still on the board. So in terms of any future conversations, he would, kind of take a backseat in terms of that. And again, no formal approach or a formal offer is on the table, but they are reportedly in talks of a conversation that would kind of lend itself to Uber being essentially a super app. Uber has expanded what it does, so it's not just, ordering up wheels on the ground. You can order food, it does groceries.
Missed a good opportunity right there.
Expand its wheelhouse in terms of the offerings that it potentially has, because besides Expedia's namesake brand, of course, we know it owns Vrbo, so it has that as well, Hotels.com. So it would give Uber even greater diversity in terms of the offerings that it has within the app.
Okay. I mean, I guess
Uber.
It's not crazy. Why not? I mean, Uber, I feel like also at this point, Khosrowshahi's kind of got like a license to spend in a way, because they have proven so many critics wrong at so many turns.
That's right.
And have really been able to hit kind of a smooth pace.
Well, yeah.
Expedia also up pretty big too, so I guess it's a real kind of, the market's interpreting it as a real possibility.
Yeah, and again, as I mentioned earlier, Expedia definitely needs this more because, we've had this conversation.
Uber has had a 4-day sell-off here.
Agreed.
Expedia to booking.
She agrees.
We don't even account Airbnb in this conversation anymore. That's kind of off the table. But Expedia has been trailing.
These are at
booking, so
$4.50 now.
Like this gives it more, just more support. And you can
I thought I
especially
just
see
had
that in the
these on
share
here.
reaction for Expedia today. Now, Uber did get a
Oh,
little
I'm
thing
looking
today
at
in terms of
SPY.
the analyst outlook on the stock, mixed outlook. Now, it did get a downgrade from Daiwa. They did raise their
420.
price target. So they downgraded it to a neutral. They previously had it as outperform. Their new price target, though, is increased up to $84 a share. So clearly they still see some more room to run in terms of the share price, but their view on the buying opportunity here is a little more limited right now. They talk about the risk from the robotaxi model and the impact that will have
420.
to the Uber network as one of the
410.
issues, because they see Uber as having less control over pricing. But again, with this conversation with Expedia, that would certainly balance out any challenges it has within its just general wheels on the ground.
True. Okay. I mean, Uber's sitting right at the highs. A little bit of a pullback on this, but as we were talking about earlier, transports in general not doing great. But maybe if they're going to spend on a deal, market not crazy about it, but it's also not down a ton either. So if it is down because of this, that's not a lot. And I do feel that they might be better off, like, if they are going to go for them, maybe wait a little longer, because I feel like AI is going to be very disruptive to a lot of these booking sites. It just feels like that market still is too saturated, and that it makes sense maybe to have some consolidation or something. Diane, before I let you go, one big down mover this morning. For
But
those
these
in
at
the
410,
healthcare space,
420.
Elevance and insurers down pretty big. United Health got hit yesterday, and UNH is down again today. So it seems like some of the pricing around Medicaid and other
$4.
medical cost ratios too is a problem, or what's going on?
It's been a challenge for
Give
the
me
healthcare
pissy.
sector. As you mentioned, United Health had issues this week as well with regard to some of the pricing. In terms of their latest quarterly numbers, Elevance reported mixed results. Adjusted EPS came in at $8.37 a share. That was weaker than expected. Revenue came in at $44.72 billion. That was better than expected, but the weakness has to do with the
Okay,
Medicaid
we're
piece,
squeezing.
as you said. They flagged out on their earnings. They talked about, quote, unprecedented challenges in the Medicaid business. Medical membership fell by 1.5 million to 45.8 million, and that is because of the decline in its Medicaid business, which they said would be a challenge, and in fact, it was.
All right. Great stuff. Thank you very much, Johnny King Hall.
That was
Taking
good
us through the news
stuff.
there and the earnings. Great stuff. Good perspective on what's moving this morning. Stocks, they're hanging in there, but we definitely pulled back a little bit. Nvidia's still up, though, about $3.50. So no reason to panic. Let's talk some Netflix when we come back. As we look at the streaming world, Netflix down about 1.5%. But the company has been a rock. It's been reliable. We'll get ready for the earnings with shares sitting real close to all-time highs.
Netflix did pull back. Might be a good watch here. You hit my support. Netflix, for some reason I had 691.
Available anytime,
38.
anywhere, on any device, for free. Schwab Network.
Hey, honey. Jenny?
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deep.
It's not elevated. I'm got alert set here for Netflix at 691.38, and we had a pullback there this morning. For any of you Netflix lovers, is there any reason behind the pullback here? We could drop a lot more. But now you're at the 50-day, a little below it. And you're at the 63. 50-day SMA, 63 EMA. Yes, I said it. And on the weekly, we breached the 9, which means we could drop another $19. Jim's watching the SPX put here. He's got the 5840s in his eyesight. It's at 390 right now. 380, we could get us a nice little bounce here and then a reversal. We're at 370. 360. I was just dreaming of that number. Just watching it real close here. Crowd's going wild. Sports arena. Jim's looking at the 5-minute. He's now going to change this over to the 1 minute. He also has a problem right now with the air turning on here. These are 360. We're getting close to the VWAP. Close to the VWAP. Oh, Bobby's here. Spies at the VWAP. Spy just hit the VWAP. Randy. $54.80 puts are now at $3. $2.95. Has anybody got the balls that I have right in here right now in this room? No. Right here at 280. I dare you. $58.40s. Can we get them at 280? SPY just hit the 200. Now I'm playing with a different 200 these days. I've got the EMA on here with the SMA. The crowd's going wild at Sports Arena. Jimmy sees 360. We were at 2 something there just a bit ago. I should have grabbed him. He tried. But he does not want to buy him here. What time is it? Oh shit, it's 25 minutes. Jimmy doesn't feel it. Baba is now at $100. Baba is now at $100. Baba's at $100. Oh, looky. 360 to 460. 510. Yummy. The crowd doesn't know what to think. How in the hell did he know that? How did he figure that out? La. Okay, we're retesting. Five, 10. What? Turned down for what? Always clean as Jim.
Hello?
Yeah.
Hey. My name is Becky from Senior Benefits. How are you today?
$6.10. Now I'm going to look at the calls. Well, where are we? SPX. We got a double bottom. 55.75s are at 370. With 70s. $58.75s at 330. Hmm. $58.75 calls were at 280, 285. The 5875s are at 285 right here. Are we going to hit the 200? That's the question. If not, I'll get the call here at 250. I forgot what time of day I took my big play yesterday. $58.75 calls. There's my little scalp opportunity. 370 to 320. 270 to 320. I think I could have got 250, but it wasn't. I don't think so. It had been a couple of seconds sharper. See if we retest one more time. Megaphone. I'll be right back. Get my lunch ready.
It's pretty reliable, especially after we've seen financials do so well. A lot of great messaging there. It seems like a market where if there's money coming into the sector, which there has been in the past week, and you've got a big winner already there, like if they're buying some of the laggards, and just buying up generally the financials,
like yesterday,
company that's done so well already, you would think the momentum would continue. But we're going to see how Mr. Joe Teagate trades it. Thanks, Jeff. Joe's portfolio manager of the Rational Equity Armor Fund. What's the rational move for a stock up this much, but does have a pretty beast, reliable business model, Joe?
Yeah, I love the name, and it's really just like the hot spot of the American economy. A lot of businesses use this card, kind of higher end consumer. Maybe this and Costco is like the sign of the American economy's strength. Like that type of consumer just continues to keep on chugging and keeps on pushing this economy higher and higher. That's just a tremendous run. Right now, today, in this stock market, it seems tough to really get a huge positive upside surprise. Historically, on earnings, American Express, if I could speak, moves about 3.5%. The market's pricing in about a 4.5% move. So I'm going to start with that to design my trade, Oliver. Just looking at a trade that expires tomorrow. Right now, around 285. As close as they have to money strike for American Express. I'm going to look at selling the 275, 270 put spread. On top of that, go to the upside, I'm going to sell the 295, 300 call spread. Package that together, that's an iron condor. I'm going to collect 235 for this trade, which gives me a break even about right at that 4.5% market maker move. So if the move is a historically average move, this is going to be a winning trade for me. If it's bigger than the market maker expected move, then I will be a loser on this trade. I really like this setup. It's close to 1-to-1 payout, and I think I got a lot better than 1-to-1 odds in my favor here.
All right. Seems like a pretty good way to approach it. Give yourself a
285.
Yeah, good, really wide spot for this to end up closing tomorrow after the earnings. So yeah, I really like this trade. I'm just expecting, volatility is really high out there in the market. It's giving market makers and everyone just paying more for these moves right now. I don't really see a huge surprise out of this earnings event. And even if there is a big surprise, I got chances to win in both ways. So really like my chances here. We're looking at $12 to the downside, $13 to the upside. Will still be a winner, and I think decent enough chance that it'll be within this range. If it's not, I know my max loss. I'm capped out here. I'll be max loss of 265 here.
Okay.
It is what it is. Really
it is what it is.
This is not going to be like a YOLO. This is very risky. It's either going to be a winner of 235 or a loser a little bit or close to the whole 265 if it's bigger move.
Well, it seems like the odds are in your favor still. But obviously you've got the
tune in on him, Anthony.
The more you're gonna have to pay for it, so you kind of just gotta pick a spot, right? You don't want to just break even. We're here trying to make some money.
It is what it is.
You're gonna have to sacrifice something. So it's I think it's a pretty fun way to do it.
No.
Yeah, and then, by the way, just might be a loser tomorrow. I think if I do this trade 10 times, I'm about to be a winner 6 or 7 times.
Bye.
I just want to keep on finding trades.
Hit the 200 this morning on 5 minutes.
Small trades like this. It can be a winner in the long run. Might be a loser tomorrow after the earnings. We'll wait and see, but I like my chances.
Okay.
Oh.
And American Express is pretty consistent. It doesn't get super volatile. And when it does,
he likes his chances.
To the upside, but we also have had a pretty steady kind of up and to the right. So it seems like a decent one to trade against the possibility of massive swings and surprise. So it kind of seems like, just like I was talking with Jeff, that we're kind of on the same page. Doesn't seem like a potential for massive error in their earnings. Like the trade. Thanks, Joe.
Yeah, thank you for having me.
Absolutely. Mr. T. Gay, portfolio manager of the Rational Equity Armor.
58.75s are now at 350.
Gonna shift over into entertainment,
from 290
and some streaming. Disney has been grinding throughout the last 2.5 months since earnings, but still a pretty muted player for the year with small gains in 2024.
Megaphone.
At an optimistic approach coming up next.
Boom, boom. $3.80. As Jim has his lunch. Jim just made it $3.90, $100 bill. $100 bill from $2.90 to $4. The crowd doesn't know what to do right now. Oh my God. 4:30. I'm impressed.
Number one broker here for the number one hitmaker.
Thanks for swinging by.
Schwab.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device.
She's right. I am available on any device.
Schwab Network.
Let's keep doing some trading. Tony Zenni joins us from Options Plays, chief strategist, looking at Disney. Tony, good to have you back on the show. Feels like it's been a minute. So, how come Disney's on your radar?
Yeah, what's going on?
Yeah, this is exactly right. I think right before the break, you called this stock muted, and I think that's exactly what we've seen. You know, since April, the stock has really struggled. With concerns around travel with regards to theme park, demand. Streaming hasn't been particularly a big hit, but I think Disney is starting to turn a corner around for quite a few of their businesses. Disney Plus is looking like it's going to hit profitability here in the next quarter. You have ESPN launching in early 2025. You have theme park demand that is slowly, seemingly starting to show some signs of demand here. And I think that the stock price has reflected this kind of concern over the past, call it 6 months or so. And there's some signs that investors are starting to pay attention here again. If you look at the stock, the price, the chart, we've started to break. We've completed this bottoming formation here over the past 2 months or so, and it's starting to show some signs of life here. We've started to break out above this $95 level, which was a bit of resistance level that the stock has struggled with for the last 2 months or so. We've kind of managed to get back above that line, and I think that there's a possibility that Disney starts to trade a little bit higher, and there's a lot more optimism here going forward, back into the low 100s as the upside target here for Disney.
Okay, and the stock's got earnings still pretty far ways away. So when you look at the timing for this, you're going to be going basically to the end of the year. You're going to obviously get that. So that feels like it makes sense. That after what we saw for airlines, travel, consumer. I mean, there's a lot of things that point to potentially a strong Disney business.
Yeah, that's exactly right. Over the last couple of months, we really kind of had some concerns around the labor market and whether or not the U.S. consumer was still as resilient as we thought they were. Obviously, the September jobs number really kind of turned things around here, and I think that is also one of the things that's going to boost that. As you said in the show a few minutes ago, airlines have really provided a bit of a boost here for travel over the last couple of days with regards to, look at United Airlines up 12% yesterday. So travel clearly really is still one of the sectors that U.S. consumers are still spending on, and the theme park is definitely one of the businesses that has struggled over the past few quarters for Disney, and I think there's some optimism around that. And like you said, earnings cut is in about 30 days or so for Disney, and this trade goes out that I'm laying out here going out to December. I think the way to play this is to use a vertical spread where you're effectively buying upside, but doing so in a way with limited amounts of risk, kind of going out to the December expiration. I'm buying the 95 strike call option, but at the same time selling the 110 call option against that. Net here, you're paying about $4.75 earlier today for that debit spread. That translates to less than about 5% of the stock's value that is at risk here, with about over a 2-to-1 risk to reward ratio if Disney does resume back into that 110 level here by that December expiration. And with an earnings catalyst coming up, I think that very well could be, what the stock needs to propel itself back towards these levels that was trading at prior to
58.40 put
the summer in April and May.
Okay, so buy the 95, sell the 110, and that does seem it seems like a good combo because the 110 still does kind of seem like a bit of a reach for Disney. You're just kind of asking for this trend in the last 2 months just to keep going, and for this to not break down by the time you get to expiry.
Yeah, that's exactly right. We're really looking at Disney to resume back to its price that it was at prior to its earnings 2 quarters ago. We have seen both revenue and net income show quite a bit of positive signs from 2 quarters ago. Certainly we've had higher revenues, higher net income.
$7.
So I think from a company perspective, from a business perspective, it very well should trade back towards those levels, and we've had some multiple contraction here over the last couple of quarters. We're trading about 18 times
Nailed it
right now, which I think is certainly on the low end here for Disney, especially given kind of the outlook that we currently have with the streaming business and ESPN coming online at the end of towards the beginning of next year. That's going to be a huge positive for that streaming business. And then as long as travel can stay resilient and theme parks can see some demand pickup, I think this very much should be trading back into that 20-21 times forward earnings, which would easily bring us back to that 110 level and beyond, given where EPS is today.
Okay. All right.
Nice.
Trade bullish on the mouse. Thanks, Tony. Appreciate it. Good stuff. Nice details.
Thanks, Oliver.
Technical work too on the pickup in momentum a little bit here along the edges for Disney, despite its deep underperformance to the market. Some optimism. Thanks, Tony Zhang, chief strategist at Options Play. We got charts and we got more earnings to get ready for when we come back. But first, a sneak peek. My interview.
$2.90 to $7.
Episode of Market Overtime. The former presidential candidate for the Republican Party has a new book out. We discussed policy differences between the candidates and try to get some insight onto at least the Republican Party's mindset on inflation and the economy, issues facing us right now. Check it out.
Very good.
Vivek, one of the things that you've talked about quite a bit in your vision of the future is a massive streamlining of federal operations. I've heard you say layoffs of up to 75% for government workers. I'm curious how that's economic positive, especially when you just told me that some of our biggest unemployment gains, as you see it, came from government workers. How do you stimulate the economy when you lay off, like, I don't know, 1.5, 1.7 million people day one?
I mean, 3/4 would be more than that, actually. So
you took federal, or right?
Federal, please.
Military and non-military, so that's a big number.
So let's start with non-military.
Okay.
I think that where I would start with the civilian civil service. This is the mother of the regulatory state that's acting as a wet blanket on the economy. A couple things have changed in the last year, maybe couple of years, that are really major opportunities. These are not small, these are big in terms of what I'm talking about and their impact. One is the overturning of Chevron deference by the Supreme Court that says that federal courts no longer have to defer to agency interpretations of the law. And number two is a case called West Virginia versus the
Yeah, what do you think about them
which
cookies?
says that if a regulation deals with a major economic policy question, then it had to be passed by Congress rather than being written into law by the EPA or the FDA or the SEC or the FTC and so on. This is seismic. And so when we think about what's holding back American exceptionalism, American capitalism, American industrial production, American productivity, I think at the top of that list is the overgrown regulatory state in America. The Supreme Court has now laid out the red carpet for taming that regulatory state. And part of the problem is when you got a bunch of bureaucrats showing up to work who shouldn't have had that job in the first place, they find things to do.
Okay.
So I'm talking about
Any idea
mass
where?
rescissions of the regulations, mass firings across the board. And then, look, we actually have more open jobs right now in the private sector than we have people looking for work. You know what? Many of those people can find honest work in the private sector, and you could even argue that in the medium term, that could be a pro-growth measure on multiple counts.
I don't know. Are they going to go work for NVIDIA? I'm trying to think about where the biggest growth is right now. Are these people going to have skill sets to transfer over to those open jobs, Vivek, or how do you see that playing out?
Well, look, I think that the reality is the number one service we're going to do by letting the federal bureaucracy go is by ungirding the regulatory state from the private sector, all right? Unshackle the private sector from the clasp of that regulatory state so we can drill, frack, burn coal, embrace nuclear energy, embrace innovation even in new sectors ranging from AI to digital currency, Bitcoin to the future of crypto, all in the private sector. Those are just examples of areas that have been immensely constrained by the three-letter agencies in the regulatory state. Now, where those people find jobs, I'll just give you my own perspective. I hope this isn't a controversial one. I don't think the job of the federal government is to provide employment opportunity through work in the government. So if that's what we're relying on the federal government to do, then I think we're making a bad mistake.
Sure. Yeah.
Where we're saying that our unemployment numbers are going to go up if the federal government doesn't employ them. I think that is, with due respect, in my view, a mistaken vision of the role of the federal government. I think the role of government broadly is to provide for the security of its people and to protect private property rights, not to ensure employment through government.
Yeah.
And if others disagree with that view, they're entitled to
Sure.
that view. But I think the majority of Americans are with me on this one.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Waiting for my play of the day.
All right, let's talk some charts. Let's get ready for earnings. Mr. Rick Duquette here on the technicals. Jenny Horn in the newsroom looking at the numbers. Regions Financial coming out tomorrow morning. It's all in the name there.
It is all of it. What we've talked about this week is the strength of banks, but I think even more encouraging has been the tone out of these regionals. And this name has been no exception. It's having a great week, and now we've seen a pretty nice run up into this earnings report. So that does put the bar higher, but I think given the tone we've heard from every other sector in the overall banking space, this has to be, like a pretty solid tone as we go into this print. I will say that right now there is still, Streeter is expecting around a profit of 53 cents a share. That would be up 6%. Also would mark some sequential growth. And we saw previously they were able to top estimates in their last quarter by about 6%. For the fiscal year, we are still expecting, though, earnings around $2 a share. That would be actually down almost 11% from a year ago. However, earnings is expected to rise about 9.5% now in fiscal 2025. So despite being on earnings, they have remained pretty unchanged again since their last. As earnings expectations, have remained pretty unchanged since the last report. Second quarter adjusted revenue came in around $1.7 billion. This really highlighted some of these ongoing pressures from higher interest rates as well as the reduced borrowing demand. But their guidance now for their to be reported third quarter net interest income has predicted only modest increases, which has raised the concern about their growing profitability given the economic uncertainties. Again, though, I think that if there's any uncertainties, those should be cleared this week, considering the tone we've heard from all of the other banks. We haven't seen a bank really miss the mark yet, so I think expectations are high. There's 10 buys, 15 holds, 1 underperform, no sells. Average price target is around $24. That would indicate some upside from here, but also we've had a great week. So now we're at a higher bar, obviously, in terms of price going into this print.
Well said. Rick, this chart is a ascending wedge. Is that what it is?
Well, rising wedges typically the way they phrase it, and this is usually regarded as a little bit more of a bearish bias in terms of patterns here, but really, it's very slight when we talk about things like this. Really, it can go either way. It's certainly not a crystal ball that's going to tell you which way it's going to break.
So how do we determine kind of what is it? The RSI is diverging bearishly.
There's a few things we could look at here.
Went to 6.
Just to begin, I would say that it was important that we crossed above this repeated ceiling that we hit near this green line, 2347. Now we're kind of grinding up a little bit here. We are still, actually we're modestly down on the day here, but we have tested the upper boundary of our wedge several times here. When we do look at RSI, we have two competing lines here in terms of momentum. Green line going across these lows, which suggests that we are still in an uptrend because we are above that 50 midline, but we also have this downward sloping red line here that could be something else to consider as we go forward here. The thing that I would really look for, though, is that we're above the 50 midline and RSI is making a new relative high along with price. So we're not really getting the divergence or the mismatch between momentum and RSI. What the bulls would want to see next would be a cross above the overbought area and break above that red trend line. If we're moving higher, we've got our +1 standard deviation channel that
watching the calls now.
Determine a potential resistance spot. 2518, one standard deviation above our blue linear regression line. If we were to move lower, perhaps a retest of our old resistance, our green line could be supportive, 2347. Then our 21-day EMA comes in at 2317. So, some points
5870s.
We've also got this volume node and our linear regression line and our trend line kind of all around that same area as well.
Okay. Pretty good looking chart for the most part, but maybe slowing of momentum in this uptrend, which is kind of the message of that rising wedge.
Yeah, and as I've said this many times, as we approach an earnings event or some kind of known event, it's really not uncommon for momentum to slow a little bit. So once again, I wouldn't say this is anything too concerning at this point here, but then we do have earnings which could rewrite the whole story instantly.
Okay. Still, that a regional bank looks this good is quite impressive off the low from the year, 75%. So even though it's right on pace with the market at 24-25% on the year, I mean, quite a dip buying rally it has been. Okay. Let's talk one that hasn't found
That's
any
SPX.
dip buying. Schlumberger. Rough trade, rough stock, Jenny.
Yeah, it really is like a stark contrast. I mean, to the sentiment we were just talking about with the banks is everything you can see from this chart. Sure, we've recovered about 13% off of lows, around 38.66 a share, but we've also pulled back about 29% now from highs not seen in months at this point. When you have to go way back earlier this year, as you can see demonstrated from the yearly chart, it has felt just like the slower grind to the downside. And earnings, could they be any upside? I mean, we are expecting some growth. So overall, adjusted earnings are expected to come in around 88 cents a share. That would mark actually a 14% increase from a year ago. Revenue is expected to be around $9.3 billion. Also would mark a 12% rise from a year ago. They've been able to beat expectations pretty consistently. Last quarter, we did see they exceeded on top and bottom line. As they said, their international business helped offset the weakness we've seen in the North America region. Regarding now second half expectations, the company did express confidence in this continued momentum in its international markets and solid digital sales, and they stated they do expect that their cost efficiency program could help expand margins and they could achieve now full year EBITDA in the mid-teens. So this is the world's largest off-field services company. So it gives a good read, I think, on that specific component of energy. But as we know, I mean, energy prices becoming more and more favorable. We've seen that should be a good thing for some of these companies, but we'll have to see how that translates obviously into their quarterly earnings because we haven't really gotten a good read on that energy space as far as the financials yet.
Okay. Yeah, the problem here is commodity and maybe company combined. The trend is pretty ugly, and I think even worse than the chart of crude oil by some standards. Rick, what do you see though in kind of the near term?
Well, when you look at the very short term, you can see that we have made some progress off of these 52-week lows near 38.66. However, you have to kind of look at the bigger picture here, and as you said, it's been notably sliding to the downside here. We've got our line starting here, connecting these subsequent highs, duplicated it, put it across the lows, gives us a decent boundary to the downside here. So we did wind up getting a little bit of a lift. We're up about a little less than 13% off those lows. Kind of struggling to recapture our moving averages here, though. We are kind of right on the nose of our yellow 21-day EMA. The orange 63-day EMA has so far remained out of reach during the past few days here after we fell below it pretty sharply a few days ago here. And, you know, beyond that, we've got our trend line to contend with as well. We're still overall in a downtrend here. When we do look at RSI, our measure of momentum, we can see that once again we have kind of a triangular shape with competing trend lines, one sloping downward, one sloping upward here. However, in the shorter term, we had a much steeper green trend line that has been broken, and now we are really struggling to hang on to that 50 midline. So a close below our moving averages and a close on the RSI below the 50 midline would be quite more of a bearish development at this point here. So in terms of support and resistance, trend line lines up with a volume node here, so around 43.50 or so. That would be an area to watch here. Then our next low point, 40.53, then our yearly lows beyond that. To the upside, we'd want to clear that 63-day EMA. Then we have a ceiling here in our red line, 46.
No ceilings.
That level topped out there multiple times here. So we could make get a bit of a boost if we manage to clear that that area there. And then our purple 252-day EMA and our volume profile point of control are not too far beyond that.
Okay. Sounds like if we can get a few things go right for earnings, and there is some potential here if it first gets above those short-term moving averages. Some hope in the SLP chart. Maybe not quite as bad in the near term as in the long-term trend. Last one has been doing the job of a consumer staple, basically just kind of steady and reliable. Procter & Gamble. Jenny, how are we looking?
Steady and reliable is a great way to put it, because I was looking at basically like max time frame on a weekly chart, and this name, you'd be hard pressed to find a better performing stock over the last 15 years than this name. It's just been a consistent uptrend. I know we pulled back ever so slightly, but we're only about 3% off of all-time highs here. So sitting in a pretty nice spot into earnings. This name, of course, does operate over 80 brands. Some of my favorite brands ever. I mean, Tide, Crest, Head & Shoulders, Cascade, Olay, Bounty, Pantene, Swiffer, just to name a few. So this is, to me, one of the ultimate household names, and also one where we could see some trade down effect. There is that right now throughout these like name brands where people are trying to find the
back to the 200
version.
here.
But I have to say, Tide, to me, there's no replacement. You cannot trade down when it comes to Tide. But as far as expectations, they've been able to deliver over the last 8 quarters. They've beaten bottom line trends over the last 8 quarters, trailing surprise of around 6%. Organic sales for the fiscal quarter are expected to have benefited from these strong pricing strategies, as well as a more favorable product mix and robust growth for some of their various segments. So when you look at their individual components, they are expecting organic sales to rise about 2% for beauty, 8% for grooming, 1% healthcare, 4% for this fabric and home care, and 3% for their baby, feminine, and family segment. However, I just realized this is a huge component of this report is all of their international exposure. China does remain a major concern as it's their second largest market. So they've been witnessing these brand-specific issues for their flagship beauty brand, SKI, which is influenced by these Japanese heritage. They said the company does expect those dynamics to improve over time, but they do not see a return to growth for that region for at least another quarter or two. They also do see some weakening volume trends also overseas in Europe and Asia Pacific, Middle East, and African countries. So all of that could then weigh on the healthy trends they're seeing here in North America. I just didn't realize the international exposure, frankly, that Procter & Gamble has.
Yeah, a good point, good stuff. Rick, steady as it goes?
Yeah, I mean, not necessarily the biggest mover in terms of volatility or net movement here, but really up 21% off the low. Very consistent uptrend here, mostly fitting within the boundaries of our little channel that we drew. Same deal. Just
little channel?
Yeah, just drew it across the lows, extrapolated it, put it across the highs. Matches pretty cleanly in terms of the highs that we reached. This was a notable area as well. You can see that we touched our purple 252-day EMA before getting a nice bounce once again, sending us up actually above the boundaries of our channel there, but it was not to be. We made our way back down. We held the line at these previous lows near about 166 or so. Now we are breaking out to the upside from our short-term downward sloping trend line. We've crossed above our moving averages. Could not quite break that red line though near 175, which was kind of where we were topping out during a small range that we saw recently here. When we look at RSI, we can also see a matching breakout from our trend line here, red line pointing downward here, and we push to the upside. Now we are once again above the 50 midline here. So in terms of resistance, our red line here, that's the first mark we'd want to beat here. Kind of not making a ton of progress though, but at least we're holding on to our moving average today, our yellow short-term 21-day EMA. Beyond that, the next stop would be the high points here, 177.94 to the downside. It would not be crazy to see a retest of our downward sloping trend line. Old resistance can become new support. It also happens to line up very closely with our orange 63-day EMA. Beyond that, the green line here, kind of double bottom around 166.
All right. And seems like it bounced right off the trend there. I mean, kind of a beautiful little continuation into a possible breakout of the near-term downtrend. So P&G, for a staple up 17.5% on the year, with the S&P's only up 25. That's pretty good. You know, lagging behind 8 percentage points, not too bad. Consistent. You know, what else do you want from a staple? Thank you, Rick. Thanks, Jenny, coming back. We've got a market meetup here. We'll assess the session, which is kind of having a failure to launch. Real good start from a couple key names, not translating elsewhere. Nvidia's still up, but chips also have kind of slowed down a little bit, lost some of the early energy, and the Russell's getting dinged pretty hard. Bonds selling off, still the highlight. Dollar continues to firm up. We'll run back through the market in a moment.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Yes, we are. Yes, we are.
All right, let's take a look at the session here as we're having a little bit of trouble. A few of the big AI winners, Nvidia and TSM, doing just fine, but the rest of the market a little weak, and even some of the other tech stuff dropped back. Diane King Hall back with us, our senior markets correspondent, and Mike McCurr, director at Schwab Advisor Services. kind of a little failure to launch here, Diane, but we're not in too bad a shape. We just
Nope.
kind of pulled back a little from the early strength.
Yeah, it looks like a little bit of a speed bump, but it looks like overall bullish sentiment remains. Yes, you have a little bit of pressure when you're thinking about small caps, but if you look at the strength in the tech sector, you're seeing that still, as you mentioned with TSM, NVIDIA had hit another high earlier in this session. And overall, what had given some buoyancy to the market as well outside of the chips was that better than expected economic data that we had. It shows that the macro picture is holding up well, retail sales coming in better than expected, up 0.4%. Even when you strip out autos, that was much better than expected. And jobless claims, there was a lot of worry about that coming into today, especially when you think about some of the idiosyncrasies that have occurred more broadly when we think about hurricanes and the expected impact that was to have to jobless claims.
We're at the 200 here.
241,000 for the week. That number better than expected. So it seems at least that there is a floor holding up some of the speed bump that we're seeing in the gains that we saw already in the session. But the day is still young.
Okay.
Correct.
It is. And, you know, we might still be able to turn this thing around, Mike. I mean, we've got good data this morning. I know bonds are selling off, but it doesn't seem like we should be upset about that. What do you think, Mike, is going to drive the action here? I mean, we got such a good report from one of the most important stocks out there, and we got good economic data. What's going on here?
Yeah, I wouldn't really read too much, to Diane's point, really read too much into some of the price action you're seeing intraday. You know, over the last week, we've certainly seen CPI, PPI come in a little bit hotter than investors and analysts had been expecting. And the read-through is that PCE will, of course, be a little bit stronger as well. But looking at some of the, internal performance, you look at yesterday, small caps, value, those really were the best performers. And it frankly tells me, and I'm sure other investors feel the same way, that inflation tail risks really aren't becoming too much of a factor right now for the overall market. If they were, if there was a fear that inflation was going to reaccelerate, change policy, you'd see the small caps and the value sectors, it would affect them to their detriment, and it hasn't. So I think, base case looking into the fourth quarter, economic growth is likely to continue to be firm. The things that could have those idiosyncratic effects on the overall activity, labor market, like the hurricanes, dense to demand, they're really not filtering through just yet. And the Fed, is still the direction of travel for their policy continues to be on the easing side with growth firm. And if earnings continue to come in strong, all of these provide tailwinds to the market and almost create this setup for a disinflationary boom. But we do have major events coming up in the next couple weeks, and I think that is likely to keep volatility elevated on the market.
Okay. Yeah, it does seem like VIX is just refusing to back down right now. However, in terms of the calendar this week, I mean, this was the big day, Diane. So if we fail and fade today, then it's not a great look, I don't think, for tomorrow. We got housing starts, permits, and some Fed speakers, but I mean, this is where all the news flow is hitting today.
It's true. I mean, a lot of the anticipation was coming into today was what would retail sales look like. But I think Mike makes a great point in terms of the issue of volatility circulating around the market right now. There's going to continue to be that overhang over the next, I mean, it's honestly less than 3 weeks away from the election. So that's a factor that we can't discount in terms of the, kind of nervousness that still hangs over the market. But one thing that we can look forward to today after the bell, we've got another member of the Mag 7 reporting. Netflix will be in focus. It's got a high bar to climb, though, in terms of what the expectations are for both EPS and revenue. Revenue, Street looking for more than 9.7 billion, or closer to 9.8 billion is what the Street is looking for. That's a little higher than what they guided for. And then we'll be looking to hear more about what net subscriber ads look like for Netflix. And by the way, of course, we want to hear more about, are they going to be raising prices? They haven't raised prices in a while. Is that the next thing that could be a catalyst for Netflix?
All right. That's going to be a fun one. I agree. I think that's important too. As the stock
Is it?
is sitting near highs.
That's right.
Mike, you got chart S&Ps. Hit me with the technical look.
Yeah, the technicals in the S&P is a textbook, bull rally going on. You've got all the moving averages ascending from the lower left to the upper right. We had a breakout from a technical triangle, I would say about, a month ago. That has accelerated or helped ignite the rally, in my technical opinion. And the only thing that really doesn't look that great for the S&P 500 right now is the breadth momentum. So that lower panel indicator, looking at the ratio of advancing issues to declining issues over a specific period that most technical analysts look at, the 10-day period. That's where we get our breadth thrusts and our breadth washouts. And even though the S&P continues to make new highs, really led by the larger capitalization companies, the Mag 7s out there, the breadth momentum isn't there, which tells me that the Army is not following the general trade.
All right. Good context. Thanks, Mike. Thanks, Diane. Appreciate the thoughts, guys. Trading 360 with Nicole Penalty is coming up. Thank you for joining Morning Trade Live. See you this afternoon at 2 p.m. This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is.
Well, I was dating this guy, and he got me into trading stocks.
Find out how good you are. It is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No, I have not.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Boom.
Good morning. We are 90 minutes into the trading day. Happy Thursday to you. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange on another record-setting day. We have a big show for you. I will first note retail sales stronger than expected. Jobless claims drop. Markets at new highs. We saw the Dow close at a record yesterday. We have a lot to discuss. In our 360 spotlight, we will focus on the earnings from Taiwan.
Yeah, what'd you think about that?
Hitting new all-time highs in reaction, right? That's bringing up NVIDIA and some of the other names to new highs as well. JMP Securities boosting the disruptor, and that is ServiceNow. So we'll take a look at that and have a trade for you. 360 round, we'll get a look there at the Netflix earnings that are due out today after the closing bell. In the meantime, here's a look at the numbers. Right now, you see markets higher. The S&P is up just 8 points right now, 58.50. The NASDAQ is up 1/3 of 1%. The Dow is up 1/4 of 1%, 43,174. We could see some closing records once again, folks, right? I said the Dow closed yesterday at a high. S&P new all-time highs here. We're also, the Russell, the small caps pulling back. Oil and gold are both higher. We are seeing the bonds moving, yields moving a little bit higher as the VIX is at 1946 and the dollar 103.60, so that's been showing some strength lately. And Bitcoin off that 68 handle, but still impressive with the moves we've seen of late, holding 67,210. That's down about 1% today. So I am joined now by Jenny Horn, markets correspondent here on Schwab Network, and I mentioned Taiwan Semi being the subject of the 360 spotlight, and so then we see some of the reactions from some of the numbers and new highs in a couple of places. Some of your thoughts on what you're watching.
Yeah, Nicole, to that point, $257 billion was how much the largest 10 companies in the stocks did gain within just the first 20 minutes of the market opening today. So it helps that obviously Taiwan Semi did hit new all-time highs, like you said, passing 209 pretty handily, now trading at around $211, just shy of $212 actually a share, comfortably beating for its third quarter as far as its profit and sales, sending its market valuation now to 1.08, I believe now just slightly over 1.08 trillion. It did briefly eclipse that $1 trillion mark earlier this year, but it's tracking to now close above 1 trillion, which then puts it as the 9th company to ever achieve so. So that just goes to show this is a hugely influential stock to the AI trade. I know there was some fears regarding ASML earlier this week, but I think this is a far better read on the health of the AI trade, given the fact that it's a massive beneficiary to NVIDIA, which is also having a pretty nice session, up 2.5%, and also lifting so many of these other peers. But the CEO did declare that they probably get the deepest and widest growth of anyone from the AI gold rush, as almost every AI innovator relies on this company to produce custom semiconductor chips. Two of its biggest clients, it helps, that are the two largest companies in the world, Apple and NVIDIA, also very valuable customers of TSM, obviously, that actually do very much rely on the necessities of its supply chain. They did also say that they expect this insane demand to just be the beginning, which I think is encouraging, and this was a beat and raise quarter. So hopefully this is a tone that continues throughout this earnings period. It's also encouraging that CapEx, which I know was somewhat of a concern throughout the year, they do anticipate it will tick up slightly higher than the $30 billion forecasted, but CapEx costs for the quarter edged out around $6.4 billion. So versus the $6.36 billion they've seen in the 3 preceding months. Encouraging that it's not rising at the same pace that we've seen for every quarter. I know it's high, but it's also moderating in terms of the CapEx spend.
Yeah, it's unbelievable. What's interesting is I'm able to actually make a list of new highs now. You know that things are feeling bullish or feeling good. Doesn't necessarily mean that's the direction of the market going forward, but I saw Taiwan Semi, I saw NVIDIA at new highs, I have Expedia at new highs, and the Dow and the S&P. Jenny Horn, great to see you, markets correspondent. Thank you for that. In the meantime, let's get some insights in the news shaping the markets. For that, we welcome in Katie Kaminsky's with us, Chief Investment Strategist, Alpha Simplex Group. Thank you for being here. Some of your thoughts on the market and where we could be headed as we are hitting some new highs here today.
Yes, I mean, it's an exciting day today to see some more positive momentum. Clearly, there was positive data coming out with retail sales. I think the things that are interesting to me is there's not a huge move in the markets, but it continues to be positive. I think for us who are looking at things from a more cross-asset perspective, You're really seeing bonds selling off some today as well, so yields are higher, and they have moved quite substantially in the last few weeks. The dollar is also stronger as well, and this has to do in some sense as well because of what we've seen, the ECB cutting rates today, but also there's more and more consensus that the Fed is going to take a little longer to be cutting rates. So I think that we're kind of a little bit in a holding pattern on that, and bonds are definitely reflecting that in today as well.
How do you interpret some of the economic news that has been coming in that's been showing some strength, right? Because now you talk about the Fed cutting, and there was a moment where people were hoping for 50 once again in November. That is gone. The conversation then began to 25 versus nothing. You know, for example, today we got retail sales a little stronger. We saw jobless claims falling. But, you know, people are still worried about inflation or labor market going forward. How do you interpret the mixed data that you get?
Well, I think what happened, and you highlighted this really well, and what we have seen is a clear recalibration of Fed expectations this month, and that's why you see the dollar rallying so much, because clearly the dollar was under pressure with the anticipation of aggressive cuts. But as you've seen more data come in positively, it has definitely shifted the narrative that the economic scenario or the economic conditions that we're in right now are not that dire. They actually look reasonably positive, and this means that there's not as much pressure on the Fed to cut rates, particularly with CPI coming in a little higher. I think for us, the biggest sort of risk that people may underestimate is if you look at commodities that have started to pivot a little bit, if inflation comes up a little bit in the next few months, we might have to wait even longer for cuts in the US, whereas we're seeing cuts in the ECB today. So there's a lot of divergence there.
So, and we're also seeing just divergence in the market today. For example, you know, with technology and financials doing well, energy has an up arrow, but you're seeing healthcare down, real estate down, and some of those moves are actually sizable. Do you have certain sectors that you think may work better near term or long term?
So it's interesting you ask that, because one of the themes we have seen this month that is not playing out today has been the shift towards small cap stocks. So technology seems to be making some of a comeback today, which is a little bit different from what we've seen over the last 2 weeks. So the fact that the Russell is down and technology and NASDAQ are up, that kind of is a little bit more consistent with what we saw earlier this year. But I do think that we have seen relative strength in small cap and other sectors, with the exception of today. So I think it's still unclear, but the general trend has actually been a rotation out of tech, with the exception of today.
Yeah, you were talking about commodities too a bit. Any thoughts there?
Yeah, I mean, look at gold today. It's up again, and it just continues to climb. I mean, I can't say what's exactly driving that, but it does definitely play into the concern over inflation narrative. And so we've seen that as one of the strongest trends this year, and has kept on going. Now, energies have been very bouncy, and we've seen energies down more recently. So commodities as a sector has been very much in a transition. We saw a very big, a lot of short signals developing in that sector since the summer, but we're starting to see that pivot. So the question investors are going to ask themselves is this disinflation narrative petering out, and could that be one of the drivers that causes us to stay higher for longer with rates because inflation in the US stays sticky? I don't know yet, but we'll have to keep watching the CPI data in the next few months to understand that.
Yeah, and now when you're putting a portfolio together, I know you were saying equities, you're cautiously bullish, and there are still folks who really like a fixed income portfolio. Of course, rates used to be higher, and people like that, but how do you balance that? Is there still room for fixed income in a portfolio? How do you balance the equities and fixed income?
Yes, fixed income is a very interesting one. It's been a lot of opportunities for entry in fixed income. I mean, if you just look at the recent trajectory, we've seen a pretty large move upwards in the 10-year. And so there's definitely going to be some buying opportunities in fixed income to lock in higher rates. if we do believe that we're going to stay somewhat range bound. So I do think there's a lot of opportunity to earn that yield, but also to be a little bit tactical in terms of entry points. So I think fixed income is still a very interesting asset class for finding opportunities right now.
And what do you say? I know you probably can't comment on specific stocks, but we've seen some themes, right? We're seeing Nvidia at new highs with Taiwan Semi. We'll have Netflix after the bell. People are watching Apple with the iPhone 16 cycle. You know, Tesla just had its robo-taxi event. Do you jump in on any of those kinds of names? Maybe on pullbacks or no?
Well, this is a good point. I mean, I think there was a lot of skepticism of how far those names have gone. We did see some rotation, but there continues to be evidence that there is still some room in that trend. And you've seen that today. You're seeing that continually over time.
Run, dude.
The uncertainty is a little bit more there than earlier this year, just given valuations. But there's a lot of excitement and a lot of opportunity in that sector. And I think people... it's you know, definitely a place to find growth in your portfolio.
Right.
Right.
Katie, great to see you. Alpha Simplex, thank you for being with us. Plenty more to come.
290.
360 up next. It's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will go through the technicals. Achilles Larea is right here at the New York Stock Exchange, and he'll have some trades for us on Apple, Hilton, Philip Morris, next here on Trading 360 on Schwab Network. We'll be right back.
Very good job, Nicole. 1, 2, 3. 1, 2, 3. Boom. I said it, man. Oh, yeah, yeah, yeah. Sly as a fox. Oh, yeah. Oh, he's a survivor. Zoom, zoom, zoom.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
$3.10, baby.
360. I'm Nicole Pittolides, live on the floor of the New York Stock Exchange. Glad you're with us for the big three as the markets are hitting some new record highs today. So the big three, 3 stocks, 3 charts, 3 trades, and Rick Ducat will take us through the charts here. Take us through the trades. Achilles Larea, founder, CEO at Larea Wealth Management. Glad to see you both, gentlemen. Let's start off because you have Apple, which has hit some new highs. The super cycle is on. Is it a super cycle, and where do you think this could be headed in line?
Yeah, there's a lot of, you know, we're saying the apple is not rotting to the core yet. There's a lot of growth here. We think that this could easily
I'll be right back.
move up 12 to
Baby crack up.
18% in an 18-month time period. We've seen it before with Apple, where it pulls back and doesn't do a heck of a lot.
Oh, yeah?
For a period of time, and then it starts taking off, and it seems to
Times have
coincide with
changed,
the
buddy.
release of the new products. We're also heading into a robust holiday season, so we're going to see a lot more spending from the technology side. And once again, 18 to 20% next 18 months. However, if it goes up higher than that, we will revisit and say, put a new price target on.
Yeah, just hit a recent high of 237.49 year to date. First of all, I think I prefer to get the 6 months where it's up almost 40%. Rick Ducat there on the charts. Check it out. Your thoughts?
Yeah, Apple has been looking pretty good recently here. When we look at the near-term price action here, we can see that it's been kind of an ascending triangle type shape, really. You can see that we had this, kind of zigzag between our red boundary here, where we had a small gap downward here. That was the post-gap high point. And then we can see right around 231, that was a persistent ceiling that we did manage to break above recently here. So now we are finding ourselves in a situation where we are retesting that former resistance area here, and so far kind of hanging out there right now around that 231 area. So a retest after a break of resistance is certainly not uncommon. So hopefully for the bulls, this will be the potential buying opportunity before we continue on in an upward path here. When we do look at momentum, RSI down here, we can see that we have two competing trend lines here. We have a green trend line starting with this low point and coming across these subsequent higher lows. Then we also have one trending downward here, and we have not quite managed to break above that one yet here. We are above the 50 midline. Momentum is favoring the bulls. We've broken above our downward trend line. Longer term uptrend still in play. So if we do manage to keep heading upward here, the next stop would be the previous set of highs, 237.49. Then our +1 standard deviation channel, 1 standard deviation above our blue linear regression line, coming in at 244.59. To the downside, quite a bit going on right here at our green line near 223, yearly linear regression line, longer term trend line, and series of recent lows here. So those are some areas to watch, Nicole.
Right, and he's talking about the 223. Today we're at 232, and you said in 18 months, 12 to 18%, Achilles. Do you think the AI, Apple's intelligence, will be something super special? I mean, we're waiting to hear exactly how it's going to help most folks, as opposed to those who are the most technology advanced,
Absolutely. I think just like Microsoft, we've seen how much they've moved up by making the investments in AI. They're all looking at nuclear reactors right now to power these energy-intensive initiatives. I see Apple finding a strategic partner to do exactly the same and make money in that sector as well.
You've talked about Hilton before. Yesterday, Morgan Stanley went with an overweight rating. They maintained that rating. They put a price target 245, up from 233. You've talked about it before, and it has run up, let's say 6 months. It's up 20%. You still think this has room to the upside as it's hitting some highs?
Yeah, Hilton is a very unique situation here because we do have majority of franchisees are very successful. There's over 600 different franchisees that they work with. We're also entering the holiday season, which is one of their peak seasons. So that, along with the stock, I mean, just in the last month or so, it's gone up more than 10% from the last time I was here, and I mentioned that. So right now we see more room for them to run. I want to revisit this new price target. We're looking to go double digit in this sector in the next 18 months. I wouldn't be surprised if we see something similar to that 10% we just saw. I actually expect more. And I also think that it's going to be in the same time frame. 12 to 18 months should show some excellent improvement on the upside. They're well-run, well-maintained properties.
Let's look at the chart, Rich. You take a look and you'll see the new highs. I mean, Baird actually put their price target. This got to be just a valuation move because they put it at 235 from 215. It's at 238 today. Some thoughts on the charts?
pretty nice looking chart here. When we look at the price action, we can see that we've enjoyed a pretty consistent trend line to the upside here. We've got our lower blue line connecting these lows, and these aren't parallel lines here going across the top, so it gives us slightly more of a wedge type shape here. Nevertheless, we are quite high, quite close to that higher boundary here. We logged 52-week highs today, backed off a little bit from that point though, but still looking pretty good, up 63% from that low point almost a year ago. However, one potential fly in the ointment for short-term traders is a little bit of bearish divergence here on the RSI. You can see price made a higher closing high. Meanwhile, we had a mismatch between price and momentum. RSI is actually trending downward and also failed to make its way back into the overbought area above 70 there. So those are two kind of more, less good signs for the bulls here. However, we are heading into earnings soon. It's really not uncommon for momentum to drop off when there's a known event risk situation here. So perhaps wouldn't make too terribly much of it here, especially considering how strong and consistent this trend has been. If we were to move to the upside and kind of break above this boundary that we've got right here, roughly at like 340 or so, that would be the point to beat. Plus one standard deviation channel, like we just talked about in our last chart. One standard deviation above our linear regression line comes in at about 254, so that's one area to keep an eye on around that point as we go forward here. To the downside, we've got our green line here, our previous high point, 235.67. Then we've got a confluence, linear regression line, 21-day exponential moving average, and another pre-gap up high point near about 231. So a few things coming together to provide potential support in that area.
All right, Rick Ducat, thank you for that. So maybe some near-term bearishness, but for the long term, you still like this one. Any final thoughts on that?
Yeah, just remember going into this stock, we're going to have some consolidation. We're going to have some pullback on it probably in the next month or so. I wouldn't be surprised to see that, but then we should be off to the races right at the end of December, early January.
All right, next up, last but not least, we're looking at Philip Morris, which hit a high but has since pulled back. I do see a few price targets, many of which are above $130. It's at $120 today. Tell us some of your thoughts.
Yeah, we're in a slow growth as far as the sector is concerned. If you look at Philip Morris and Philip Morris International, we've seen move towards the upside. It's been really slow, but the dividends, we got a high quality company with a good dividend, and we think that as far as growth and dividends are concerned, that's going to keep the positive growth in line. We also see good international trends occurring with this stock, looking for about 18% or so within the next 18 months, but I think that's actually a little aggressive. So I would dial it back to between 12 and 18% in that time period. I would also extend the time period to 20 months. I also think the stock will outperform versus the sector as a whole. Not by much, but it will do fairly well going forward.
Rick Ducat on the charts, your thoughts?
I understand the thinking behind this being more of a slow growth name, but when I look at the recent price action, surprisingly strong for this consumer staple, sector name here. When we look here, we can see that we were kind of just moving sideways for a while for kind of the first half of the past 52 weeks here. Then earnings gave us a bit of a boost to the upside. We crossed above our moving averages, and then we didn't really look back too much here. Another sideways consolidation, very sharp rally to the upside. We're up about 38% or so from that low point where our white trend line begins here. Then more recently we've started to moderate a little bit here, formed this volume node near about 120, kind of bounced around between our two moving averages, yellow 21-day and orange 63-day here. So today we're finding ourselves faltering very slightly here, but we are still remaining above our short-term 21-day EMA. When we look at RSI, we can see that we were enjoying a nice uptrend that matched the price action here. However, we did see some bearish divergence. Once again, it did translate into a drop-off here, but now red downward trend line is broken, breaking back above the 50 midline here, breaking above our blue trend line on price here. So we've got some more bullish developments happening recently. If we were to break above this very short-term white trend line here, the next high point, 122.76, would be one area to watch. And then, of course, our highs, 128.22 or so. To the downside, our longer-term trend line, we are quite close to that area here, also around like maybe 119, 120. And then our next set of lows, our green line here matches up with our orange 63-day EMA right around 117.50 to 118 or so. So those are some areas of interest.
Yeah, thank you for showing us all of those. I mean, I'll add that I did see one sell rating. Got to be fair, right? And show them UBS has a sell on Philip Morris International, lowering the price target to 103, maintaining that sell rating. So I know you were showing the different points there, Rick Ducat. Final thoughts here today, Achilles.
Yeah, I was disappointed we didn't see more of a pullback towards the end of September, beginning of this month. I still think that's healthy for the market. You know, to pull back to a certain percentage, we don't see that big correction just yet. But after seeing the numbers, after seeing inflation going up slightly, I think that we're going to have that move upward now. We're not going to have that correction that I was looking for. And we'll probably see off to the races at the end of December, beginning of January.
That sounds like a Santa Claus rally to me. It's great to see you, Achilles. Thank you for updating us on Hilton, on what you thought about the markets as well, the pullback, but more so the off to the races comment. Thank you. Achilles Larea of Larea Wealth Management, and Rick Ducat there on the charts every single day with us. Thank you, Rick. That's the big three for you. Coming up next, the spotlight on earnings. That rally in Taiwan semi. It's a bullish signal for the rest of the chips, or not necessarily? Let's talk tech. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight those earnings from Taiwan Semi. We're seeing that name new all-time highs, and it's lifting some of the other semi stocks too. For example, NVIDIA, new highs as well. Joining me right now, Matt Tuttle, CEO, CIO, Tuttle Capital Management. Thank you so much for being with us. You saw the Taiwan Semi numbers. What did you think?
So, I mean, I think we're in the early innings on this whole AI thing. We saw chips dip earlier in the week. And to me, anytime you see dips, it's a buying opportunity. So I think, Taiwan Semi's earnings reflect that. Personally, that's a name I don't own because of the China risk, but kind of thinking that might be stupid right around now, seeing what it's doing. Couldn't fault anyone for buying it, and and I love all of the names here. NVIDIA, that dipped earlier in the week. That's a gift. So yeah, I mean, I think this just shows we're still in the early innings.
It's very interesting. Well, first of all, Taiwan Semi is up about 12% today. So yes, it was a nice move for folks who are unafraid of having some investment related to China. That being said, you do, as I go through the names in your notes, it looks like you're pretty much bullish on most or all of them, saying buy the dips. And what do you consider dips? I mean, how do you consider if something's too frothy? For example, NVIDIA's at new highs today. And I know you said you like NVIDIA and you like Micron and you liked a few others. And even ASML, which had a tough time earlier this week. Where do you buy NVIDIA?
So I think NVIDIA is a name you have to own. And, that's obviously the big AI winner. You should own that name. If you like to trade around a core position like I do, I think, for a stock like NVIDIA, you're not going to get an ASML type dip. So, anytime NVIDIA goes down 3, 4, 5%, the news stories start coming out. Oh, NVIDIA's overvalued. NVIDIA's overvalued. I'm going to buy that. A stock like ASML has really nice dips to buy. So, we bought that dip the other day. But, NVIDIA, you take what you can get, and usually it's not that much.
I see. So it's more of a core holding in your mind. I mean, for ASML, we had those numbers released earlier this week, and that stock sort of, when you look at the chart, you really see that candle downwards. So for this week, and today's Thursday, 18% lower. But it wasn't that long ago that it hit a new high of $1,110. Today it's at $686. Does that say screaming buy to you or cautious buy to you?
So ASML is a weird one. Any other stock, I'd say screaming buy. ASML, every time they announce, hey, we're going to restrict imports to China, they get crushed on that news. Their earnings are lumpy. So I wouldn't say screaming buy, I would say buy on that one. And, that's a core holding for me too, and I added to my position on that dip.
You did what?
Right, understood. And some of the others, like Micron, I think you had that in there.
Micron, I love where the chart is right now. I love
Golly.
NVIDIA, but I'm a mean reversion guy. I prefer not to buy things that are already, right around all-time highs. So, I think if you look at the Micron chart, which you're
Woo!
there's
430.
some white space there. So, that's a
Randy?
name that, I wouldn't mind adding to.
When I think about AI, I mean, and you talk about the early innings, and there's so many ways to play AI. It's not just these chip stocks, right? And I could go through the different ways, but I'd like to hear what you think of, maybe how you expand and trickle out from the chip stocks for AI and what else could work on the
430.
heels of AI
440.
that you think is in the early innings.
Yeah, so we
450.
teach people to look at first order, second order, and third order thinking. First order on AI,
Okay.
obviously NVIDIA. Second order is all of the types of companies you're going to need to make AI work, because I can't just give you.
You can give it to me, sir, for free. Whatever you're giving out. 440. These 5870s are now at 440, 430. You know, Jimmy would look at this and say, if I'm still in the trade, I'd be making a business decision. Boom, boom. Well, so too soon? I think I've heard that before. Had to leave, come on. Oh. Whoa. Very nice. Bad thing about that last trade, I bought it right before it went IFed. I mean, it wasn't even a split second. So shit. What'd I get him at? It was at 170. Oh no. I got him at 220. I could have got him at 170. Just a split second. It was very rude. We're at 460. Interesting. Hmm. Hmm. Yummy, yummy. Ooh. Apple, 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 apple. Hmm. What about that dip on Apple?
AMP raising the price target on the shares. What's behind the call?
Well, there's actually a few things going on with the call, Nicole, but ServiceNow has actually performed exceptionally well over the last year, and they continue to grow their enterprise resource planning software and their HR delivery software, essentially workflow automation for IT systems and, of course, back-end systems on a large enterprise basis. About 90% of the enterprise or Fortune 500 companies use ServiceNow's technologies. And so they're really a productivity enhancing software, and they're really becoming ubiquitous, not necessarily just in the private sector for the large Fortune 500 companies, but also the public sector. And this is one of the reasons why JMP has actually increased their price target. They moved their target to $1,000 from about $850, and they maintain an outperform rating on the name. The company actually did secure 5 new pretty significant government contracts, one of which was worth $110 million from the Department of Veteran Affairs. So this is a company that's not just growing, like I said, in the private sector, but the public sector, particularly the federal government, and even state and local governments are using their enterprise systems. It's customizable, it's a platform as a service, and it essentially enhances workflow productivity for enterprise back-end systems. So I'm going to place this sort of in the same camp as a Broadcom. That's an infrastructure stock, and I think if you look at ServiceNow, it's quite ubiquitous as an infrastructure name in the software space. But the fundamentals actually match the call as well as from JMP. If you look at the sales growth estimates For ServiceNow, they're expected to be about 22% in the next 4 quarters on a cumulative basis with about 29% earnings growth. It's trading around 55 times next year's earnings, but that's still less than 2 times next year's earnings growth. And this is pretty significant considering the earnings growth is close to 30%.
Understood. I mean, that's a pretty hefty target there, up to $1,000 from 850. I mean, it is at 919 now. How would you go about an example trade?
Okay, so one of the things about it, obviously the stock has done well this year. It's trading near 52-week highs, but there's a calendar event. They're actually going to report earnings next week on the 23rd. So you could certainly play a bullish trade, but we have to take into consideration the calendar event, which does imply higher volatility in the near-term option. So what I'm going to do is I'm going to structure a bull call diagonal spread. And so I'm going to go out to next week, which expires next Friday in 8 days. I'm going to be selling the out-of-the-money $940 call. And then I'm going to use the proceeds from that call, because it's an expensive option with high implied volatility. I'm going to buy the November monthly with 29 days to expiration, $910 call. So altogether, this would cost you about $30 a share or $3,000 a contract. So right now, based upon the price, which is close to $920, you're outlaying $30, but you're already buying $10 worth or close to $10 worth of intrinsic value. Ideally speaking, the sweet spot is by $940 by expiration next week, but essentially you're capped at $940 if the stock blows through that level. But you also have to consider the risk, because this is a bullish trade. Your break even on this trade is essentially $940 between now and expiration if you do hold the November contract for the next 30 days.
Okay, thank you for that. Good look at our disruptor today, ServiceNow with George Sillis. Thank you. Coming up next, we have to preview in our 360 round the earnings for Netflix. They are due out today after the bell. What can you expect from the streaming giant? We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We want to bring in our panel to take a look at Netflix, which has been an incredible performer. 1 year up nearly 100%. It has been the leader in streaming. Will it continue to do so? And not only just the content, but advertising and cracking down on password sharing and things like that. So what do we need to watch for today after the bell when we have earnings? Stephen Kent is with us, Media Director, Consumer Choice Center, and Seth Schaffner is with us, Managing Director of Strat Americas, Digital Business Executive. Thank you both for being with us. Stephen, I'll start with you. What's on your mind for Netflix today?
Well, I mean, Netflix is still the top dog in the streaming world. Heavy is the head that wears the crown. And so when you are this high above the competition in the streaming space, you know, every little thing can look like a warning signal, which is why I think, you know, we're looking at Netflix stock down just a hair going into this earnings call. But this is still a powerhouse subscriber platform with 280 million people subscribed to this thing. And they are looking at the year ahead. They have to move away from a subscriber-based model as the only metric of success, and the ad revenue is the only metric of success. They have to build a new operation for consumers who are looking to Netflix now for gaming products, short-form content, and Netflix is working on delivering those things. And I'm looking at Netflix as a pretty optimistic bet as we go into the year ahead. They are adapting to change for consumer preferences.
Yeah, as you were saying that ad revenue and the subs being the real streams of revenue, and what else could they do? Right away, my mind went to gaming. It's not the first time it's been mentioned. I know we're all sort of thinking that, but it's just not something we're seeing prevalent for Netflix, and we keep talking about this. I wonder if that'll become a reality at any point. Seth, some of your thoughts?
You know, I see them, you know, similarly as the king of streaming and a leader in the space, but I don't really view, you know, the strategy going forward for them as too much reinvention, as much as it is kind of emphasizing the different price tiers, you know, really building the advertising model, which is extremely important, and then probably, you know, price hikes on the premium tiers, because, you know, there's a really deep competitive sense here in Hollywood, you know, whether it was with Disney or Max or some of the other streaming services, Prime and Apple. And I think, you know, they probably have some room to move in terms of upping the price on that. And I think that's what you'll see. And I really think for what going forward for them is probably about engagement, you know, and hooking people with all the new releases they have in their originals and retaining those subscribers. So, but for sure, they're gonna, you know, innovate at the margins. They've got some NFL games coming up. You know, they're doing stuff with the WWE live events. But I think that's really at the margin, and I really see them as the centerpiece of, you know, of Hollywood going forward.
That's a good point about the live stuff for sports, NFL, WWE. Stephen, some of your thoughts there, because that seems to be at least one area that works. Right, it worked for Amazon Prime on Thursday nights when they brought in football. Live sports is very desired, isn't it? And do we expect to see more of that on Netflix?
Well, it's an incredible demand, live sports, as well as the rise of live comedy programming, which, you know, Netflix has been out ahead of all of their competitors on. And, you know, as a consumer of almost every streaming platform that there is, I look at Netflix right now as having a weaker roster of original programming, such as television shows and movies. I'm not super impressed with their IP as other studios have rushed in, like Disney and Paramount and the likes, to take their programs back and put them on their own platforms. Netflix is kind of weak right now when you're scanning around trying to find something to watch. I'd much rather just jump right into HBO. I can find something very quickly that I will enjoy. But what Netflix has now going for them is this live programming vertical, which everybody talks about, everybody rushes to. They want to see that next Joe Rogan or Dave Chappelle special that's going to go on there live. The same goes for sporting events that we'll see this December.
I don't know if either of you can comment on the stock price. I mean, but we certainly see this being a winner and continues to be a leader. Seth, as you look at this, you're talking about Hollywood and just how Netflix is such a leader. Do you consider that it will continue to do so? Because we talked about some of the competitive landscape, right? Yeah, HBO and Amazon and Apple and Warner Brothers and Disney.
Yeah, no, I definitely think they're still the leader in the space out here. And I think, you know, maybe the larger strategic concern in terms of the rights holders and studios out here is how big of a Goliath, you know, has been created and what they can do to pull back some of that programming. And I think, you kind of see mixes of originals coming out, acquisitions they have, as the studio system out here retains some of their best properties. And, if you'll note, competitors like Max have been almost scientific in terms of what they'll release for streaming, and also keeping theaters alive as well, which I think, some of the streaming services have had a very questionable record on. So I still see them as king of the hill, and I do see their strategy in terms of trying to engage and retain more subscribers and raising prices, actually, and hopefully that'll reflect in the stock price as well.
So just so folks know the numbers, Netflix is expected to post $5.12 a share on revenue of $9.77 billion, with total subscribers at Netflix to have risen to 281.5 million, a jump from last year's 247.2. So up to 281 from 247. What would you say would be the number one reason people might just say, oh, Netflix, and sell the stock? One word. Stephen?
Those price increases are not going to be received well by consumers. I will expect there to be some sort of consumer backlash when prices go up yet again.
Yeah. Seth, what will be the sell moment today or soon?
Sure. If you see any real downturn in engagement, people watching less, to this earlier point, and going to other places, I think that's a really key metric too.
Yeah. People are frustrated with the number of streamers that they have to sort of deal with to get everything they want. We've seen that. Stephen Kent, Seth Schachner, thank you both. Good luck at Netflix ahead of the earnings today after the bell. Thanks for being with me. I'm Nicole Petalides, live here on Trading 360. I'll see you at 2 o'clock. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set.
That's a good question.
Incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Oh, I hope you're not doing that.
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will
the hell happened here?
By
540.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out.
I don't have a very good reaction
I have a trading system that
emotionally.
I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
The herd is. I'm impressed.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No.
Crucial. The old guard is saying,
I have not.
away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going
They're at 580 now.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking
Yes, they
cues,
can.
Set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one.
Huh.
There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Good thing. The video jump. Boom, boom.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including
Some
discussions
wonderful
about
volume.
strategies. We're going to cover American Express, which is at all-time highs into their earnings tomorrow morning, and Uber, which is under pressure on reports the rideshare company is exploring the purchase of Expedia. And
these
that
things are
like
beautiful.
oil break down consumer sentiment data. In Netflix, the streaming stock has rallied over 40% in 2024. They report earnings after the closing bell. Now let's take a look at the major indices, which are off the session highs, but making up some ground here. The S&P 500, the benchmark, up 0.4%. Dow Industrials up nearly 150 points. NASDAQ 100 leading the way to the upside, up about 0.8%. And the small caps are also
590.
On
620.
Rising interest rates at this point after a great session yesterday, up over 1.6%. Give me back some of those gains. To help me break down this market action, let's bring in my co-host Kevin.
Very
Hayes.
nice.
Kevin, data dump this morning, and retail sales pretty good, so lending some support to the rally we're seeing.
Yeah, I think that what happened Tuesday with ASML, the reverse happened today with Taiwan Semi, which means red light, caution on Tuesday, green light, go today. And I think NVIDIA is making a much stronger correlation to Taiwan Semi than it did to ASML, even though NVIDIA sold off pretty hard, proving to us that it's not a straight line. It never is.
Right.
But that being said, wow. I mean, Taiwan Semi's numbers, so much better than expected. We have to pay attention and make sure that we're not entering beat and raise season again, because those sneak up on you, and all of a sudden these numbers, they were a lot bigger than expected. 30% growth versus guidance in the 20s before. So if we're entering beat and raise season, then we got to adjust all our parameters. We'll see. And get into large cap tech.
Yeah, Taiwan Semiconductor's numbers were pretty spectacular, and lending some support. NVIDIA now up 3%, AMD up over 1%. So chip names leading the way to the upside. To expand on this conversation, let's bring in our next guest. That's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, I wanted to get your take here as the optimism continues to reign supreme here for equity markets. What's your take?
Yeah.
Yeah, I mean, it's hard to be bearish when the data is coming in as it is, when the technicals continue to just reflect kind of a market that has an upward bias, when the AI trade, to Kevin's point, looks like it's intact. I think the thing with ASML, the difference is, their machines are like a couple $100 million to purchase. And so if, ASML said that there was some, let's call it hesitancy in terms of, purchasing, that a lot of the enterprises were, postponing some of that purchasing or perhaps having a little bit of cautiousness around that. But when you look at the price tag on what they're selling there, perhaps that has something to do with it. Kevin's right. Taiwan Semi looks great. That guidance was fantastic. The margins are intact, all-time high for both Taiwan and NVIDIA. NVIDIA is actually acting a little bit gun-shy here, but the signs still point that demand is intact. I think we get Microsoft next week. We'll see what they say about CapEx. There have been a couple of downgrades with Microsoft recently, but here we are in the thick of earnings season. They're coming in. The EPS growth estimate was 4.2% from FactSet. Right now, we're tracking, I think, around 6%. We've had about 65 out of the 500 S&P 500 companies that have reported. If you're bearish, what you could basically point to would just be valuation, and perhaps sentiment is too stretched. Perhaps we're getting a little bit lopsided in terms of everybody becoming on that bullish side, and that's not what you want to see if you're a bull. You'd like to see some contrarian views that are out there, but they're hard to find.
I'm a trader, Nate. I always have a contrarian view of things, especially when it's this lopsided. But he brings up a good point about the number of companies that have already reported, Kevin. Mm-hmm. It's all the financials. Now it's regional banks
and airlines.
Well, look at the market right now. It's up significantly. So of course they're going to be beating earnings estimates. But this is a smaller segment. Only about 60 names in the S&P 500 reported. A lot of them are financials with the market at all-time highs. Hey, I kind of get that.
So, let's say we're on a golf course, and the financials
Let's leave right now.
Our financials are golfing. They'd be referred to as a sandbagger, because financials came out and warned that trading revenues were going to be lower, net interest income were going to be lower. They lowered expectations and then clobbered them. I got a little problem with that. You know, if this was a golf course, I'd be like, dude, you're kind of a sandbagger. So we knew the airlines were going to be good, right? I didn't know United was going to be that good, but that's pretty solid out of United. But boy, the banks, really impressive after they kind of came out and, guided cautionary on them. And then they all killed. So, well, except Citi didn't kill, but a lot of other ones, pretty strong numbers.
Yeah, and Nate, if you take a look at some supportive, data that for maybe the rally that we're seeing, all-time highs here hit for the S&P 500, Dow once again, Nasdaq getting close, Russell nearly 3-year highs. Is retail sales, they continue to perform well. It's kind of reflective of a strong consumer, and that's always good for the economy, right?
Absolutely, yeah. 70% of the economy, 70% is services, which is good news if you're looking at those data points. Another thing for the bulls would be, you look at services and prices paid, that prices index, that has been creeping higher. That would be really the boogeyman for the bulls, is if, rates and inflation begin to reverse and their trajectory begins to move back higher. I think the bulls understand right now, given, the setup that we're in with this being a strong economy and a Fed that's on our side, you're not going to expect to get as many cuts as they had initially forecasted. They're going to continue to have to kind of push out the timeline of that rate cut trajectory. But they've been doing that all year, and that hasn't been a problem for stocks. So the bulls are fine with that, provided the economic data comes in as it has. What are the odds that from this point forward up until the end of the year that we don't get some kind of a volatility bout? I mean, I'd say that's pretty low. I mean, we're at all-time highs. We're stretched here. We're getting a little bit stretched technically. It would be normal if we, either before the election or after the election, that you get some kind of, even if it's just a sell on the news, mean reversion type of a 2 to 5% couple day to a week pullback. That would not surprise me there. But I will say, you mentioned the Russell. Finally, we got a fresh 2-year closing high yesterday, which is bullish. You'd like to see some follow-through action today, but technically that actual close is the bullish event, and so perhaps small caps might be looking to get a little bit more fuel in the tank, provided rates don't climb too fast.
Yeah, the Russell 2000 and how it reacts to interest rates, that inverse correlation is playing out perfectly this week, where it was stronger than everything the last couple days, based on the fact that rates were falling back to 4% for the 10-year. Now the 10-year popping here a little bit, putting some pressure on the small caps.
Remember, we're talking about banks and financials and earnings. Well, there's a large sample size of regional banks in the Russell that are all coming out with earnings right now.
Right.
So that could add a little volatility to the Russell.
Yeah, definitely. And Kevin, jobless claims come in lower than expected.
Yeah.
Just 241,000. Continuing claims ticked up just a little bit, but it's still kind of reflective that the job market remains robust on a week-over-week basis.
Yeah, I find myself starting to doubt the jobless claims data already because of the hurricanes in 2 different sections of the country now. I think this data is going to be, not reliable for the near future.
Non-farm payrolls next month too.
I know.
Probably.
Yeah, I think there's going to be disruptions and all that, which number one, should cause us to discount any number we get, and number two, how does the Fed use that data? How do they justify moving or not moving on rates when the data's not reliable?
Right. Yeah, we'll have to wait and continue to see that. Nate, I kind of wanted to hit back on Taiwan Semi because that's lending a bunch of support to the overall equity market at this point. The tech sector doing pretty well today. The Philly Semiconductor Index ramping up. But this is kind of reflective that specific names within tech, and I'll say it, ASML, when they pre-released earlier this week, Intel still struggling. So if you're not involved in AI in some way, that's selling to these, mega cap tech names that are investing all this money, and then Nvidia being right there in the mix. You might be left out in the cold here for at least in the near term.
Yeah, and look, when we talk about the AI trade, so to speak, it does look very healthy, and it is still, weighted on the infrastructure build-out of phase, meaning, those chip companies. Micron guidance looked good. It looks like the demand and the expectations for increases in CapEx. I think Microsoft is expected to increase CapEx 16% year over year, looking out to the upcoming year. That all looks good. We'll see what Microsoft, and when we get some of the more mega cap tech names that come in, say regarding if they provide more color around, AI adoption, Copilot Pro, how many users are coming in there. If you look at what Sanjay's been saying around the, the adoption or the take rate for Copilot Pro, a lot of it's spoken in terms of relativity. Quarter over quarter, year over year, where, the demand's there, it's up 100%. But the actual metrics, the number of users, that still has been a little bit scant. And so, within AI, if you're focused on chips and you're focused on those companies that are doing, that are primarily serving that market, that's your AMDs, TSM, NVIDIA, Broadcom, that cohort within semis, that looks very healthy. When you're making new all-time highs like we did in NVIDIA and Taiwan Semi, that's sending a message to the market that, hey, we're in price discovery mode. Based on the demand, based on the future pricing mechanism that we're looking at, we've got to still find a price where there's going to be fair value here. We haven't found it. If the stock is still pushing up into new all-time high territory, technically that's great to break out into space. However, there may be some other segments within semis that, look at over the past 3 days since ASML, look at Lam Research, KLA, AMAT. They're not making new highs. They got hit pretty hard, and their price action is a little bit subdued.
Yeah, definitely on that. Some of those names doing well today on the bounce back, but have been underperforming. Let's pivot, Kevin, to this news. Uber, Expedia, comes out late yesterday. I was looking at it, and I'm thinking, scratching my head, and then you realize that Uber CEO was CEO of Expedia from 2005 to 2017. So that tie-in is there. The super app conversation takes hold.
I think this is a real story that's probably, looks like it wants to happen. And I think there's relationships there. I think that, remember, don't underestimate or don't downplay the evolution of a business. Look at Amazon, right? Where they started, where they are now. Look at Microsoft, where they started, where they are now. This is... It's a imaginary evolution, but if the aspirations are to make this a super app where moving things around, you go through that app, and there's already local knowledge of Expedia and what their strengths and weaknesses are.
Right.
I see this. It's not as far-fetched as you think.
Yeah, and Nate, when you look at this, they've already come out and said they've had no formal discussions whatsoever, but Uber did inquire with some advisors about this. But for him to know the business so well by being the CEO, maybe it kind of does make sense. And if you look at the synergies on the back end, just the technological side, that's probably a bonus for Uber to go after somebody like that, right?
It certainly could be. I mean, there's more, complexity that comes into the mix. in terms of, having, positive, accretive EPS growth and revenue growth in the near term generally doesn't happen. It generally takes time to work through a lot of these types of, working Expedia into a company like that. So, you might expect Uber to trade down, Expedia, of course, trade up. Certainly that could be something, but it's more to manage. Uber has been executing really well, and you don't want to. There's always a risk that you kind of take on too much, that you have to integrate too much and manage too much, and so more is not necessarily always better. It seems like Uber is definitely executing really well within their realm. So if they were to announce something like that, it wouldn't surprise me for shareholders to initially, at least, really kind of give it a bit of a haircut as they wait a couple of quarters to see what that integration might look like and how fast it might take.
Yeah, and if talks even take place whatsoever, right. But we're going to trade Uber later on in the show, so keep that in mind. We'll have an option strategy on that one. But Kevin, I wanted to hit before we go to break here. Gold hit fresh all-time highs. Dollar at 2.5-month highs. That correlation's been busted.
ECB cutting rates today with strong economic data. Look at the rally in the dollar off its lows. It's significant. And now, that doesn't mean anything right now, but higher dollar, higher yields. You've got the 10-year approaching 4.1%. It's worth watching across the board. Mm-hmm. But yeah, gold rallying with the dollar so strong is a bit counter intuitive. So they're all worth watching. Watch all those three: yields, dollar, gold, and crude oil, of course.
Yeah, and yields going higher, probably for the right reasons, right?
Yes.
Retail sales were good,
data.
Right? Strong data on the economic side. All right, guys, let's take a quick break here. When we come back, we're going to take a look at American Express. The credit card stock is at all-time highs into their earnings ahead of tomorrow's opening bell. The higher retail sales didn't hurt the outlook for American Express. Stick around.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Over!
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking more earnings. American Express reporting tomorrow morning ahead of the opening bell. Kev, shares are up over 50% so far this year, hitting all-time highs into earnings, but this isn't just the swiper like Visa and MasterCard. They've got other, over 20% of their revenue comes from loans that they got on their sheets and, some money that they hold. And, that might be a positive, but this is for the affluent spender.
There were worries a short time ago about the overall consumer switching from discretionary to staples and a weakening U.S. consumer and what that would do to credit card spend. And then everyone realized that that's not really American Express. Their consumers, their customers aren't really in that class. They're more affluent and small and medium businesses, and they aren't affected like other credit cards or debit cards are. So a little more affluent customer base. They keep balances where Visa and MasterCard don't. Right. So they make a little money that way as well. So yeah, just a different. Their second quarter results were strong. They beat on earnings per share. They raised guidance. So their numbers are pretty solid. And well, even though the stock had a couple dips along the way, it's sitting at or near all-time highs.
Yeah, sales were up, Nate, 8% last quarter. For the full year, they expect about 10% revenue growth for this company moving forward. Warren Buffett owns it. He's always a value investor on that side. But I think the performance on some of the credit card stocks, especially American Express, kind of, confirms the fact that the high-end consumer, at least, and mid to high-end consumer, is still out there spending.
Yeah, that's exactly right. And, that the performance of the American Express's stock, kind of reflects that. And you would want to have that exposure, given some of the data points that we've seen this year regarding the consumer. You would want that top half. And, look, the stock has been performing extremely well. If we look at valuation, you're right. They're not the Visa or the MasterCard. MasterCard has a forward PE of 35. Visa has forward PE of 28. American Express forward PE 21. If you go down to Capital One, forward PE is 14. If you go down to Discover, they reported this morning, forward PE is 12. So American Express is kind of right there in the middle, about a 1% dividend payer. And, the stock is up, since early September, about 19%. So we're rallying basically to all-time highs into the report tonight.
Yeah.
Or tomorrow morning.
Tomorrow morning. Far above its 50 and 200-day moving averages. RSI is at 78. So getting to that overbought territory on a technical basis at this point. But, it's kind of hard to, come up with a bear case on a name like this when the consumer's still out there spending. Retail sales are still doing well at this point. The jobs market's still really good. Wages are going higher.
Wealth effect.
Stock
market and homes.
Yeah.
Everyone's feeling more wealthy.
Exactly. So you got an example trade for us. What is it, Nate?
Right. Well, you're right. Everything looks great, but sometimes you gotta zig when the market zags. I mean, stock up 19% in just over a month. Stock at all-time highs. Stock up 1% today. Financials at all-time highs. Financials relative strength. If you look at some of the ETFs, 73. So expectations are that they're going to do well. So what could go wrong? Well, you could get a sell on the news. If that was your belief, the implied move is roughly about $12.50. If you thought that they might be, and by the way, we got 2 downgrades earlier this month. BTIG went to sell on American Express from neutral, and HSBC went from buy to hold. So let's not let that come off the radar there. But if you thought that this potentially, because of great company, great franchise, etc., you could be set up for, from a trading perspective, sell on the news. I was looking at something like doing a bear put spread, just selecting the 280, 275 strikes. So that's tomorrow's. Buying the 280 put and selling the 275 put against that for roughly $1.70 net debit. That's essentially risk 1 to make 2. This is a bearish trade. You basically would be expecting, regardless of what they report, that you would get a perhaps sell on the news types of reaction.
All right, let's break this one down. October 18th monthly cycle. So as Nate said, just over 24 hours till expiration on this one. Pure earnings example that we're bringing you here. with the stock near overbought territory. Buying the October 18th 280 strike put, selling the 275 strike put, paying $1.70 debit. There's your risk, $170 per spread, with the opportunity, if it falls below 275 at expiration, to make $3.30 on this one. Kev, the risk reward setup pretty nice on this one, but you definitely need a move below that 278.30 break even.
Yeah, $12 expected move. This is a one-day trade, and Nate is playing it from the bearish side. Now, the stock has run a long way. Everything he said about the analyst downgrades are accurate.
Yeah.
So if they were, remember, when the bar is high, anything can disappoint. It can be something just slight can disappoint. So with the expected move being $12, his short strike is about $1, $2 above that target if it moves to the downside. So this is a bearish put vertical that if you get the move you wanted and the direction is right, it could go to full value.
Yeah, HSBC, as Nate mentioned, downgraded it on the 8th of October, said positives priced in. BTIG came out with that note that same day and said, sell on unachievable expectations. So yeah, taking that contrarian view here, Nate, with this, but the risk reward setup is positive. And as Kevin mentioned, you know, any one little thing with the bar set so high could set this stock to the downside, but it could also be, hey, maybe they report better than expected earnings, they guide, you know, in line or above expectations. Maybe it's just one of those things where, you know, people take profits on a name like this, right?
Yeah, certainly. And financials in general, because they are overbought, you know, great reports and everything like that, you know, so, you know, it's about trading. It's about the setup. These sell on the news types of events do happen. Is it priced in for American Express, you know, right here, right now? You know, that's up for you to decide. But, you know, look, when you look at these types of strategies, if we compare a bear put spread versus a bear call spread, for example, let's say you were looking at selling it out of the money, American Express, like at 290 to 295 call spread, and let's say you can get a $1.60 credit for that. The difference, there's always a trade-off. The difference is, well, with this bear put spread, the most I can lose is a $1.70, but I could also make twice that, almost, if I get the implied move to the downside. If I go and try and sell a bear call spread, the good news is if the stock is flat, I can keep my credit. But if I get the implied move higher and it does gap up, you know, $12 or whatever, to a new fresh all-time high, then I can also lose, you know, the inverse of that. So roughly $3.30 or whatever credit you bring in. So these are the trade-offs that you have to consider. If you're going to believe, I feel like if you're going for a sell on the news and that's your thesis, and you are taking note of what the analysts say, at least the risk reward here gives you an opportunity to buy one to make two.
Yeah, and you know, these are just you know, example positions that we're putting on, and more bullish. Maybe you buy the call vertical if you think this stock's going to go up, because risk reward setups on it are pretty decent at this point, even going in to earnings. So good look at the bearish example put vertical here in American Express. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, we're going to be joined by Landon Swan from Likefolio for a look at sentiment data and Netflix. The streaming stocks up over 40% this year ahead of their earnings. The bar's high on this one too going into the report. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
More knife he
How's my favorite
come.
client? Quick question, Carl. Can you offer me the same
About
choices
there.
as Schwab? Choices? Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own. Come on, you know Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl. Schwab.
Have a choice in how you invest with Schwab.
That's it.
Welcome back to Fast Market here on the Schwab Network. Let's bring in our next guest for our cash tag segment. It's going to be Landon Swan. He's a co-founder at Lightfolio. Welcome back to the show, Landon.
Thank you. Great to be here.
All right, to kick off to actual important names here for earnings season with Netflix coming up after the close today. We've had 5 days in a row after hitting all-time highs last Friday. We've been down 5 days in a row, but I mean, the expectations and the bar is really high on this one, maybe warranted at this point. They're supposed to continue to grow subscription rates. They're not losing subscribers by any stretch of the imagination. Do you have the data that backs this up, and what are your expectations moving into earnings?
Yeah, I mean, I'll tell you, I think that this move down over the last little bit is more of an opportunity than anything. I mean, this is, you know, it's the clear leader. I mean, they have 250 million subscribers, I think 277 million, more than any other streaming service. So they're, you know, they're the number one player in this space. And then you just got to look at, you know, are they holding or growing their lead, and how are they measuring that? And I think that's really key because, you know, we do expect a slowdown in subscriber growth, not losing customers, but, you know, that derivative. We're expecting a slowdown in growth, and you can kind of see it here. I mean, the traffic is, you know, it's kind of moving off a little bit. Sure. But when you look at how they're talking about, you know, they're kind of, I wouldn't say they warned about this, but they put this out there to investors that I think that we're not expecting a lot of continuing growth.
That's what we're trying to come across.
We are looking at changing the way they report. Instead of talking about purely about the number of people who are subscribing, it's how much money is being brought in.
Exactly.
They've got a little bit different model now, right? I mean, they cracked down on the password sharing, and they're also bringing in the ad tier, which both of those have worked really well. So the ad tier, I think it's $7 a month, and it's supported by obviously ads. And that's
we're getting close.
Year over year, I think 34%.
Oh,
the paid
here we are.
Versus only growing 16%.
Riding, dude.
Say only, but that's a really good.
Magnificent.
Last quarter they had plus 17% revenue, plus 48% EPS.
230.
And you can see here in this chart, it's, you know, just look at from left to right is the time, and then you can see Netflix is in green, and some of the competitors have their own colors.
230.
YouTube in white, Roku gray, and Disney in pink. And so what you see over time is Netflix is growing this ad revenue.
The
over
crowd's
time,
going
which is really
wild here at Sports
you know,
Arena.
plus 17% on a year-over-year basis.
Prison Man.
If you look at Disney, they're falling off. If you look at Roku.
Sorry, I have to meet you. Right now, we're looking at the SPX, the 5870s at $2.30. SMA. It's SPX. I'll put that right there. What's going on here? There's problems going on. We're at 285 right now. It's very quiet. We're at 290. Could be making a business decision. There's 290 again. Just slap in the face. It's ooh, $3. That's up $70 contract. Okay. The old Jim would have got out of this trade by now. Let's make that clearer. He would have. You got out at 290, wouldn't you, James? Yes, I would have. I would no longer be in this trade. That's the old Jim. The new Jim, he wants to see $5. Right now he's up $100, so the old Jim would be snidgy. Say yummy. Okay, you can get out of $330 right now. I bet you resell it. There it is. There's 33%. Go ahead and get out of the trade, Jim. You're at $300 contract. Get on out of the trade, Jim. You know what you gotta do it. You know what's best? If you don't get out of it now, you won't get out later. How dare you? Outlook for Netflix, according to Prison Guy. Blanket. 360. Think about that, Jim. That's a real good average. You got in at 230 and you're talking 360 now. Come on, man. I think you know what to do.
Innovator does rely on Taiwan to make those custom chips. And he also said, like you mentioned, early innings, that it's just the beginning for this insane demand for all things AI. That's per the CEO. So second time we've heard a CEO use the word insane to describe the demand for chips. And NVIDIA CEO said the same thing. So insane, I guess, is what we're calling it. I love that they're saying that. And I mean, guidance was only stronger. Based on the midpoint, represents about a 13% sequential increase, or around 35% year-over-year growth. I know one concern I saw from analysts was the capital expenses. At this point, they will uptick slightly over the $30 billion, but I was looking at what CapEx has been just over the last several quarters. I will say the pace in which it's expanding is at least slowing. So sure, it was up 6.4 billion this quarter. It was up to 6.4 billion, excuse me. That is slightly ahead of the 6.36 billion average. But again, it's not like they're like doubling, quadrupling CapEx every single quarter, because then I think that would be a problem.
No, and I think that has been one of the overhangs where you saw some slowdown in the growth that we saw this year within the space, within these AI-facing companies, these chip makers, etc. There was concern about what CapEx looks like, and is this been justified for what the anticipated demand is for this space? But we're seeing reinforcing of that the demand is there. In fact, it's there so much that it's more of a can the supply meet all of this demand, that we're just really at the forefront of a new frontier when it comes to this space. And it's interesting to see not just the move in Taiwan Semi, so we're seeing that jump. Earlier it was up about 12% right now. It's a little off of that high that it saw, but again, these gains, the stock is up more than 100% year to date. But that's spilling over to NVIDIA as well. NVIDIA hit another new all-time high today. So you're really seeing, this makes me think of how, when we look at Taiwan Semi, it's the perfect example of what this segment usually is. It's truly a FOMO play today, where you have the bulls like, okay, hang on a second, we got to get back in here.
I know, that's even how I thought. I was like, I should have traded this Dave, honestly. That's what my thought was, because I've really enjoyed just following them. And now with today's new all-time high, the company has surpassed a $1 trillion market cap, which it had done before, but it's never closed above $1 trillion. So if it does so today, which it's easily pacing to do so now, actually I say that and I realize we've come off highs a bit, but if we close above for this 209 level, then we can see it be added to, it's the 9th company to ever do so. So it's a very exclusive list of course, like your Microsofts, Apples, Amazons, Saudi Aramco, but now Taiwan Semi. So I think finally seeing the credit maybe it deserves from the street, because again, I'm like, if we have issues at Taiwan Semiconductor, then we have issues in the rest of the AI space, because this name really is such a really important, imperative part of the overall supply chain here. I just can't stress that enough. I mean, so it's objectively been, at least thankfully today, like we're clearing that major hurdle.
Yeah, it does look like that. And then, in terms of what the analyst view is on Taiwan Semi, you're clearly going to see some resetting of targets again with this one. Although, largely, you have largely buy ratings on this stock, but you still have some, who see it as a couple who have it as a hold. So will there be a reset around that, especially when you compare it to, say, NVIDIA? And how it's gained, but NVIDIA being a customer of Taiwan Semi, it's a backbone of that company. It's clearly an indicator of the strength of this sector.
Yeah, and I was also encouraged to see, I think that I was reading this note that said that the outperformance of their 3 nanometer did actually show that Apple's one of the major buyers of that. So I think that also signals some health for Apple, which is encouraging, because I have been a skeptic about the iPhone 16. So I'm happily proven wrong if we see that will outperform here. But Taiwan having a fantastic day. Obviously today up 11, we'll call it 12%. We're right around there, and adding to its 101.6% rally this year. So definitely a FOMO feeling, especially when you look at, gosh, that nice green candle we're seeing today. But we'll leave it there for FOMO. Now, coming up next, we'll be talking Elevance Health, which is selling off as some concerns regarding Medicare. So we'll discuss that more with Kevin Green coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'm now joined by Kevin Green, Senior Markets Correspondent, as well as my co-host today, Dan King Hall, to help us look at Elevance Health here, which is selling off on the back of some unprecedented Medicaid challenges. So Kevin, walk us through the story.
Yeah, and actually it initially kind of drug down the whole insurance market. If you look at it, Humana was down earlier in the session, as among others here. They are just feeling a little bit of the pressure when it comes to the Medicaid side of the equation here. Their expenses, or the amount of premiums that they're paying out for services, actually came in at around 89.5%. She was looking for 87.5% here, and this is the real reason why the stock actually dropped to the downside here. So you're just seeing a lot more of their customers really utilizing their services, and unfortunately it's outpacing what the premiums that they are receiving in. Now when it comes to Medicaid, that's a service that's kind of a joint state and federal program, so it kind of varies state by state, and it's a little bit challenging to navigate, especially here in the near term, and that's an issue that they have been facing among other companies here. But they did state that Medicare is actually going to be potentially a bright spot for them in 2025. Now their revenue came in at $1.72 billion, which did exceed the street's expectations of $43.26 billion. The adjusted earnings per share came in very light, though, $8.37 versus the street's estimates of $9.70, and they did revise their EPS guide for 2024 down to $33 per share, and that's down from $37.20 per share. So once again, pricing pressures, premiums kind of really not exceeding
we're at resistance now.
Expenses when it comes to the services the customers are taking in, and unfortunately that's squeezing margins.
Given the challenges with Medicaid, which it actually had a little bit in the previous quarter, what is expected to kind of offset? Is there any visibility around that for future earnings growth?
I think it's actually very tough, especially when you're in a political season, because obviously you're going to have some changes to the healthcare system, or potentially some changes to the healthcare system in the next couple of years here. So it's going to be hard to really put a guidance number on it. I would say that the issue that they are seeing right now is this like reclassification of customers that are are potentially eligible that now are not eligible, and they may need to go to other partners in order to be able to get coverage and things of that nature. So that also makes it a little bit difficult. But once they are able to kind of lower the bar, which they just did today, kind of gave a little bit of a kitchen sink type of quarter, lowering that bar is going to give them a little bit more breathing room in the near term. Now we do have a 3-year weekly chart here. This is actually a very interesting chart setup because we did see this kind of flush to the downside when it came to the stock price, but there was a little bit of an area of support, and we are seeing individuals kind of coming back and bidding up the stock on an intraday basis, even though the stock is still down. From a technical standpoint, that actually is going to turn out to be, if it can hold for the week, actually a bullish reversal candle, and you could potentially see some buyers actually stepping into the market here. So it's an unfortunate event, but maybe a buying opportunity for those that are very well versed in this space and are looking for an opportunity.
Okay, and Kevin, I know that this is, I mean, being mentioned as like a broader trend. We saw some pressure hit United Health earlier this week. So, I mean, can we expect the same degree of disappointment now for the rest of earnings? I guess that's difficult to predict, but I mean, you see the story and you think it must not be Elevance Health specific. Obviously, if it was, I mean, I think that would be interesting in itself, but I have to imagine this is a trend we'll see consistently from a lot of these various healthcare companies.
Well, it might be Elevance right now, and actually they're probably on the tail end of this, Jenny. So around 4 or 5 months ago, if you kind of remember, United Health had the same type of situation here when it came to Medicare, and they kind of revised their guidance moving forward, and we saw United Health just get demolished when it came to stock valuations here in a matter of 2 or 3 trading sessions. Humana had the same situation happen to them around 3 weeks ago or so, where they kind of re-rated and their expectations to the downside. Their stock kind of got hit. So I think Elevance is really probably on the tail end of this scenario here, and those that maybe have not re-rated in the past probably will have that actually being announced in upcoming quarters. But the main players seem like they've already kind of lowered their guidance and their expectations because of the headwinds that they're seeing with the Medicaid business as well as the Medicare business.
Does it seem like the worst is behind it when it comes to this, given what they flagged in terms of the unprecedented challenges? Is this, kind of a resetting now that we're seeing of the share price?
Yeah, that's a really good question. I mean, once again, the outlook for this on the political front is going to be very difficult to kind of navigate here because we do have an election that's going to be coming up here in the next 2 to 3 weeks. And then based on the balance of power with what you see in Congress as well as the presidential, you could see maybe some reforms happening in the healthcare space, maybe looser regulations on one side, or maybe an increase in spend for some of these other social net programs that are out there like Medicare and Medicaid. So I don't know if we really have a true insight until after the November 5th election here.
Yeah, and that's a good point. I feel like the political climate will be highly in focus for various reasons, but this seems one of the most important is healthcare, and obviously Medicaid is a federal program. So one will be very much closely watching and how it impacts the rest of the healthcare space. Appreciate it. Kevin Green, Senior Markets Correspondent for the network. Now coming up next, unfortunately, time to talk another laggard on the session. That is Lucid, which is down 16.5%. The hits just keep coming for Lucid. It's down now 35% this year. We'll dive more into what's driving that selling pressure with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Welcome back to Next Gen Investing. Now I'd like to talk about Lucid, which is down 16.5% today. One we frequently discuss on Under 30, of course. So joining me to break it down is George Tell, Senior Markets Correspondent, as well as Diane King Hall, my co-host today. So George, we talk about this name a lot, and I have to say, an overarching theme seems to be it's not usually positive. And so today's news, seeing a pretty sizable share sale and also wider losses, it's definitely not bucking the trend of our negative coverage, unfortunately.
It's not, and look, we've talked about this stock, several times, at least in the past year, and the same conclusion can be had. And the challenge for Lucid, it's obviously an EV manufacturer. They're luxury vehicles. I've seen a few of them driving around every once in a while. I don't see as many of these cars as Teslas. That's a fact. But one of the challenges for Lucid, which also has battery technology and powertrain technology, and that's again valuable. But the problem for the business is the timing of its existing production, as well as expensive vehicles in the EV space, which are now prices have been falling considerably. So when you actually see a couple of things going on, you have decelerating sales growth. In context, the company sold over $800 million of units in 2023, and based on the last 4 quarters, including when they reported in August, 686 million was the total sales. So sales are in decline, but the challenge for the business also is that they're losing quite a bit of money. And just to give you again some context on about 670 million in sales, the company lost about $2.8 billion in the last 4 quarters. And so with that said, if you just look at the earnings per share estimates for this year as well as next year, and you sum them up, they're basically a loss of $2.03 a share. And I talk about this all the time with you and Alex, on how essentially if you look at forward losses, you have to, and they're negative, you have to essentially look at that relative to the existing price, and you can calculate your negative earnings yield. So it's quite large for Lucid. And so that's why the stock is down quite a bit in this last year. And in fact, in the last 3 years, the stock is down about 90 or so percent. Now, in the context of what's going on with the business, you have to consider financing. And there is financing available for the company. In fact, today the company is now issuing in a secondary offering another 262 million shares, which is about $1.67 billion. Now this comes after a recent private placement of about $1.5 billion from Saudi Arabia. So what we're seeing here is about $3 billion worth of capital being raised in very short order in the last few months, and that's put more pressure on the underlying shares because of share dilution. Now, the questions is why is Saudi Arabia, investing in Lucid? Well, there is some prospects of technology growth in the business. Like I said, they have a battery technology business, they have a powertrain business, and maybe Saudi Arabia is looking for a trophy investment, to which time they actually may take the entire company over. Who knows? Maybe move operations to the Gulf states in Saudi Arabia area. But nonetheless, you have to consider that cheap price in stock doesn't necessarily mean it's cheap in terms of purchasing, because of the fact that as the company continues to lose money, they have to finance that, and they're going to finance it by issuing shares.
Yeah, and it seems like it's quickly approaching penny stock status, George. But let me ask you, in terms of the issues that Lucid is having, when you think about, they've had a slowdown in deliveries, they've had this warning about more mounting losses. Is this, when you think about kind of the EV landscape, is most of this just unique to Lucid from your view, or is this some of the kind of just broader trends that we've been seeing in the EV space this year?
Well, I think it's broader trends, and they're also maybe something idiosyncratic to Lucid, and it might have been timing. If you think about Rivian, for instance, it's another struggling EV manufacturer. I see more of those vehicles, but they actually have a powertrain contract for the Amazon van, so that's a commercial contract. I don't see that with Lucid. I think Lucid's problem primarily is, first off, price. Prices have been falling. The second thing is cost of goods sold. You have basically negative gross margins. So your basics revenues are far less than your cost of just your materials and of course the product. That doesn't include labor and SG&A expenses. So that's a problem. And the reason they can't achieve economies of scale is because the volume is very low. I'm just going to go back and look at last quarter. Production levels, they delivered about 2,400 units. So if you annualize that, that's less than 10,000 units. In context, Tesla is around 1.9 million units, Toyota close to 11 million units, Volkswagen about 10 million units. So my point is they can't sell enough volume to bring the cost per volume or per unit down. And that's essentially economies of scale. And so you can continue to operate as a business as long as you have equity capital, which they do. And Saudi Arabia is now ponying up close to $3 billion in equity financing for this business. And the other thing I'll mention here is it's not all bad, because with Jenny and Alex, I talk about a lot of stocks that have both declining revenues and earnings losses, but they also have a lot of debt. Well, I don't see that problem here for Lucid. If you see the balance sheet, they have about $3.5 billion in cash, so they have about more than 1 year's cash burn rate on the books already. They're raising more cash. They only have about $2 billion in debt relative to $7 billion in equity. So the debt levels relative to equity are still in line. They're not upside down, let's put it that way. So therefore, I don't see risk of insolvency anytime soon in this business. So for what it's worth, that's my half glass full view of what's going on here.
And I think that's a great takeaway, because a lot of these growth names I do think go through these growing pains, frankly, where you do have these periods of disappointment. I also will say the average selling price as of the second quarter was around $84,000. So this is not a cheap car, and I think maybe that's why we're seeing some weak demand. We can't afford it. But thanks, George, as always, appreciate it. Senior markets correspondent for the network. And thank you so much, Diane, for joining me today. We had a fun hour. Appreciate it, as always. That'll do it for Next Gen Investing for this Thursday. Coming up next, we have the Watch List with Nicole Petalides.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by...
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network. Good afternoon. Welcome to the Watch List. I'm Nicole Pedalides. It's 2 p.m. Eastern Time, coming to you live from the New York Stock Exchange. We're hitting records, could have record closes as well. Lots to discuss throughout this hour. We will focus on the investing approach of centimillionaires, discussing what others outside the group can learn what they're investing in. We'll share that. Uber's reported bid for Expedia. Well, that's on our radar. What does it mean?
Yeah, what does it mean, Nicole?
Down today's retail sales data and take a look at the consumer. Of course, we also had jobless claims come in a little less than expected, fewer claims. In the meantime, here's a look at the markets. As I noted, we've seen the S&P and Dow at records. Right now, 58.63, up 1/3 of 1%. For the S&P, the Nasdaq is gaining more than 0.5%. This is Nvidia and Taiwan Semi are hitting new highs. The Dow is up 201 points and the Russell's down 0.25%. That being said, oil and gold are mixed. Oil is actually down. It's here at 70.31. And so right now that's been, look, that's going to be a 5-day losing streak if that is in case the how it goes. And then we see gold 27.07, back to that 2,700 level. So that's a big deal here. Is inflation going to rear its head again? That's the question. Bitcoin is down. That's at 67,525. For some of the stories in the markets, Kevin Hinks is with us, host of Fast Market here on Schwab Network. Economic data, we had a lot. I want you to go through some of it. What stood out to folks?
Well, number one, Nicole, what stood out this morning was the strength of the U.S. consumer. We got retail sales data out this morning at 7:30 Chicago time, 8:30 Eastern, and the numbers were strong across the board. Headline retail sales month over month up 0.4. That's higher than 0.1 a month ago and higher than consensus of 0.3. X vehicles up 0.5. That was looking for up 0.1. That was unchanged from last month. X vehicles and gas, a figure that leads into the GDP look. GDP look is 0.7. So really strong numbers out of retail sales this morning. And jobless claims, 241,000, down from last week's spike to 258. You know, it's starting to look like some of the jobless claims data is going to be skewed by the weather events that we've been having over the last several weeks. So we'll watch that one as it evolves. But as far as retail sales, really strong number. That's why you're seeing yields back up to 4.1%. What do we have here? A healthy U.S. economy, Nicole.
All right, yeah, and that's the whole talk, whether or not what the Fed will do, will inflation return, the holiday season is here. We're going to have a great conversation later with Jan Rogers-Niffen in our retail segment. ECB cutting, big deal as well.
There's the other side of the story, right? Because the ECB cutting rates for the first time back-to-back in 10 years from 3.5% to 3.25%. That was early this morning. Christine Lagarde worried about the growth of the Eurozone. Nicole, that's why the dollar's higher, right? We lowering interest rates in the Eurozone while strong economic data here in the U.S. brings the dollar. And if you look at the last couple of weeks, the dollar has been almost considered spiking higher. Eventually, that'll get the concerns of multinational companies. But as of right now, it's a healthy U.S. economy that is, frankly, much healthier than the Eurozone. So, yeah, dollar higher based on the Eurozone lowering interest rates by 25 basis points.
And then last but not least, we're waiting on Netflix after the bell today. So much within that report that everybody's focusing on.
Netflix earnings per share coming out after the bell. They're looking for about $5.12 a share on about $9.77 billion in revenue. Obviously, we're going to want to know about some of the new subscribers that they're going to wind up the release of that kind of data. But remember, this is a company now, after many years, has a new growth revenue grower, which is ad-related tier. So we'll look at password sharing. We'll look at new advertising. Well, how about this stat by Netflix, Nicole? In September of 2022, they had $533 million in cash. As of June 24, $6.8 billion in free cash flow. So this is a company just booking cash and increasing their moat in streaming. They are the clear leader, Nicole.
All right, thank you for all of that. Kevin Hanks will be watching for that after the bell today. And I should add, gold, new highs today. Taiwan Semi, Nvidia, Expedia, Hilton, the Dow, the S&P. That's the big picture. Eric Sterner is with us, Chief Investment Officer at Apollon Wealth Management. Thank you for being with us. What stands out to you, and where do you think we could be headed?
Yeah, well, thanks for having me again. And I mean, the consumer is strong, and that's really propelling this market further. I mean, we continue to see evidence there. We have a strong start to the earnings season with the financials, and they're reporting a strong consumer. Another strong retail sales report this morning. And just a slew of other economic data. There was always major concerns about will the consumer or the labor market fall off the cliff, and we're just not seeing that. In the revised GDP report, it showed that the savings rate was actually on the upward trend when past reports had shown it being on the downward trend. So that's showing that the consumer has more dry powder to continue to spend. And just in the third quarter alone, it's estimated that net worth it was up 2.8 trillion with rising home prices, the stock market appreciation. So overall, net worth is up, I believe, around 47% over the past 5 years. So the consumer's still very good shape. I think you look at, if you divide the consumer up into quintiles, you look at the lower end consumer, you know, they are struggling a bit more with the higher cost of living. We see the discretionary spending going down for their budgets. But the top 40% of consumers, they're benefiting more from the rising home prices, the stock market, and they account for 60% of aggregate consumer spending. So a lot of good signs to show for the economy and the stock market moving forward.
So you are cautiously optimistic here on the market. Are you buying into equities? Is that the recommendation for folks? I mean, what kind of things should they be buying, or what should they do between now and the end of the year, for example?
Yeah, well, we're seeing the rotation in the market, and it's really started to take it in the third quarter. We know the knock on the market for the past 18 months was it was very tech-heavy, Magnificent Seven really carrying the market. But now we're starting to see that rotation. We saw it in the third quarter. The equal-weighted S&P outperformed the market-weighted S&P 9.1 to 5.4%. So while the valuation of the aggregate S&P is frothy at 21.5. We know that's top loaded. The top 10 is 30.5, while the bottom 490 is at 18.5, which is a bit more reasonable. So I think as consumers look at their portfolios to have more exposure across those sectors, there's certain sectors I like between healthcare. That's projects to have the third highest profit growth this quarter and the highest profit growth in 2025. And then materials and industrials. Those are some beaten down sectors, but next year, materials is projected to have the third highest growth rate and industrials the fifth. Because when you look at what's going on with the presidential election, there's a lot of, obviously, two sides, two very polarized sides to each debate. But one thing they have in common is onshoring. As we see more companies incentivized to bring manufacturing back in the U.S., we're seeing more spending towards warehouses, distribution centers, even data warehouses or data centers are projected to grow 50% by 2026. So that's why I think we have some brighter days ahead for materials and industrials as well.
I see. What about small caps?
So I really like small caps right now, and I've continued to like them. Still, we're going to see that volatility because they're interest rate sensitive. So as we see the inflation come down, the Fed projecting rate cuts, we see the rally, and then we hear these growth scares with the market, whether it's the labor market or consumer, we see it pull back. So there's still a lot of volatility there, but we know the Fed's going to cut rates. I mean, it's debatable at what pace, and that's going to show some relief for small caps. Their valuations are much more attractive than large caps right now. They're actually below their average as opposed to large caps above their average. And from an earnings perspective, small caps have been in a rut. They've been in an earnings recession for several quarters now. They're projected to break out and produce positive earning results in the fourth quarter and even have higher growth rates starting in the second quarter of 2025, more than large caps. So I think there's a lot to like about small caps. I still advocate for leaning into quality. It's not a complete risk-on environment, so really focus on companies that have earnings with that strong profitability or strong balance sheets. We know there's a good portion of stocks within the Russell 2000 that are unprofitable, roughly 40%.
Yeah, so you make the case for a lot of things here, including the materials and industrials, regardless of who wins the presidency or how the Congress is set up. That being said, I think about commodities as well, because we have gold at a high, we have oil at 4-day losing streak. It's right at the unchanged line, so I don't know what happens today. But, are there certain commodities that you find attractive, maybe for the longer term?
Yeah, gold has been on a tremendous run, and if you look at it, there's still some strong tailwinds. You see gold typically rally when the dollar depreciates, so we're going to see some depreciation there as the Fed cuts rates. And gold also rallies when there's geopolitical tensions, and we have obviously plenty of those right now between the Middle East, the Ukraine, Russia conflict, and even the China-Taiwan tensions right there. So I think gold still has some legs to it, as well as potentially other commodities in that space. And I always advocate for some exposure there in the portfolios because it just helps improve the diversification, especially if there is a market drawback.
Very quickly, only because I was just wowed by Bitcoin hitting 68,000 yesterday. And this is the final question, but just quickly, which 1 year it's up 135%. Do folks ask you about investing in Bitcoin? Are you finding that to be something that you recommend, or you just stay away from it, or what?
So I'm definitely following Bitcoin, and we get inquiries, but I do not advocate for any Bitcoin or cryptocurrency exposure in portfolios. I think there's still so much volatility, not enough regulation in place that, yes, if you want some speculative bets, that's a place to go. But for long-term disciplined investing, I just don't see it right now as a place in the portfolio until that volatility goes down and we get more regulations in place.
Understood. Eric, great to see you. Eric Sterner out of Holland Wealth Management. Thank you for being here at the New York Stock Exchange today. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity from the day and how investors are looking to trade on recent news of Taiwan Semi, Macy's, and American Airlines. We'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
A little knife here. Snake. 5870s.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. I'd like to welcome in Tom White, host of Fast Market here on Schwab Network. And
Come on,
we
baby.
have, optimism here on Wall Street, new highs in several places, including Taiwan Semi, which released its quarterly reports, and people are reacting positively to that, up about 11.5%. Some of your thoughts on the charts and what you're reading here in a bullish trade you found, Tom.
Yeah, what'd you find, Tom?
These were, blowout
I think I
numbers
found
in the call.
5870s here
Look
at
at,
75 cents.
profit grew
65.
54%, revenue grew 36% year over year, and then start looking at the gross margins. Those were 57.8% from July through September, and compared with 54.3% in the year prior. So expanding margins, pickup in revenue, huge profit. This past quarter, and then you start looking at some of the commentary from the CEO, C.C. Wei. He basically came out and said that demand remains robust into the near-term future. And one thing that kind of caught my eye in the report was the fact that smartphone sales, chip sales, were higher than expected, and that was probably from the push out in the build-up of all the inventory for the Apple's new iPhone. So that was a positive, but then they did stress that moving forward, that AI is going to be the driver. They expect profit margins to remain between about 57 and 59%. So those margins continue to expand. Revenue for Q4, they raised to 26.1 billion to 26.9 billion. That's up from the expected just below 25 billion. And operating profit margin expected to be between about 46 and 48%. So good numbers across the board. You're seeing the reaction here in the rest of the chip names, especially NVIDIA, which hit an all-time high today. And of course, with those type of numbers, you're going to see a lot of call activity in here. Call volume is about 8 times normal daily volume that we've seen over the past 5 trading days. So real big pickup and real big push into
Right about in
bullish
here.
calls here. And one that stuck out to me was out in the January cycle. So 3 months till expiration, got some duration on them. The 210 strike calls, trader bought over 3,000 of those. Paid an average debit just under $17 in option premium. So because it's going out in duration, this trader, you're going to have to pay more for those basically at the money, slightly out of the money calls. So that break even goes up to 226.95 over the next 92 days. That's 8% above the current share price. So you need some more upside on the name to get above that break even where they start to profit. But I think the key here is the duration that this trader gave himself. He's giving himself 3 months for that to happen into the historically strong fourth quarter. So yeah, more bullish activity here. in the chips, and especially Taiwan today.
Yeah, and he has the time, as you noted, into the fourth quarter and the new year. And I love the language. To your point, Taiwan Semi CEO using the word booming. The AI chip demand was booming. And
Booming.
Jensen Huang, you had mentioned it as well. When he talked about the Blackwell chip demand being insane. These are big words, right, that you're hearing from
Real big words.
these leaders of these companies, and it really is a telltale sign of how they feel about the future. That being said, let's move on to Macy's. This as we received a stronger than expected retail sales number that we'll discuss in depth later, and some thoughts on what's going on here in Macy's.
Yeah, stock's relatively flat today, but just still down about 19% so far this year. This has been one of the, we've seen a real bifurcation in the retail space where, you've got Costco near all-time highs, got Walmart hitting all-time highs this week, Target starting to resurge, heading into the holiday shopping season. Macy's has been lagging a little bit, but this is their big quarter, right? They're hiring an additional 31,500 employees for the holidays. They're closing some underperforming stores, so they're trying to right the ship. National Retail Federation came out this past week, said that they expect sales to grow between 2.5% to 3.5% over the levels that we saw last year. So that's totaling just under $100 billion versus $1 trillion versus $955 billion that was put out there last holiday shopping season. That's November 1st through the end of the year. So some good things to think about when you talk about the retail sales, which came in better than expected. This is the third straight month that we've seen retail sales expand. The Atlanta Fed GDP now that was just released increased from 3.2% to 3.42%. So you're starting to see that the consumer's still out there spending. Maybe they're putting it on their credit cards, but they're still out there spending in force. And I think this unusual option activity I saw today is setting up for more gains in some of these retailers, especially ones that have underperformed like Macy's. So the one that stuck out to me today in this name was October 25th weekly cycle. So just 8 days to expiration, really short-term positioning. The trader bought over 25,000 of the 17.5 strike calls. They paid an average debit of only 20 cents. These are really cheap options, Nicole. There's not a lot of option premium because it's Macy's stock. It's a low-price stock. And then plus you've only got 8 days till expiration. So that break even for this trader where he starts to profit is going to be $17.70 to the upside. That's about 8.5% above the current share price in there, with call volume of about 66,000 options have traded across all the option series in there today versus only 3,000 puts. So really skewed toward the bullish sentiment on the back of that retail sales data, and call volume is about 5 times normal daily average volume that we've seen over the last week of trading. So yeah, people piling into the retailers, and it's not only Macy's, Nicole. I saw some other option flows on the call side and some of the other retailers also.
Okay. Thank you for that. And I see that, it's not as big of a commitment as some of the prior trades. Very interesting. We're going to have a conversation later about how people are spending on their credit cards from bankrate.com and how people are shopping. So we have a big retail segment later in the show. So thank you for the segue to that. American Airlines, yesterday we were talking about United Airlines and the bullish tone for all the airlines yesterday. And you did find a bullish trade here for American. Let's hear more about that, please.
Yeah, this has definitely been one of the underperformers within the space, that and Southwest, as the stock's off about 5% this year. Still relatively flat today. They got earnings next Thursday, and I think that's going to be the key to the unusual option activity that I saw in there today. You look at those reports from United. Delta's was a little bit weaker than expected, but the stock still rallied to multi-year highs there. And you mentioned the big pop that we saw in United Airlines. And I think one of the key things going into American's report next Thursday is going to be those capacity, the heightened capacity that they saw in the summer, the lowering of fares, competition started to heat up. Those have started to dissipate a little bit. So expectations over the last couple days since Delta and United released earnings have been really ramping up. We've seen a lot of call activity in American over the last couple of sessions, and no different today. And this was out in the October 25th weekly cycle, so 8 days to expiration, Nicole. and you're going to capture that earnings event on Thursday. I think that's what this trader's setting up for. Trader bought 30,000 of the 13 strike calls, average debit of 45 cents. So that break even of 13.45 over the next 8 days is only about 4% above the current share price. Option market's pricing in right now about a plus or minus 6 or 7% move in the shares. So if you get that upside move, and I think that's what this trader's setting up for, maybe it follows in the footsteps of what Delta and United did post earnings, because this one has been a laggard in the sector, but somebody taking a shot here to the upside.
Yeah, understood. I mean, especially after what we saw with United yesterday. And earnings season has given us plenty to talk about thus far. I saw yesterday that 50 S&P 500 companies had reported earnings, and 79% had beat the expectations. I'm sure that's updated today. And today we'll have Netflix after the bell. You mentioned American Airlines next week. Any earnings thoughts, or just keeping us busy here, right, Tom?
One thing that I would say about that, you know, those beats that we're seeing that FactSet reports on all the time as far as beats versus estimates on earnings, remember, it was the financials, a lot of the financials, major money center banks like JP Morgan, Wells Fargo, Morgan Stanley, Goldman Sachs, already beating handily. Then the regional banks are starting to beat estimates. Remember, the market's at all-time highs. These stocks should be doing well right now. I think we're going to get more clarity on the rest of the names in the S&P 500, the other 450 over the next few weeks, because maybe they are going to have a different story to tell. But the financials leading off on the right foot, and maybe that signals some strength for the overall market going into the end of the year.
Yeah, you make a good point, because that group has been particularly strong.
Yeah.
And we'll see what the rest have to say. And of course, Netflix today after the bell. Tom White, he's all over. You could ask Tom anything, he has the answers. Thank you, Tom White.
Thanks.
Coming up next, Uber is looking to diversify, perhaps. Well, there's been a rumored bid for travel company Expedia. So let's dive into those details and think about the growth prospects for Uber. Is this a reality that could happen? We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective.
Break it.
Real time.
I need it to break to 21.
Full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. A few movers for you in the market right now. How about Travelers? All-time highs for this name. Reported strong earnings for the third quarter. Company reported adjusted EPS of $5.24 a share. It was above It was $1.65 above the estimates, with revenue of $10.7 billion, also beating estimates. The insurance provider is now up almost 60% in the last year. Lucid shares, well, those are falling. The EV maker said its estimates for the third quarter loss and operations will range between
Man,
765 and
Lucid.
790 million. That was wider than the estimated loss of 752. And this was released before Lucid's third quarter earnings on November 7th. Also, Lucid announced a public offering of more than 260 million shares, and the stock's down about 17%. Well, it's been reported by the Financial Times that Uber has explored a takeover bid of Expedia. Uber's lower, Expedia's higher. That's how it goes, right? But what does this really mean? Is this the goal of the ride-hailing company? Is this a good thing? Let's speak with our guest. Ivan Feinseth's with us, Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners. Ivan, it's good to see you, and I was reading through some of the analyst reports, and D.A. Davidson was saying, for example, they don't need the distraction of Expedia right now, and others say, hey, this could be a good growth strategy for Uber. What say you?
Well, it would be an interesting combination because at some point Uber is going to have to diversify away from transportation and delivery services. And also Expedia and all the travel services providers at some level want to have more and more touch points. And travel demand is strong, and I believe it will continue. And as consumers travel, they're making more sophisticated trips and multi-city vacations, multi-city tours, which involves more than just planes and hotels. It's local transportation as well as tours and activities in local places. So to add these services and intertwine them is, I think, makes it more convenient for the consumer. However, I would say right now the biggest issue, we're only 20 days away from an election that will have a major impact in M&A activity. For me, if they were to announce this deal right now, I think the first thing that Alina Khan would do is put the kibosh on it, because she's never seen a merger she didn't hate, no matter what. So chances are, even if the Democrats win, she's probably going to be replaced. But if Trump wins, then she's definitely going to be replaced. And I think that's going to have a major impact in reopening M&A activity. Then second, it would make sense for then Booking to take a look at Lyft. Lyft is much smaller by a significant amount to Uber, but it would, in the same concept, for theory, complement the services that Booking offers. So the merger makes sense because in the travel service industry, the more services you can provide, the more revenue per consumer or per your customer you're going to get. And more importantly, consumers want a more unified travel platform that just makes it easier to integrate all of the different facets of a trip.
Expedia currently has a market value of $19.6 billion. So this would be the biggest acquisition deal ever for Uber. And the Financial Times reported that it's at a very early stage. You could, theoretically, you tell me, could others step in and say, we also have an interest for Expedia? I mean, would it be as simple as I know that Dara Khosrowshahi has the history at Expedia, so that helps the streamline. But maybe others step in.
Well, the concept makes sense for Uber. It doesn't really make sense for other service providers. A merger between Booking and Expedia, first of all, that would have a difficult antitrust hurdle to overcome. But the airlines are, it's just, I don't really know who else would be a buyer in some way to either vertically or integrate their business. This does instantly diversify Uber's business. And Uber also has a very large customer base that they can bring on board to Expedia as well. So other ideas of who benefit from a merger with, I don't think there's that many, but this is an interesting merger, and it does make sense from both the company and the end customer user result. The difficulty is going to be probably coming up with a valuation for Expedia and also regulatory approval.
Right, you know, so we will continue to follow that. I saw one valuation of 19.6 billion, but to your point, it makes sense in that Uber's already into travel as it is, and this would expand that. I was trying to think, I'm like, maybe an Amazon that does absolutely everything anyway, that doesn't necessarily go, or, you know, we think of airlines and cruise lines. And by the way, as I mentioned cruise lines, and we're thinking travel, you love the cruise lines, and some of them are really doing incredibly well. I didn't pull them up most recently, but I know we saw some great moves, and I remember saying to myself, I have to ask Ivan and circle back what he thinks about this group. You called some great calls, now what?
I think the market is finally waking up to the strength of the cruise business, the strength of the travel business, the strength of the cruise business, the value of a cruise vacation, which still is significant over land and other types of tour vacations. And the cruise industry is not slowing down. I mean, everybody has always doubted the demand at some point would end. I mean, the cruise companies, they're booking into 2026. They have more ships coming out. The capacity, they are capacity constrained. There's not an overabundance of capacity. More ships means more cruises. And you even have Disney, as for a long time that I've covered Disney, only recently has Disney started to highlight their cruise business and the fact that they are also adding ships to their cruise fleet. So I think the momentum will continue for the cruise industry and the booking momentum, I mean, and the share prices, I think, have more to go.
More to go. Okay, so do you buy Uber? Do you buy Expedia? And which cruise line do you buy?
I think still the one with the most upside right now is, to stack rank them, is one Norwegian followed by Carnival. Royal stock has done tremendously well. I think there is further upside in Royal, but maybe the other two now close the gap with Royal. Royal's been the one to beat, and I think that both Norwegian and Carnival will catch up. And then you have a recent IPO of Viking, which is a very unique niche of the river cruises, the more educationally focused, experiential cruises, and that stock has done well, and they are benefiting from strong consumer demand for cruises as well. And then look, I like Booking the best as far as the travel service providers, the travel service aggregators. But if we could get a deal for Expedia, it probably has 20 to 30% upside. That would bring it close to its all-time high from a couple years ago, in which that would probably be the level of, it's like $25+ billion that Uber would have to pay, and also most likely use stock to allow the current Expedia shareholders to participate in what would be the upside of the merger of the two companies.
That's big. That would be big if Expedia were to move 20% plus, 20 to 30%.
That's probably where they would have to be to make a deal.
All right, Ivan Feinseth, Tigris Financial Partners. Always great to see you. Thanks
You
so
too,
much for
thank
being
you.
here. Okay, up next, we're focusing on centimillionaires, their investment approaches, as members in this special group are pouring funds into crypto, artificial intelligence names, and defense stocks. What can we learn from the strategies we're seeing? We'll dive right into that right after the break. Stay with us.
Blanket. You get my coffee warmed up.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We want to focus on centimillionaires. That's folks who have at least $100 million in liquid assets, and they're getting richer. So what's behind it? How are they investing in the current market environment? What are their investment strategies that certainly seem to be working? Well, someone who's studied this for a very long time, Barbara Goodstein, is with us, managing partner, New York chair, R360. Thank you for being here. So you're meeting with these folks, you're seeing trends over a period of time. How many are there? Is it growing? What's the trend that you're seeing?
So we have over 130 members now, and it's growing quickly because everybody's looking for community. And people who have a significant amount of wealth want to meet with other people and share ideas and share opportunities. And it's really not just about the wealth and making money. They want to also talk about how to raise children, how to have good families, how to protect their wealth going forward. So there are a lot of different conversations that are happening with this group.
Yeah, and they're like-minded because they have the same sort of bank accounts and maybe some similar concerns. And also, as you noted, it's not just about the money. Some may be interested in research and development or artificial intelligence, or right? Are you seeing some themes like that?
So we say that wealth is more than money. That's the overriding premise here.
Yeah.
That this is not just about money. This is about having purpose, having passion, and building a legacy. And a lot of these people are doing that by talking together, by sharing ideas. 80% of our members are not managing their own money. 20% of our members are very, very sophisticated investors, and they've been managing money for years, managing money for other people. So it's basically like you have access to people of the caliber of a Warren Buffett or a Bill Ackman. They meet in a group once a month called the Market Opportunities and Risk Group, and they talk about what they're doing themselves. Where are they investing? We have one member who's a hedge fund investor, and he's been promoting Bitcoin for years now.
Right.
And everybody listening to him has made a fortune. Our members aren't just investing, they're building these businesses. So right now we've got October, so Bitcoin's been up like 10% in this past week, and he's been telling everybody to be investing in Bitcoin for years.
Yeah, understood. I mean, Bitcoin in 1 year is up 135%. We were just talking about that. It's been a great investment. I mean, yesterday it was 68,000, not too far off from its all-time highs. And you have people calling for 100 and 200,000. And how are they doing that with Bitcoin? Are they, looking at the new ETFs, not so new since January? Is that how they recommend doing that?
So there are a number of reasons why we are so strong on Bitcoin. One is that Bank of New York recently was approved to custody assets, and that means that other banks will follow shortly, which ultimately means that people will be able to collateralize loans against Bitcoin. So that's an enormous opportunity. We think that Bitcoin is going to be to banking what voice over the internet was to long distance. It's going to disintermediate banking at some point, someday. So huge upside, and our members are driving that upside, creating the conferences where people are meeting to talk about Bitcoin.
Right, and look, I mean, some of them may be risk takers because it's not a proven gain, right? I mean, there is always risk on any investment, but on Bitcoin, we don't have all the regulation, or there are some concerns sometimes about the volatility. What about AI?
So same thing, our members are always out in front of all of the different big opportunities.
Yeah.
And we've been investing in and talking about NVIDIA for years now. So we talked about NVIDIA in both our market opportunities and risk call.
TSM,
as well as
huge.
our internal publication called The Night Owl. 4 times in the past 3 years we've been talking about it.
The
And
Night
so
Owl?
we sort of anticipate trends because, as I said, we have some of the most savvy investors in the world.
You do?
Are members of R360. They're not telling people
How come I'm not
or their
involved?
fellow members what to buy. They're telling them what they're buying.
It's amazing at this point, and you know, some of the things about putting things in trust or how to, you know, handle family money, for example, to really save a lot of principal. What are some things that seem to be the no-brainers?
So that's really focusing on intergenerational
15 more minutes to Power Hour, less than 15 minutes.
Join R360, have enough wealth. They're not trying to create money for themselves. They're set for life. They're creating money for the next generation.
Yeah.
And
Oh.
so that's been a priority of ours. One area that we also talk about is biotech, because there's so much upside in biotech. Brain computing interfaces is a new space in biotech that has tremendous upside. We just had a meeting last week with a woman who's close to patenting a vaccine for Alzheimer's. So this is intergenerational
Very
wealth.
interesting.
This is not just investments that's going to pay off in the short term. It's going to pay off many, many, many years from now as well.
So when we talked about Bitcoin, we mentioned some ETFs, and here you have IBIT and FBT from Fidelity. For AI, you talked about NVIDIA, and people, I guess they've liked that and have recommended it in your markets opportunities meetings. And then there is aerospace and defense, and you have 3 names here that people have had an interest in, right?
So we look at companies like Lockheed Martin and Raytheon and other companies in that space. So we look at companies and then we look at stocks, but we don't ever recommend any of those to our members. We're just talking about defense. Basically, right now, the U.S. is spending 3.1% of GDP on defense spending. Historically, we spent up to 4.3%. And given what's happening in political markets around us and given the global strife, we anticipate that that's going to go up higher. We don't only look at U.S. opportunities, we look at opportunities abroad. We think there's a big opportunity in defense spending in India. So we're looking both domestically and internationally, and we think that defense is a big upside area.
Yeah, I mean, there's plenty of guests who come on who actually do pick those names and stocks. We did have some news on RTX today, having to pay some penalties to settle some charges. But the big picture is that there are many folks who come on and do like this group very much. Very fascinating to hear more and more. As you noted, the average holding is not actually 100 million or 110 million. It's closer to about 500 million.
Yes.
And the number of people that have over 100 million are growing. So their investments are working. It's great to speak with you, Barbara.
Thank you.
Thank you for all the research and insight and all that you've learned over the many years and sharing it with us. All right, that's Barbara Epstein at R360. Thank you.
We like Barbara.
We bring in our panel to discuss retail sales data from this morning, and we'll break down that data very closely to see the health of the consumer. Next here on the watch list.
We need boom boom. $65.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
Ooh,
Schwab
yeah.
Network.
Welcome back to the watch list. Time to focus on retail. We had retail sales this morning, stronger than expected. The holiday season is upon us. What do we need to know about the group? And we just heard that Macy's was hiring over 31,000 folks for the holiday season, right? So they'll have some temporary hires there. Jan Rogers-Niffen is with us, CEO at J. Rogers-Niffen WWE. Ted Rossman, Senior Industry Analyst at Bankrate.com. Thank you both for being with us. So, Jan, you saw the report this morning. Last year, you projected the growth for the holidays when others were not as optimistic. Does this morning's report sort of echo what you were thinking anyway?
Well, Nicole, you know I wrote the report I gave you yesterday. I hadn't even seen what the sales would be, but I was really relying on NRF being right, and it turns out NRF was right. They were right in line with what the government told us today. So, yes, it wasn't surprising to me given what NRF had just told us, because they had told us that apparel was good, that accessories were good, that sales were continuing to be solid, not quite as strong as last year, or year over year, not quite as strong as year over year last year was, but still strong and still good, but not great, right? We're seeing a little slowing, we're seeing a little higher unemployment, we're seeing a little strain in credit, but all of that mixed together, we're still seeing pretty good sales. The NRF's saying 3 to 3.5% for the end of the year for the holiday season. I'm saying 3.5 to 4. I'll probably be just as right as anybody else. But sales are okay. We're going to see a post-election bump.
Oh.
So last year was, I think, 4.3% roughly. Deloitte's on the lower side, thinking 2.3 to 3.3. Adobe was actually up over 8%, so they seem more optimistic. How do you feel, Ted, as you take this retail sales report today? What does it tell you about the health of the consumer for today and going forward?
Yeah.
The phrase we've been using for a while now is the resilient consumer, and it's still true. I feel like there are some shifts going on underneath the surface. For example, we talked a lot in 2020 and 21 about the at-home stuff. Everybody did renovations and they bought electronics, and then 22 and 23 and a lot of this year were about experiences like travel and dining and concert tickets. We're starting to see more normalization there. So consumer spending has still been strong, and it's still stronger on experiences than on physical goods, but it feels like that gap is narrowing, that we're going a bit back to normal. Travel not as strong, some of the physical stuff picking up, notably clothing. We're starting to see some product replacement cycles coming around for electronics and appliances, but overall it's more evidence that the economy and the consumer are in better shape than many seem to realize.
Yeah. Yeah, you're each talking about where we may see some strength or maybe some, people beefing them back up, whether it's electronics or accessories or apparel or whatever. On the channel checks here, Jan Rogers-Niven, what do you think people are going to ask for the holidays?
Number one, I think I gave Ted my notes because I agree with everything he just said. Absolutely, I think we're going to see continued weakness in the electronic side. We're going to see continued difficulty in home furnishings, things like that. They're getting better, but they're not getting good. We're still seeing problems in sporting goods despite the great performance by Dick's. But we're going to see a shift in the consumer. They're going to buy more in the way of goods and less in experiences, relatively speaking, because the experiences are still inflating at 4% and goods are inflating at 0 or negative. So they're smart. They're going to go, gee, this is a better deal. And it's going to be in apparel and accessories and shoes and all the things like that that I love so much.
Yeah, and you mentioned that you like some of the brands, right? You said Nike has always been a favorite. What brands seem to be, you always mentioned Walmart. You did actually say some of the department stores may be taken private. Name some names quickly, Jan. Just give us the inside scoop.
Well, I'm a big fan of Ralph Lauren, but now with Nike, with a new management, I'm a big fan of Nike. And I'm still a big fan of Boot Barn. I'm still a big fan of Casey's General Store because I think they're in little niches. I'm a fan of Tapestry because I think they'll get their deal done, and I think that they're going to be a great company coming out the other side. So anybody that's doing better brands is going to benefit. You don't have to be luxury, just better.
Right, understood. And Ted, how are we doing on thebankrate.com as you look at how people are with their credit card debt and their delinquencies, and can they shop more for the holidays, especially if some of that debt maybe is financed at a lower rate, or the Biden administration pays off some loans, or how are we looking on that end?
It adds up to a frugal, deal-conscious holiday shopper, I would say. Our recent survey found that only 1 in 4 holiday shoppers plan to spend more this year than last. 1 in 3 plan to spend less, the rest about the same. Now we'll see. What people say and what they do sometimes diverge. There's also a perception versus reality difference where a lot of the actual data has come in better than perception. On the subject of credit card debt, those figures are still at record highs. And even though interest rates are starting to come down a little bit, it's not making a big difference. There is a big divergence there between the half of cardholders who pay in full every month and avoid interest and the other half who carry this expensive debt. So there is a lot of economic inequality that factors into these consumer spending numbers as well.
And is the debt at records, and is the delinquency notable?
Credit card debt is at a record high, and the delinquency rate is actually the highest since 2011. Now, banks don't seem particularly alarmed. They view this as kind of normalization after the pandemic weirdness when delinquencies were actually really low for a while.
4 more minutes to power
In
hour.
historical context, they're not so bad. But this is another one of those all news is local kind of things that at the individual household, it plays out differently. The big picture for credit card lenders, though, is still pretty favorable.
All right. Thank
3
you
more
so
minutes.
much. Good luck ahead of the holidays, too. At the retail sales today that came in stronger than expected shows the consumer has shown some resiliency, continues to do so. Jen Rogers-Niven, J. Rogers-Niven, WWE, and Ted Rossman at bankrate.com. Thank you both very much. And thank you, friends, for being with me here on the watch list on a record day for the S&P and Dow. Could we see some record closes? Well, we'll keep it here for that. You could download our Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Petalides. See you every day, 11 a.m. and 2 p.m. here on Schwab Network. Thanks for being with me. Market on Close with Oliver Rennick is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see pattern. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
Well, J-Hook.
A fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No, I have not.
Vanguard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Very good.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. We got an hour left in the day here. Stocks a little bit mixed. Equity's been trying to stage a rally, but just can't quite get it all together there today. But
not
we
today.
still green, and we're still with the 58 handle in front of the S&P 500 and marginal bounce for the Nasdaq. 40 basis points looks pretty disappointing compared to where we were this morning. Up more than 1% right out of the gate. Didn't hold. Got what you wanted to see from Taiwan Semi. Got what you wanted to see from economic data, retail sales, pretty nice growth there, surprisingly good. Jobless claims surprisingly low. So the pieces of the puzzle were there, but it's not coming together. So I'm not really sure what to make of it, but today was the day for action, given all of the news flow, the important companies, and the important data. So a little disappointing. Maybe they'll ramp it up tomorrow. Maybe they'll fade it. Who knows? Tomorrow's pretty light. Some economic talk from the Fed speakers, but that's about it. This was kind of the opportunity to get a lot of movement. Taiwan Semi, though, I mean, plenty of movement there. Still up above $207, 10% rally, more than that. Big move, definitely giving us a nice dose of confidence that the AI themes are still locked into place. But the halo effect is a little bit more shallow, perhaps, than some of the other previous instances of big numbers that were delivered from big companies. Just kind of a more limited impact. NVIDIA moving, but chips overall somewhat small of a bounce. 2.5% is solid, but still below the high from earlier this week. NVIDIA a little bit different though. NVIDIA 139, put the intraday high in today, came back down, but it just really does still seem like a matter of time until you get a real conviction follow through and breakout for NVIDIA. Just kind of toying with the $140 level right now. That's not a bad thing. The fact that we were able to get back above from where we were earlier in the week to start off the week. Had a little bit of a dip, come back. It just is not showing up in the broader sector. Maybe that also is a matter of time, but that one's a little bit more of a complicated case. You're going to have to get more participation, perhaps something for later on in earnings season when the real big tech key players for the chip trade start to report, which is still a couple weeks away. So that is not bad, but not great, very stock specific. If you look at the macro, pretty good message from bonds, selling off a solid amount. That is, I think, what you want to see. But because of that, you're going to get a little bit more of a sluggish uptake in some of the other stuff that have been doing well yesterday, like the value trade and a few of those items that are more geared towards a potential kind of growth cycle with the Fed at your back. Fed may not be able to cut if data keep coming in warm. Don't want to analyze that too much either. Just a little bit of chop, and the regional banks are still up too. So a little bit kind of a nothing day, treading water, not a lot of big macro takeaways, not a lot of clear thematic stuff. A little frustrating. I like when there's clear messages from the market. But you do want to look at bonds pretty closely because the selling's pretty serious and the dollar's been really strong. The dollar's having another good day, and it looks like the other central banks are still going to cut more than us. That's at least one pretty clear message. What that means is that the dollar probably is solid right now. The trend looks really good over the last 2 weeks, and the 10-year yield, which had slipped earlier this week, now coming back. I did talk about that yesterday, that we were likely to get some bonds selling today, so we did. 10-year yield pops back up. Nothing really magical about that, just the idea that economic data have been beating expectations and the dollar and yields have been correlated, so the dollar staying firm while yields dropped looked like it was more of a response to some stock selling earlier this week and not a reversal in the trend. So bonds now back in the trend and yields going higher, and that's good when the economic data are good. Not good if inflation numbers are hot and then you have to have some big reversal by the Fed, but that's just not in the cards right now, it doesn't seem like. Inflation data have been all right, retail sales looking pretty good, and we got good jobs numbers, so continuing the trend of repricing some of the Fed expectations. Not going to have to be as dovish as the rest of the world. I think that's a good thing. And I also think it's good the financials are still in the mix today too. We got regional banks up, really important groups still holding on to the gains at $68.50 for the ETF, so that's a really good move. Just some of the other value stuff that was doing really well yesterday took a little bit of a breather here today. I got Jenny Horn and Kevin Hanks here with me in the studio, our hosts on the Schwab Network, of course. What do you think about this day, Kev?
I think that the textbook case for a good economic data in a failed rally is a higher moving dollar, higher moving yields.
Okay.
And although that is indicative of a strong U.S. stock market or a U.S. economy, eventually that's going to lead to a fatigue in a rally. And I think you may be seeing a little bit, because really, on the surface, Oliver, there's no reason we didn't extend gains today, other than the yields hit 4.1 and the dollar. Look at the move in the dollar since its lows. It's strong move. I think that eventually starts to wear on rallies and make them run out of gas. That's my history with moves like this. If the dollar and yields are higher, watch for failed rallies. I wouldn't call this rally failed, but you know, we basically have, you know, 3 sectors of the S&P up. You've got about 6 down and 2 unchanged. It's a real mixed day for the market, despite all the good news that we had this morning. So when all the news seems too good and the market's not making new highs, I look to the macro, and the macro says, you know, things are getting a little bit rich in terms of pricing, and then the dollar and yields tell us that.
10-year yield low 3.7 in mid-September, and we went all the way to 4.1 during that time. Yep. Stocks are up 7%.
Yes.
So
yeah,
now it kicks in.
Eventually, higher yields start to affect stocks. Eventually,
yeah.
Eventually they get to a place where traders start selling rallies, because of yields, because of the strong data, and now the potential that yields you can make a case they can go higher. Actually,
some of the stuff that's getting hit, a little rate sensitive, real estate, utilities. So, all right, okay, that works. The 2 sectors at least there that we know generally don't love the moving rates. Bitcoin and some of the riskier stuff kind of under a little bit of pressure today. I think just too, it's frustrating when you get pretty much everything fall in place like you wanted this morning, and then there's no follow through. And then when there's no follow through, it's kind of like then we go the other way. So
I feel like right now the market is almost like punishing itself for how strong it's been, where we don't reward good news to the extent in which we punish for bad news. Like, look at the sell-off we saw Monday in semiconductor stocks, which we've said over and over again. I mean, that didn't make any sense to me. I saw this headline that said semiconductors poised for a slowdown. I mean, what slowdown? You hear from Taiwan Semiconductor, which is one of now the largest, I believe it's, in terms of its market cap, the second largest as far as semiconductors go. And I'm frankly shocked we haven't held on to a stronger day, again, because I feel like we are so quick to punish. Like, those that are rooting for more economic downturn are still in that camp. And that is, to me, a very odd stance to take, to root against the market.
yeah, the strength.
That's right.
A few of the banks are more, the financials are a little bit more kind of some of the offbeat names. Travelers is up a good bit after their earnings. Blackstone's up though too. So there are a few pieces of information on the financials that are encouraging, because that whole sector now has been really strong this week.
I mean, oh, go ahead.
Oh, you go.
I was going to say, insurers have been surprisingly interesting, which I never thought I would say those words.
Well, if you look at auto insurance rates and insurance rates in general over the last year,
A couple hurricanes are going to do that.
18%. So these insurance companies that went through a little bit of rough time, they're making money now.
Yeah.
Also, travelers, this didn't include obviously the recent impacts from the hurricane, which they expect to be like 75 to 175 million. So I think that's also somewhat of a relief, even though this report does not indicate at all any of that recent catastrophe. I think that there's like somewhat of a sigh of relief. At least we have numbers, again, a huge range. I mean, 75 to 175 million. But I do think anytime there's unknowns, that's what the street doesn't like.
Here's the way to think about insurance. As long as the loss ratios are healthy in an insurer, when after coming off something like this, rates are all going to go up.
Yeah.
So the prospects are better.
That's fair. Also, just every sector, every vertical within financials this week. The regionals, big banks, insurers, asset managers. I mean, it's a pretty big week. I think that they are kind of stealing the spotlight a little bit. So to your point on rates too, I mean, that's a group that didn't like a couple of years ago. Yield curve inversion, higher rates. They seem to be okay with it right now. And banks are rolling. Financials now up 26% on the year, so they're actually beating the S&P 500.
I think the banks have been a great story, and you can. I joked today on Fast Market that the banks kind of guided that trading revenues were going to be down, net interest income were going to be down. They softened the expectations and then killed on earnings, and all these stocks have jumped higher.
Yeah. All right, so what happened to the tech trade, you think, Jenny? TSM and NVIDIA, you think it's just gotten more isolated, where the knock-on effect not quite there for the rest of the names?
I'm perplexed, honestly, about it, because, okay, I saw the market, at least within the first 20 minutes of trading today, $257 billion was how much these largest 10 stocks in these stocks did add within 20 minutes. So that's amazing in itself. And I guess to not discount, like NVIDIA, I mean, Taiwan did hit new all-time highs today. I feel like we're clinging on to like the more concerned, like we still have all this concern going into the rest of the chip trade. I think that actually Micron could be really interesting going into earnings. I think AMD, a lot of these names still well off of their own highs. So even though there is still an outstanding story to be followed in NVIDIA Taiwan, I feel like the rest of the AI world is somewhat what's dragging that down.
Yeah, NVIDIA 2%, $139. I mean, we've got it sitting at highs, so
140 is a key level. And
yeah.
I mean, I'm not exaggerating there when I say that, obviously.
Apple also, a little chop, but sitting at highs too. I feel like we may not want to analyze it too much. Just kind of don't look a gift horse in the mouth, right? AI is still crushing, basically. The trend is there. Taiwan's great. NVIDIA is great. Apple's pretty solid. Meta's doing layoffs. Stock market's fine with it. If you take a breather for a day, probably not the end of the world. Mag 7's still looking pretty solid for the most part. So tomorrow, though, I mean, we got nothing, basically. So what's your gut tell you into the weekend, Kev?
I think watch the macroeconomics. Right, we got American Express and Netflix will be fun. Then we cruise into the weekend, and it depends on how we finish the week. The narrative will go into the next week. Maybe if the market starts to focus on the macro, I mean, the micro stories from these companies are all really positive.
Yeah.
So the only thing that can stop it is macro.
Yeah. Well, I kind of think the banks, too, kind of stealing the show a little bit, help some of that value trade linger and carry through today after a really good day yesterday. All right, thanks for thoughts, guys. Appreciate it. Kevin Hanks and Jenny Horn joining us, Rayanne Mitrione. is investment management partner at Callan Family Office. Rand, thanks for being here with us on the Schwab Network. Chime into the conversation here. We got a lot of good stuff from tech and data this morning, but just sort of a sleepy day. What do you make of it?
Yeah, thanks for having me, Oliver. It is kind of a mixed day today. We did get that great, good retail sales print this morning. Consumers still strong, still spending. That's always a good thing. Market sometimes gets a little bit odd about that with maybe, we won't see as many rate cuts as we want to see. But at the end of the day, I think the Fed is still going to continue easing. It's good to see good data. And, we are seeing a great day in NVIDIA that pushes the market up, but it is a bit of a mixed bag today.
What do you think about our conversation stocks relationship with bonds? It seems like they've been happy to see yields going up for like 3 weeks. So why would any of that change, or is there a point at which it does, you think?
I mean, stocks and bonds, they're both good places to be right now, obviously. We've seen such a great year this year, really the last 2 years. But we've seen the market broadening out over the last few months. On kind of that expectation of rates starting to move down. And it's still, the equity market is, in our view, a very good place to be invested. We are leaning into that rotation. Mega cap tech has been a great trade. We still want to have exposure there, but investing more with small caps, more on the cyclicals and value, also good. And same thing on the bond market. Bonds are looking attractive as well. So I think you want to be invested on both sides at this point.
I like the point about rotation. Tell me what that means to you and how you lean into that.
Yeah, so we've had really healthy allocations in growth and the Magnificent Seven stocks specifically over the last couple of years, and that. Stay strong, as well as looking at some of those dividends do well also as investors are looking for a new place to find yield with money market rates likely coming down here. So, really just kind of rebalancing portfolios in that way.
Right now, we've seen the earnings start off with a pretty good report from big banks, regionals, pretty solid. Does that fit into the kind of value camp? Does that fit into the rotation theme?
Yeah, I would say so. I mean, if you look back the last several quarters, earnings have been strong, but they've really been dominated by those mega cap tech companies. So we're starting to see the divergence there narrow and expecting to see more earnings growth in other parts of the market. That story will broaden out, and maybe it'll narrow some more this quarter, and we really expect it to kind of pick up in the fourth quarter and into next year. So we do think there's opportunity there for other parts of the market to really shine.
Do they need rate cuts? What's your view on the trade-off between economic stability and cuts? Would you prefer just the data stay firm, or does the market really need to kind of follow through to dovish expectations?
We want to obviously see strong economic data continue. It's been really reassuring to continue to be in that place, and then to have rate cuts on top of that should be a great tailwind. If we don't see as many rate cuts as the market is predicting, I don't view that as a bad thing. That's still a good thing. If the market stays strong and there's no need for that's not a bad place to be. So you will still see, as long as rates come down some, that would be a great tailwind for small caps specifically. With you look at that sector, and half of the companies in that index have floating rate debt. So it would be a meaningful tailwind in that area specifically.
When you think about what might kick into gear for the economy and what the potential upside would be, do you want things tied into that kind of cyclicality? Is there room for real growth from here?
Absolutely. We're seeing the consumer has shown all indications of remaining strong. There's still, a lot of, we're seeing spending, we're seeing the jobs market has been incredibly resilient, still on solid footing there. Inflation's coming down. As long as we continue to be in this area and kind of trending around the same place, I don't see anything on the horizon that would necessarily tip us in a negative direction.
Thinking about with the VIX elevated, we got an election coming up. Does that stuff factor into the calculus at all in your mind?
The election we will see some market volatility around it. I would expect that, especially between now and the election. And then if for some reason we don't have a clear winner on election day, or there's contested election, that wouldn't be good news for the market. But at the end of the day, we really aren't positioning portfolios based on
Not much going on.
There is historically no real correlation between whether the market is doing better with a Republican versus a Democrat in the White House. Gridlock tends to be the best environment for investing. We will take into account, once we have more clarity and we know some of what policies may look like, there may be some repositioning at that point. And obviously some recommendations for clients as far as estate planning and other strategies that may make sense at that point.
All right, good framework. Makes sense. We'll be in touch to follow up. Thanks a lot, Rayanne, for the thoughts.
Thank you.
Rayanne Mitrione, investment management partner at Callan Family Office. All right, good discussion there for the macro side. Knock that out, and we'll come back to talk some tech. AI, taking a deeper dive into the numbers from TSM and NVIDIA. And why the hesitation in NVIDIA? Why no blast off? Gotta wait for NVIDIA numbers themselves? That's fine. We're sitting at highs, toying with that 140.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Not yet.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
NVIDIA real close to its all-time high intraday, hit it above 140, but it's kind of stalling out into the bell. We got 40 minutes left. Michelle Connell joins us from Porsche Capital Management. President, welcome back to the show. Michelle, what do you think about this chip trade today?
Yeah.
For having me, Oliver. I appreciate it.
Absolutely.
It's the story that just will not go away, and I think we're going to be living it for quite a few years. When you have the CEO of NVIDIA saying that his demand is insane and Wall Street is underestimating the numbers.
How much do you think they're underestimating it? Is there more surprise to come?
I think there is. We need to see what the demand is once the Blackwell chip, the AI chip, is released in December. But, there had been some concern that they wouldn't be able to meet the demand. Now that has kind of softened. So I think everybody just wants to see how that the chip, the rollout of that starts hitting the markets, and is it everything that the CEO says it is?
When you look at the growth numbers here, what do you think we need to maintain, and where does the surprise come from? Is it just from big hyperscalers that have already bought? Maybe they'll have to buy more, or the new customers? Where is that kind of marginal buyer at right now?
I think it's a combination of both, because when you look at
That's a
how
good
much
question.
A large company is going to have to invest in the GPUs and the data racks themselves, it's a lot of money. And I think there's a lot of mid-sized companies that have been waiting to make those investments because they are so expensive.
When you look at who's going to be competing, is there anyone with NVIDIA? Is it worth taking a stab at AMD and others?
Nope.
Interesting question. AMD recently had an AI event where they showed their competitive chip, which is, I believe, it's called Instinct, with some long numbers and initials behind it. But it looks competitive, but I don't think the street was convinced that it is as competitive as NVIDIA. And we'll need to remember that this is going to be, AI is a game where you're going to have to constantly innovate, and NVIDIA has 7 times the cash that AMD does. So they're going to be able to play that innovation game, right? It's going to be harder for AMD.
Yeah, seems like it is right now. Thinking about the course of events this week, ASML disappoints, TSM beats. How do we explain that difference? What was that gap between those messages?
I think the gap is who TSM's customers are, right? They've got Apple's their #1 customer. They have NVIDIA #2. And then they have Intel as their 3rd largest customer. And Intel is looking at actually giving TSM more of their business, more of their fab business, because they don't want to make that investment themselves, because they've got their own financial problems that we all know too well.
When you think about those players that are lagging behind, what's the end game? I mean, is it going to get worse for companies like Intel? Are there going to be others we find who are majorly disrupted? That's kind of where the AMD thing, I feel like the market always assumes they're going to catch up, but I don't know if NVIDIA's really gobbling up all of this, or we're going to find out there's deeper losers beyond just Intel.
When you look at tech, over the past 40 years, yes, you're always going to have losers. That it gets harder and harder to remain competitive when you don't have those deep pockets. I mean, we totally discounted Microsoft several years back. Look at where they are now. We've discounted Apple at certain points. Look where they are now. Their stock's at an all-time high. So I think the bigger you are and the more cash you have, the easier it is to spend that cash to innovate and to acquire.
Okay. Acquisitions, you think this is maybe an end game too? Some merger possibility? Taiwan said they're not interested in buying Intel's fab, but there have been other rumors of potential tie-ups.
I think that's very possible, because when you have the kind of cash on your books that an NVIDIA does or a TSM, you've got to spend it somewhere. I don't think you're going to increase your dividend. So you're going to want to remain competitive. And a lot of times, acquisitions are the fastest and easiest way to do that. We've seen that in technology, and I think we're going to continue to also see that in biotech in the next 5 to 10 years.
Agreed.
Any of the restrictions matter in your mind, Michelle? There's been such a deluge of generally government restrictions, but it seems like the stocks have been all right with it. Will any of that limit their potential, or will it just have to shift stateside or find new customers?
I think those are clouds that we always see far out in the horizon, right, in terms of what could potentially happen on a geopolitical side, chip restrictions. I mean, this is our #1 intellectual capital for the United States, right? It's technology and AI. We're going to be very, very protective of that. So I think not maybe in the near term, but in a longer period of time, this could become, a point of contention between companies rather, or countries rather.
Okay. Michelle, thanks for the catch up. Appreciate it.
Thank you, Oliver.
Thanks for your time. Michelle Connell, President of Porsche Capital Management. We're going to go through some of the options levels and flows with Kevin Green coming back. This morning he told us there was going to be a little trouble punching through at that starting point, nearer to 59 than the 58. We're basically right in the middle right now, 58.46 and change.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Stocks are failing to rally here. We've got some green on the board, but not much. Kevin Green back with us. KG, we got stopped out kind of early this morning. What happened?
Well, I mean, obviously we had a little bit of resistance. We kind of crossed over that 58.75 area, which is pretty much where we opened up, and then we kind of saw some selling coming into the market here. Now, what I would say is that around that 2 o'clock Eastern time is when that QYLD position started to get unwound here. That's that covered call that they have within their portfolio, and we are actually continuing to see that cover of that position happening right now. They're utilizing an algorithm in order to not spook the markets, but the initial trade really created that sell-off to the downside here, that pressure to the downside, which is what I was kind of mentioning earlier. It's that
which one is that?
On an the QYLD. That's the NDX covered call strategy ETF by Global X, and so they actually had a 19,725 call on the NDX. This isn't for the SPX, this is for the NDX, okay? So they had 4,000 contracts, 4,152 contracts on this covered call. So they cover that position here today, and that initial cover started at 2 p.m. Eastern time, which is why we saw that disjointing situation actually occurring when it came to tech stocks. And then that's obviously fueling into the S&P 500 sell-off here. So that kind of chain reaction is really what caused that initial break to the downside in the market, or that significant drop in the market on a relative basis.
Around, 1 p.m. Chicago time?
1 p.m., yeah, 2 p.m. Eastern, 1 p.m. Chicago, yep. So that's exactly kind of what happened. So we saw the initial trade come out, it was around 58 contracts. Once again, they have 4,152 contracts to cover. It doesn't sound like a lot if you're talking about the S&P 500, but we're talking about the
Nope.
which there's not that much open interest. So they were actually pretty much the only open interest there. Think about it as a kind of like that JPM collar position that we kind of talk about, even although this is just a covered call. They basically were buying back those covered calls, and then those dealers were then obviously selling out of those calls here. I think the initial trade is enough to kind of spook the market for the most part. Now it does appear that they're going to actually layer in their new call tomorrow, and that might actually have some vol risk. I won't get into the weeds there. That might have some vol risk in the future here, which is another reason why dealers might have actually sold more contracts rather than buying all those contracts back up in the futures market to kind of create this domino effect to the upside. I know that kind of gets really into the weeds, but it was more of a mechanical shift that happened at 2 p.m. Eastern rather than maybe some news hitting the market or what have you.
That's their buy right fund, right? Is it so? It's not automated. Is it discretionary to where there's a manager who just decided, okay, we've got too much risk on those positions, we got to take it off, or?
No. So this is a covered call that expires tomorrow. So they actually take off the trade a day before. So this happens all the time.
So we knew that was coming.
But yeah. When that's
how come it moves the market earlier? If it's basically like it's a programmed in. Then if there's just not enough volume there, then it just has got to close it out, even if everybody knows it's going to happen?
It's a very big position, Oliver. So you're talking, it's pretty much the only open interest at that strike price, which is that 19,725 level. It's the only open interest out there. So when you put any type of size out there, you know that a major institution like an ETF is starting to roll a position, no matter what, the market's going to kind of look at that.
Yeah, Oliver.
Okay, we know that this flow is coming. So the initial trade or that initial block hit at around 60
You didn't know that?
contracts, and that's really kind of what initiated that initial sell-off in the market. Now, once again, you would think that dealers selling out of these long calls, they would actually then kind of buy back into the market and kind of push the markets up. But I think that they're probably going to have to hedge a little bit more aggressively as this call is being rolled out, which probably would leave them net short in the market, which is what I believe is the reason why we saw that disjointing happening. Now, once again, when you talk about this, when you talk about the trade flow, that initial trade kind of went out there, 63 contracts. Now what I'm seeing is pretty much they're just trading out of 1 to 5 lots throughout the remainder of the day. So they may have seen, hey, we might be causing a little bit of a stir here. Let's dial it back a little bit and try to ease into this trade a little bit more rather than doing it in 50 or 60 increment blocks.
Interesting.
Exactly.
Okay. So, all right, cool. Like the details. So then if that's done, if that was kind of a mechanical thing ahead of the expiration, then tomorrow, I guess, we get another chance. If that was something they kind of had to do calendar-wise today, then is there any other big fund or like major trader that has something committed for tomorrow?
Well, yeah, so that fund will actually put on the new cover call tomorrow.
Okay.
So that'll be another kind of interesting event. But what I believe is already happening is market makers kind of already front running the fact that they're probably going to have to hedge more on that position because that covered call was actually fairly deep into the money there. So they probably have more. They probably have more vol risk or that Vanna risk that Jem talks about. They probably have more vol risk moving out on that curve that they're probably just going to. They're selling more contracts in order to prepare for that. So tomorrow could actually be another, intraday eventful day if this once this position actually gets put back on.
Okay.
It's going to be farther out though. So understand too, when you're going out in time, when you're looking at options, it doesn't have as much of a monumental impact as something that is expiring, let's say today, or something that's expiring tomorrow. So the farther out in time, the less risk or less impact that it's going to have on positioning just because you have more time. Right?
Got it. Yep. All right. Cool. Looking at the chart in the short term for S&Ps, shifting back to SPX for a sec. Hovering, flatlining, an okay situation after the distance we've traveled the last couple weeks?
Yeah, I mean, the market's it's not too bad here today. Once again, if the sell-off is something that's more mechanical rather than a fear of growth or
Sure.
change in Fed policy, it would be a little bit more concerning here. Look, 58.50 I think is the key area for us right now. We're a little bit below it. If we do continue to fail below, I would say 58.30 would be your next area of support for the market for today's session. If not, we'll go to 5800. But I wouldn't be too concerned about us going into the close here. Now, Netflix could be another thing to keep on the radar, but I think overall we're in a good market. Yes, we might be flat on the session, we might go negative here on the session, but we're still keeping that uptrend. We actually have another chart too, a little bit more of an intraday chart, Oliver, that I do find a little bit interesting. If I can highlight that real quick, because I know that we took some time on that one position there. If you kind of look at this, we actually had this upward trend that we had yesterday, this channel line that was kind of intact. I just extended that. We broke out to the upside here, we tested resistance at around 58.75, came back, pulled back into that range, kind of flagged out, and then that's where we kind of had this break to the downside. So 58.45 technically is where you want to be able to hold. I say 58.40, give or take, there's some gamma there, but you want to be able to hold that. If not, then that's where we could have this flush to the downside. So this is setting up technically as kind of a little bit more bearish than bullish, but we're still keeping the upward trend intact for now. We just have to keep that for the next 22 minutes.
Okay. So as long as we don't break down, we get another shot at it tomorrow. And there's really not much on the calendar. So it seems like even though it's like disappointing because we had these great numbers from a really important company, when you had good data, it certainly could have been worse. The fact that we're not really breaking down and we're not going to apply any more selling pressure still seems like the onus is on bears to prove that they've got some role to play here. I mean, it seems like bulls are for the most part still in control.
Oh yeah, for sure. I mean, if you're looking at, once again, we go back to the breadth of the market. I mean, it only takes a couple of things to really try to keep a market intact. You need to have liquidity, which liquidity continues to rise for now. That's a healthy sign for the bulls. You have broad market participation. That's a healthy sign. You have the Russell trying to attempt a breakout. Let's see if that's going to actually go through with it. That's a good sign. So until you actually have maybe some liquidity dry up, or if you have bad economic data kind of hitting the wires, I don't see bears really having a lot to hold their hold footing on right now. This is the liquidity chart from the CME. This is showing the liquidity for the E-mini S&P futures, which is the gauge that I like to look at when it comes to looking at depth of market, and it continues to expand to the upside. Now, are we hitting a near-term peak for that? Maybe, maybe not. No one can forecast it, but the dynamics that we have, or the ingredients for a sustained bull market, is still intact. You need to have something that actually fails. Lack of liquidity, bad economic data, bad report when it comes to a major company like an NVIDIA or Microsoft. Right now, market's not pricing that in.
That looks like a pretty good chart for liquidity. It seems like things are functioning pretty smoothly here, so not a lot of strain. Appreciate it, Kevin. Thank you, sir. Let's talk some healthcare when we come back. Pretty big drop in a lot of the insurers and healthcare stocks. We've also got Netflix coming out, so there's something fun for us this afternoon. We'll be right back.
Okay. More minutes. Okay.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Let's do some trading. Let's talk some action with Mr. Scott Bauer, CEO of Prosper Trading Academy. 18 minutes till the bell here. We're going to talk some commodities as we usually do, Scott, but let's do a little trip back into the time machine because you kind of nailed it with the TSM trade yesterday. Tell me how you handled that pop.
You know what? I sold it all out in the opening of the market today, and it went a little bit higher. The stock did. The spread went a little bit higher, but after getting 250% return or so for a trade that was on for less than a day, you know what? It hit my target. It exceeded my target, and I was out. Going back in time, though, looking at this particular setup, Oliver, and I do that with winners, do it with losers, just so you can learn from it. I really felt, looking at the technicals, like this thing was going to break out to new highs. It had stalled for a while there. And given what the market was pricing in with the expected move, that's why I chose the strikes that I did. And, fortunately, they came out with some really good guidance here. And, my whole belief in that was that they were going to say that the ASML, debacle earlier in the week wasn't really going to inhibit them. So it was a great setup. It was a great trade. And we're out.
Yeah, kudos. And you also were right to put it on the specific stock and not try to play like a secondary impact on. I mean, NVIDIA had a nice day. Chips okay, but the market kind of struggled. What do you think about the lack of knock-on effect for the broad market here?
Yeah, what Kevin said was really interesting as well. And, I think we're in kind of a complacency market right now. I was surprised that we didn't see the follow-through because of Taiwan Semi in some of the other chip stocks. Yeah, I know NVIDIA may do all-time highs. I would have thought that would have counted for, the NASDAQ really holding those gains today. So I was a little bit surprised, but I'm not all too worried.
Okay. All right, looking elsewhere today, we got a little bit of a fade in some of the strong points from yesterday. BTC slowing down a little bit. Gold kind of muted. Overall, the move in yields, the sell-off in bonds kind of seems like the highlight. What'd you make of some of the macro action, Scott?
Yeah.
Oh, for sure. And, I don't like seeing these big intraday moves. To see the 10-year going up 10 basis points in one day, that is unbelievable. And yes, it's on the heels of the retail sales report that came out this morning is showing that, the consumer is still pretty strong here. And, the weekly employment numbers, they were lower than expected, but that didn't, to me, really play into the fact that we should have seen that 10-year rise as fast as it did. So that's really one of the reasons why you're seeing Bitcoin take the rest and gold. And I don't want to see that volatility continue. And we have seen that excess volatility in the treasury market and not so much in the equity markets.
The thing about gold, at least, is small moves at this level still equate to highs. I mean, it's like this thing is unbeatable. I guess the gold bugs just get to run victory laps on all of us.
We'll see what happens after the election, quite frankly, and if any of the overhanging risk, if you will, to the market, if that subsides a little bit. That's only, 2-3 weeks away. But that chart on gold still is very, very bullish. And like you and I have discussed for quite a while now, I've been a buyer on any dip. I don't want to buy into a rally, but it's been certainly the course to take, buying on any dip.
Yeah. It's one of the most reliable charts out there right now.
It sure is.
Back to the coin for a sec. We kind of tried to get out of that channel to the downside. Now we're kind of hovering on it. And what are the chances it uses that as a springboard?
I think it's actually healthy that, we're kind of hovering now, and just because, we're seeing rates really spike up here, that we're not seeing a big pullback. I think that is really good for Bitcoin here. Let's see what happens again with the election, because that, to me, there could be some of that built in depending on who wins here, and what the perception is, friendly or not friendly to cryptocurrency. So I'd like to see for the bulls here, moderate a little bit. Maybe we pull back a little. I don't want to see us break 65, because that would mean to me that this bullish trend is probably over.
Okay, a good analysis. Thanks, Scott. Nice trade on TSM.
Thank you, Alan.
Absolutely. Coming up, we got a good little panel. We also got a developing story on the healthcare side. Jenny Horn standing by with the downside of the market today. Day 2 was UNH yesterday, and more today, Jenny.
Yeah, it's not a good time to be in the health insurance business. I think we're seeing that very clearly this week with an overwhelming amount of really news showing us that right now a lot of these companies are getting squeezed, which is sending them basically one by one into these sell-offs. But Elevance Health reported paying out around 89.5% of premiums to cover medical care costs in the third quarter, slightly higher than estimates, and it was a pretty big miss on that very closely watched metric, which is otherwise known as their medical loss ratio, which then sent shares obviously tumbling. We've actually come off of session lows by about 3% here, but still, Elevance did blame this poor performance on its Medicaid plans, which it operates on behalf of state governments, did continuously gain federal help, but they said that these challenges were unprecedented. So this echoes the broader problem facing the entire managed healthcare space, and that's that patients are using more and more medical services than companies had projected, which is squeezing their profits. United Health was also one that reported a medical loss ratio that missed expectations, sparking also a small sell-off. So if you look at right now on a week-to-date basis, the best and worst of them, I mean, this is pretty much as bad as things get. And I was actually looking at some of the worst performers over the month. I know we're only 13 trading days into this month, but so far, it's solar is the worst, and it's healthcare. I mean, it's Moderna, Humana, Centene, all names that are seeing pretty substantial losses on a month-to-date basis and week-to-date basis. So Element's not one we frequently look at, but it's one of the steepest declines today, and definitely a huge headline saying that, I mean, anytime you see this basically not planned or not projected, this was not priced in, I think you see some reason for concern.
Yeah, rough couple now weeks, almost like a month and a half for the healthcare trade. Good time for insurers of all other forms, as we talked about at the top of the show, just not the health insurers. All right, thanks for that. Appreciate it, Jenny. Still down 12%. Pretty rough session here for that group. We'll get our big picture discussion next.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Time for big picture discussion as we head into the last day of the week here. This was the one with all the action. Joining us to assess the moves, Lizanne Saunders and Nate Peterson. Lizanne's the Chief Investment Strategist, and Nate's the Director of Derivatives Analysis, the Schwab Center for Financial Research. Afternoon, guys. Lizanne, welcome back. As we talked this morning, things got a little weak since our last combo, Lizanne.
Yeah, so kind of a mixed bag. It's an interesting day. If you're old school and you look at the Dow, you think, oh, big up day, but it's just because energy and financials are the only two sectors that are up. Small caps under pressure. I think that has to do with the backing back up of longer term yields. That seems to be the shorter term correlated driver of some of those small cap moves. So a little bit of a mixed day.
Nate, VIX sub 19, they'll manage to slip a little bit, the smallest amount, but we've been watching that like a hawk.
Yeah, certainly there's some election premium that's in there. I understand we're at all-time highs, so one would anticipate that the VIX would be near 52-week lows here. The futures curve is still a little bit elevated, I think, for November, December. So, it's just one of those situations where you're going to have probably 3, maybe 4, maybe a little bit more points in there around election time. So this is not uncommon to see that kind of premium in there.
Yeah. All right. Thinking about the data and our response to it, bonds sold off pretty handily. Dollar also bid, but the European rate cut also a factor there. Lizanne, on the macro side, give us the recap of the numbers, because that's basically it for this week. I mean, that was our chunk of the data this morning.
Yeah, so you had retail sales better than expected, but industrial production worse than expected. Philly Fed a little bit better, and that kind of reversed some of the weakness that we saw in other regional Feds like Empire recently, although that weakness had reversed strength. So I think there's still a lot of conflicting messages that come from some of these regional Fed surveys, but retail sales was clearly the one in the spotlight. Claims up a little bit. I think weekly claims data is going to be skewed, possibly both up and down in the next several weeks, particularly in states that were most impacted by the hurricane. So I think we have to really dig into trend type numbers between now and the jobs report, which of course comes in advance of the
Very good.
FOMC meeting. As of right now, when I checked, we had seen a little bit of a rising probability of the Fed doing nothing based on the data we have at hand. I think it was about 12% based on the CME FedWatch tool, but that's going to be a moving target between now and the November meeting.
That's a pretty fun one to explore, the possibility. You said 10%, Lizanne, of them doing nothing. Obviously, the meeting right after the election, kind of a weird little back-to-back session there, but if the data are strong, then, or I don't know, if something goes crazy, the possibility the Fed could do nothing is actually out there.
Yeah, I think it's absolutely possible. And the other thing that we had today, courtesy of the better consumption numbers, was a new update of the nowcast from GDP Now out of Atlanta Fed, and that's up to the mid-3s. And so if we were to see yet another strong jobs report, and in particular, if it came without reacceleration on the downside in the inflation data, I think you could see rising chances that the Fed does nothing. But there's just too much data between now and then to start to try to game that at this point.
Okay. And then thinking about the overall momentum for the market here, a day in which some of the recent strength in the broadening out of the trade faded a bit. We've got more sectors down than up, but it seems like we should be pretty fair in describing the trend as constructive, probably still.
Absolutely. On the broadening side, we finally got a fresh 2-year high close on the Russell 2000. If you look at the price action today, a little bit of softness. I think that has to do with higher yields. But on the Russell, we are closing off the lows. If you look at the S&P, we're closing at the lows. NVIDIA, a little bit disappointing price action that we're seeing closing near the lows of the day after notching a fresh intraday high there. So look, the broadening story is going on. Financials did a fantastic job. If you look at the EPS growth rate, we've only had about 65 companies out of the S&P 500 that have reported, but it's tracking 6%. That was, FactSet had an estimate of 4.2%. So obviously, earnings growth is going to be a key pillar for the bulls at a 22 forward PE. So keep an eye on that EPS growth rate as we get throughout the earnings season.
Okay. Confident, Nate, that earnings can do the job for us, even if, we've got some of these weird early November events stacked up. I think maybe vol can drop just by nature of the earnings trajectory.
Yeah, I don't think it's straight up melt up into a Santa Claus rally to the end of the year. I mean, just because we've been looking past bearish seasonality. We've continued to melt up to new highs. If we get a 2 to 4% either before the election or just after selling the news, that wouldn't surprise me. Otherwise, it looks really well. For the bulls, they're going to have to probably contend with the Fed being way more patient than they had previously anticipated. However, they've been doing that all year and sending stocks higher anyway.
Lizanne, close me out with a thought on earnings so far. Better than expected for the most part?
So far, but we're still early in the season. You did see estimates while we were reporting second quarter earnings get cut about in half for third quarter earnings. There's been a little bit of a move down in fourth quarter, but that's what I would pay more attention to, is not traditional metrics like the beat rate and percent by which companies beat for this quarter, but what the outlook suggests about Q4 and at least the first half of 2025.
All right, great stuff, guys. Thank you very much. Lizanne Saunders, Nate Peterson. Very good analysis on the equity side for us. Bells in less than 2 minutes, and then it's Netflix time. Tune in.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Well, that was
Market,
fast.
Ready for you, ready to go at 12 p.m. Eastern on the Schwab.
Flat day again today, so I guess it's going to be my flat week so far. So yabba dabba do. Give it what it gives me.